Yeah. So come back to uh, group 2. So already you completed your coaching of group 1, if I am not wrong. Accept IDT, no? Yeah. So coming to group 2, in group 2 there are 4 papas from papa number 9 to 12. Papa number 9 is OM and SM, 10 is corporate accounting and audit, 11 is financial management and BDA, 12 one is management accounting. So just I want to tell you a few facts about group 2. When compared to group 1, group 2 is damn easy, please believe me, or else you can open your pass percentages of last 10 attempts. Always group 2 pass criteria is more than group 1 pass percentage. Sometimes group 2 saves your group 1 also. If you prepare perfectly group 2, sometimes it helps you to clear your both the groups. So in group 1, generally paper number 5 law has huge amount of syllabus. Paper number 6 from journal to accounting standards, very huge. 7, no need to discuss again. Taxation, it consists of both direct and indirect taxation. Costing is also huge volume. But coming to group 2, syllabus is a little bit less compared to group 1 and easy also. So in group 2, out of 4 papas, papa number 9, 10, 11 as well as 12, I am going to discuss paper number 10, corporate accounting and audit. So when compared to financial accounting, this paper is little bit difficulty. Obviously difficulty. Why? Because in group 1, we just discuss only accounting, that too basic accounting. In group 2, we have to discuss company accounting as well as audit. 50 marks theory, 50 mark problematic. So not that much easy. But please believe me, I am going to create wonders in this paper number 10. I think majority of you already know this fact. A few members who followed our recent marathons and war room sessions, they performed incredibly. So I'm getting still messages from some students. They're getting 70s, 80s. In recent exam results, that is about December 2024 results, highest score of my student is 87 out of 100. So all India Air 1 score is 90. My student score is 87. Almost more than 10 members got 70 plus. More than 20 members got 60 plus. Maybe out of my analysis or out of my experience, I don't know, even I don't know what is the reason, but definitely I can predict the paper exactly, especially in this paper number 10. Even for June 2025 examination also, day before exam, I conducted one live session called war room session. And that session, just I explained 3 questions. Exactly those 3 questions has been pasted in the question paper. 3 into 7, 21 marks. Exactly copy pasted. And I discussed a few MCQs in that session. Out of 15, 12 MCQs as it is from that session. 12 into 2, 24, 3 into 7, 21, 45 marks from that only 4 hours live session. Who followed my marathons or my regular classes, definitely they will easily crack 70 plus. Out of the entire paper, the only area I am unable to predict is only one area, one question, which is 7 marks. Still I regretted for that particular area. So the reason for why I am saying all this content is just to tell or convey my potentiality. Otherwise, maybe you are not able to focus. So please listen very carefully. I'm very much confident on this paper number 10, corporate accounting and audit. Just follow my classes as it is and just follow my materials, nothing but our BCCA materials. They are more than enough. If you follow as it is my lectures and BCCA system and BCCA exams and materials, definitely everybody in this class, including everybody who has watching these classes through recorded classes or live classes, you can easily get 70 plus, that is minimum. Every time I say 70 plus, but this time I want to increase my standard. So I increase my benchmark. This time I increase 70 to 75 is my benchmark. Because that is easy. If you open recent examination paper, every question I discuss in the question itself, in classroom itself. Out of 15, every of my student, they will answer 14 MCQs. 14 into 2, 28 marks. And almost 2 to 3 questions directly comes from our material. Again 21. I cover 21 in marathon. So what else? Whoever follows my lectures or my marathons, definitely they will get, even I'm expecting 80 plus. That is possible. The only thing, if I give my 200%, just I'm expecting 50 or 60% from your side. That is more than enough. I know how to manage it. Please, I require only 2 things. These 4 are my requirements. First of all, is it possible to get 75 in this subject? Yes, it is possible. It is possible. The requirement of this session is, first and foremost thing is, you have to maintain consistency. Consistency means you have to attend the classes regularly. Without consistency, don't expect any kind of results. Unless if it is unavoidable situation like health issue, that is okay, fine. But don't. Please maintain consistency. That's what I can say. Second one, for me, running notes is more and more and more important. That's what will help you in your revision session before exams. Number 3, don't follow any other materials, including ICMAI board material. Please ignore everything. Just blindly follow BCCA materials. At the end of batch, I am giving you MCQs and Super 50 questions. These 4 will be help you to get a 75 in my paper. From your side, I only ask these 2 things. Maintain consistency and maintain some good notebook for running notes. Okay. I think you know, in paper number 10, there are 2 subjects. One is corporate accounting. Second one is audit. This is pure problematic part. This is pure theory. In fact, syllabus is very huge. But I know how to deal with it. At the end of your syllabus or before examination, I will tell you only 10 chapters. 5 chapters from corporate accounting, 5 chapters from audit. Those 10 chapters are enough to get 70 or 70 plus. But while giving coaching, for me, each and every chapter is same. Each and every chapter is important. So if you observe the syllabus, in corporate accounting, we have this much of syllabus. Company accounts introduction and basics, issue of shares, rights issue, bonus issue, sweat equity, buyback, forfeiture of shares, preference shares, debentures, redemption of debentures, underwriting, cash flow, schedule 3, banking, electricity, insurance, ESOP, Ind AS 1, 2, 19, 33, 37. I think we read some accounting standards in our group 1. Correct? No? Here there will be Ind AS only, no more accounting standards. That too only we have 5 Ind AS. If you remember, already I told this fact. In Group 1 accounting standards, the weightage is 21 to 23 marks, but I can't directly tell only follow these standards. But in these 5 standards, I will predict they will, how can I say, where can the examiner pick the question? You can check my video as well. In 10th of June, I told only follow Ind AS 33. They have asked a question from Ind AS 33 only for 7 marks. Weightage is 9 marks only from the standards. 1 7 plus 1 2. So for 7, I told only follow this standard. They have asked only question from that chapter. So I told all my students to ignore Ind AS 1 2 37. Majority 99%, they will ask question from 33, 1% 19. Exactly same thing happened. In previous attempt, I told them follow Ind AS 19, 90% chances are there. Exactly what happened in that attempt. So that is strength of my analysis and my knowledge. So please blindly follow BCCA, and while you are taking coaching for Group 1, I think your mindset is just like come and go. But this time you have to be very, very serious. Why? Because you are going to write your exams on coming December. Already this is June. So I'm starting this batch on June 23rd. Probably I'm going to close this batch on September 10th or before September 10th. My last date of coaching would be 10th of September or else before 10th of September. Definitely I'll give you September 20 days, October full month and November full month. Almost 2 to 2.5 months you will have for preparation. That would be either Group 2 or Group 1 or both, whatever it is. Again, same in auditing, we have 11 chapters. So actually these all are separate chapters, but still okay. That means if you consider all as a one chapter also, 18 plus 11, 29 chapters for 100 marks. These 11 chapters are theoretical chapters, these 18 are problematic part. If you bifurcate into separate chapters, it will be around 33 chapters. But don't worry, definitely I will teach this subject as simple as possible. Maybe while discussing you may feel little bit of discomfort in some chapters like these 2 chapters, but still no problem. I know how to deal with it. At the end of your batch, definitely you will feel comfortable. And I'm damn confident you will get a very good score in paper number 10. Already I told you in your Group 1, I think some people are new people over here, to clear any of your group or your entire CMI inter. So definitely, if you are writing only for Group 2, out of these 4 papers, definitely you should get good score in at least 2 subjects. Otherwise, it is not possible to clear your CMI inter. For example, you are writing only Group 2. In paper number 9, you got 40. Pass or fail? Pass only. In paper 10, 40. Pass or fail? Pass. 11, 40, 12, 40. 40 into 4, 160 only. It's not possible. So definitely you should get very good amount of score in at least 2 subjects. So please select 2 subjects out of these 4. Give more priority or more importance. Out of these 4, definitely if ask me my suggestion, I will select paper number 10 as one subject because that is my subject. Of course, some selfish is there, no? But still, if you check your seniors' results, that's what proved. I don't know what about people are writing other than BCCA, but if you observe at least your seniors' results, they got very good amount of score in our paper. Maybe it is not possible for outsiders, that is secondary thing. So please select paper number 10 as one subject. one more subject you have to select. So that is, I can't tell. If I say paper number 9, these two people will come to beat me. Same vice versa. If I say OM and SM, so remaining Ravi sir and Shiva sir, both are senior persons, they'll come to me. So I don't want to take any kind of risk. So that is the reason I select only one subject. That is my subject, paper number 10, corporate accounting and audit. You have to select one out of 3. Okay, that is your responsibility, your duty. Do whatever you want. So this is one subject. So out of those two, again, we can't allocate more time to 2 subjects. Definitely, out of those 2 also, you should get 75 or 70 plus in one subject. In second subject, you should get 60 plus. Remaining to 50 or 55, 40 enough. So out of these 2, again, corporate accounting only, that 70 plus subject. Remaining whatever selected, that is for second, 60 plus. Don't ask me what it is. Yeah. So total, my intention, my avedana to get to clear your CMI inter group 2 or else both groups, definitely you have no other option. You should get 70 plus in corporate accounting and audit. Without getting 70 plus in this paper, definitely I can say sorry, I can't say that word, but there will be negative result, obviously. Do you know sometimes what happened? Only because of paper number 10, they cleared their group 1 and group 2, both the groups. I have seen that kind of results in December 2024 examination results. They got 76 in paper number 10. Because of that 76, they cleared both the groups. Okay, no? So please give more importance or priority to this paper from day 1 itself. You are almost close to your exams. Your exams is on first week of December. We are in last week of June. July, August, September, October, November. Out of these 4 months, I will take 2 months for coaching. You will have 2 months for preparation. So even the people who are listening these classes through recorded or online classes, for them also same thing applicable. Because we are going to write our exams on coming December only. Okay, no? So first of all, coming to paper pattern, you know already because you cleared your group 1. So you know 15 MCQs, 15 into 2, 30, 5 into 40, 70. Yeah. You tell me, normally, guess how many marks for MCQs? 30 marks, no? We have 2 subjects. What are the 2 subjects? Corporate accounting and guess by using your just common sense if you have, otherwise no problem. Yeah, tell me, out of 30 marks MCQs, how many marks they can test from corporate accounting? How many from auditing? Just common sense and guess. Weightage 50 marks, 50 marks, 50-50. So out of 15 MCQs, they ask 5 MCQs from corporate accounting, 10 MCQs from audit. Generally, majority of the students, they will ignore audit entirely. So how can they clear their paper? 20 marks from only MCQs. Even though you can ignore choice in descriptive part, how can he leave choice in MCQ part? So the summary is, both the subjects are equally important. Some people are very much confident in problematic, but they ignore theory. Please don't do that. Some people vice versa, they are perfect in theory, they ignore problematic. Don't do that. For us, each and every subject, both the subjects are equally important. Sir, I'm not good at theoretical part. No, don't worry, I'm here, no, I will help you out. I will give you at least some chapters. You can follow it, you will get your score whatever you required. So believe me, audit will be very, very easy. Majority, this 10 MCQs, they will be asked from our classroom only. I know their boundaries. They will ask question from their boundaries only. That's already we cover in our regular classes. Okay, no? Yeah. Just I want to open the recent examination paper. I think I have it. Yeah. You can see here, out of 15 MCQs, first question, this already I covered in at least I covered the same MCQ in classroom at least 20 times. Plus in my marathon, plus in my war room also. Every one of my student I'll answer this question. Question number 2. This is I covered, this question is from schedule 3 chapter. Question number 3, even you can answer it if you are from CAT. How many of you comes from CAT? You can answer it, no? You have cash flow statement, right? It begins with operating, investing, financing. Operating is answer. 2 marks. This is from insurance companies. This is in law as well as in our corporate accounting. You can answer this question. This is, I covered this question at least 100 times in my classroom. Everybody can answer without verifying, even without taking any 1 second. This is also very, very expected area. This is very basic question. This is I predicted for every attempt. This is I repeated at least 200 times in classroom. This is basic question. If you observe, all questions are single line MCQs. If you are strong in concept, you can answer it. This is also, I asked this question in our revision exams number 1. This is frequently asked question. This is very easy question, everybody answer it. If you observe, out of 15 MCQs, trust me, minimum 14 MCQs are damn easy. So you are getting 28 out of 30. If who followed all my classes seriously, they will get 30 out of 30. If you open financial accounting paper, you can't find out this kind of MCQs. I will open, just you can compare with these two. Have a look. How paper number 6 MCQs are here. You can see, is it MCQ? Is it MCQ? It's like a problem. You need at least 3-4 minutes to solve it. Still there is no guarantee for correct answer. What is this nonsense? They have asked partnership 7-mark question as an MCQ. How student can answer it? If you come to paper number 10, see how beautiful it is. We can just answer like this. That's it. Every time paper will be like this. The problem is, generally students ignore all these areas for MCQs. They don't know from where examiner will pick the questions. For you, don't worry, I'm here. Even for you also, definitely I'm giving guarantee as on today, record the time and date, 23rd of June, 2:51 p.m. So definitely I can guess at least 10 MCQs out of 15 as it is. Remaining 5, because I am not a paper setter, no, I can't. Okay. In problematic part, question number 6, 7, 8 are audit. 7 plus 7, 14. Here 14, 28. Here 14. How much? 42, no? Yeah. 42 marks theory plus 10 marks problematic. 10 kaadu 20 kada? 20. So 62 marks from audit. How can you ignore audit? No. So unlike your group 1 accounting standards, here we have only 5 Indian accounting standards. In AS 1, 2, 10, 19, 33, 37, 6 standards then. Out of 6 standards, they will ask only 9 marks. That too, 1 7 mark plus 1 MCQ. For 7 marks, for December 2024, they have asked this 19. For recent, your June, your seniors, they have asked in days 33. For you, I am expecting again 33. I mean, for December exams, 95% chances are from index 33. If the examination paper setter is a typical minded like me, they may test index 19, 5% chances are there. I'm damn confident they can't ask from index 1, 2, 10, 37. Still, you have to at least listen the classes for MCQ, not for 7 marks. That means if you prepare only 2 standards, you will get 7 marks. It will not take more than 2 to 3 hours to prepare all the content. Okay. Similarly, in each and every attempt, you can check all my videos. I'll always say there is a concept in audit, NFRA or IFSC. NFRA means National Financial Reporting Authority. So out of these topics, they'll test one question. In each and every attempt, I'm regularly saying this. Same thing happened. They've asked from NFRA for 7 marks. There are 2 chapters. One is cost audit. Second one is secretarial audit. CMA audit and CS audit. Out of these 2, we can predict one question. That's what happened. Cost audit. So only thing I couldn't predict is 7A. Concept called CARO. This is beyond my expectation. Apart from this question, every question is expected except order. I think some of the students are generally blindly following 2A, 2B, 3A, 3B, 4A, 4B. 2A, question from this chapter, 2B, this chapter. Please don't follow it for accounting and corporate accounting. For remaining subjects, it is okay. They are not changing it. If you observe financial accounting paper for recent exam, they changed the entire pattern. Generally, we expect 2A from BRS depreciation, they have asked. 3A or 3B, we expected from higher purchase, they asked NPO. Every order is changed. Generally, personally, I don't encourage such 2A, 2B, 3A, 3B concept. But for other subjects, it is, they are following same pattern. But for financial accounting, they changed the pattern. For me, weightage is important. Like, India is 9 marks weightage. That is enough for me. I can get 7 marks question from India. If they ask 2A or 3A, 7A, that is irrelevant for me. Number is irrelevant because I know the concept, I know the problematic, I know how to solve it, I know how to get 7 marks. Then why are you bothering about whether it is 2A or 3A or 3B? Are you paper setting or else are you able to write the answer? Why are you looking about whether it is 2A or 2B or 3A or 3B? Please don't focus on question number. Focus on concept and focus on solution. If you are confident about these two standards, you will get 7 marks. This time they have tested this question as where it is. Question number 5A. They may ask next time as a 4A. What is the problem? Change the number only, no? But some students are still suffering from this kind of situation. I don't know why. For remaining subjects, it is possible. You can follow it. They are not changing that particular system. But in recent exam, they have changed entire pattern for financial accounting. I'm expecting for my subject also they can change the pattern. But I don't bother about it. Even I don't consider it. Because for me, weightage is important. If I follow Ind AS, I will get 9 marks. That is okay. If they give 2A as 7 marks or 4A, that is irrelevant for me. Why should I bother about question number? Okay, no? So, I will show you my material as well. This question exactly copy, cut, copy, paste from my material. I will show you. Paper number 10, right? Yeah, already same base. You can check the question number 4. Alpha, what is that? Alpha Company Limited, no? Just roughly observe that figures, numbers. Okay? Now check. Same thing, no? What is the difference? Including numbers, names, full stop and commas. You can easily answer this question. Similar model, just numbers changed, 14 marks question covered in our material 3A. Question number 4, have a look. Just observe that particular proforma. What is the answer? What is the question format? Numbers, all those things. I will open my book. Have a look. There 70 lakh, 60 lakh. In my book 35, 30. What happened? Into 2. 40, 50. Same percentage 40, 50. 15, 10, I think they will double it if I am not wrong. Correct. 30, 20. 10, 8. What will happen? Into 2, into 2. 20, 16. Compute necessary provisions. That's what they are also asking. For 7 marks, not in your weekend exam. In main exam. I can say this is also copy pasted from my material. My means BCCA material. So you can say that is study material question, sir. Everybody can claim that question. That I agree with that. I agree with you. But now see, there is some lengthy questions in this chapter. Yeah. You have to prepare all these balance sheet, all these nonsense in banking companies. Every batch I say, ignore these problems, all these lengthy problems. But every institute other than BCCA, other than me, everybody will give more importance to this particular problems. But if you ask me, if you use your common sense, how can he give for this question for 7 marks? If they want to pick, they have to give for 14 marks. They can't give for 7 marks. So I simply ignore all these questions. I'll explain in the classroom itself, but for examination, that is not required. Look at 4B. I think this is exactly copy pasted if I am not wrong. I have seen this question. Prakash Insurance, copy pasted. I will show you. Where is Prakash? Question number 6, I think. Additional question. Huh? Life insurance company of Prakash. Insurance, yeah. You have a look. Same name, no? Prakash, 34 lakh. Here, 34 lakh. Net liability, 28 lakh 80,000. Interim bonus, 40K. And carry forward, 110. Everything is same. Show balance sheet, net profit, distribution of profit. Exactly. So we have seen 3 questions, 3 sevens. Correct, na? 4A17, 2A7, now 4B7, 21 marks. This is from Ind AS. I told you already. Ind AS 33. Same question, just slightly change in numbers I have in my material. 7 marks. I will show you the proof as well. Just to give you confidence, nothing more than that. Ind AS 33. What is the question? Net profit, number of equity shares, convertible debentures, I think this is the question. Huh? No, convertible debentures. Yeah, it is like question number 5, just change in numbers. I can't take credit for this question, but you can answer it. Just slight modification in numbers. 5B, what is this? Cash flow statement. 6, from 6 to 8, it is audit. So even though if you have zero knowledge on paper number 10, corporate accounting and audit, so you can answer easily if you follow our material. So to get success in professional courses, especially in CMA and CA, including CS, material plays major role. For example, if you are listening my classes sincerely, very honestly, after 10 days or after 20 days, everything will be evaporated. Nothing will be in your mind. You will have only your notebook and your material. While you are opening these 2 books, all these things will be recollected. So that is the reason, please give more importance to materials. Coming to materials, so for each and every subject of group 2, you will have 2 books. One is concept book, second one is question bank. But this time we are working more on materials. So we are giving updated material for your batch. Normally, your concept book is like printed format, no? But for this time, we will not give that book. So whatever I am writing here, all this content will be printed in a book in the same format. Whatever faculty has written on the screen, that will be in your hand. But the problem is, I will not give this book as on today or tomorrow. You will get this question bank. You will get this question bank at end of this month or else first week of next month. Everybody will get question bank. Question bank means it consists of questions and answers. But I'm not going to give concept book right now. I will give you this book at the end of your batch. You have to write everything in your notebook. End of the batch I will give in printed format. Otherwise, I know you will not write anything. Because same thing in your notes, in your book as well, no? That is the reason. For online people, I'll try to give as soon as possible. But for face-to-face people, I will give my material at the end of this batch. But you will get question bank as soon as possible. So in question bank also, we are working on it. There are some questions which are not required. I'm deleting those questions. Recent examinations questions I have to include. And I have to change main to addition, addition to main. Some shifting is there. I am working on it. And I have to consider MTPs, RTPs, PTPs. I'm considering. So definitely our workbook will be more than enough. Coming to concept book, it will be the next level material. But the problem is I'm not going to give you right now. I'll give you at the end of your batch. Nothing but once your coaching is completed for my subject. The thing is, you have to maintain a running notes. And you know, I'll give more importance to notebook. Because that running notes will tell you how seriously you are preparing. Your running notes will help you out, especially after completion of your preparation or coaching in your revision sessions. Definitely it will help you out a lot. But anyway, I will give my book at the end of this batch. But don't rely on my book. Please try to write everything. Sometimes I may say, not required, please don't. For example, the auditing theory is there. Don't write. I will give you the book. Some concept is there for corporate accounting. You have to write it. Why? Because same thing they may test an MCQ or else some question. I will tell you wherever it is required, where else it is not required. Even though if you got that material, still maintain running notes. Running notes is your own brand, your own asset. If you received my concept book or my work, that is not yours, that is mine, or else my institutes, my teams. That is not yours. So please maintain running notes. Randomly on each and every Saturday, I will check randomly notebooks. This is with respect to material part. Apart from these two, at the end of, before your exams, I will give you super 50 questions. Nothing but out of entire total book, I will select 50 questions just for revision purpose only. And I will give you one more material, which is MCQ material. That is also after completion of our coaching. So from my side, I'm ready to give you all the stuff, whatever required for getting a good amount of score in our subject. By the way, what is our subject name? OM and SM? No. Corporate accounting and audit. Yeah, thank God. So from tomorrow onwards, I'm going to start all my basics. And already I told you, I think for every subject or every chapter, for every chapter, 20 minutes is important. First 20 minutes. Every subject, first 10 days are very, very important. From tomorrow onwards, I'm going to start all the basics. Like why this subject? First of all, why accounts? Why company accounts? What is company? What is share? What is share market? How share price will increase? How it will decrease? How to purchase a share? How to sell that share? How the stock market system is? What is SEBI? What is NSE? What is ED? All those things I will cover from tomorrow onwards. So I think if you observe in this chart, I have given categories as well: A category, B category, C category. Already I told you this particular sheet is specifically useful to you after completion of coaching. Please don't this category for listening classes. For example, if I am discussing a chapter called ESOP, C category not required అని చెప్పి ఇంట్లో పడుకోవద్దు. అర్థమవుతుందా? సో దీస్ categories only for after completion of your coaching. Sometimes it's like, for example, Ind AS 37, it is B category. Maybe next time they ask for 7 marks from this chapter. Who knows? For coaching, every chapter is A category only. Once your coaching is completed, then think about which is A, which is B, which is C. Are you getting my intentions? Yeah. Audit as well, same. If you observe all the 4 papas in group 2, papa number 9, 10, 11 and 12, the advantage is in group 1 we have papa number 5, business laws and ethics. Ethics is 20%. Majority is law. Papa number 6, financial accounting, 100 marks. Papa number 7, taxation, 100 marks. Papa number 8, costing, 100 marks. But in group 2, some advantage is there. Like Papa number 9, OM and SM. OM 60, SM 40 marks. 2 different subjects altogether. Papa number 10, corporate accounting and audit. 2 different subjects altogether. Papa number 11, FM and BDA. Again 2 different subjects. Only for Papa number 12, MA, no subsidiary subject. For example, if you are don't ignore. For example, if you are perfect with OM, you have skipped some chapters in strategic management, don't worry. 60 marks from OM, no? Same Papa number 10, 11. So anyways, because of 2 subjects in each Papa, they will give within the boundary one. Especially in my Papa number 10, I know what are their boundaries. If they ask any difficulty question, definitely that should be comes from our classroom session only. Out of my recent examination analysis also, I found one thing. I have to increase my boundaries little bit. Just like Caro concept. And some topics are there which are irrelevant. I will remove all those waste topics. The summary of this session is just blindly follow team BCCA. Definitely you can achieve. The problem is people from North India, from Delhi, Maharashtra, Madhya Pradesh. So the students are generally, for CMA final, we have very student base, very high base in North. Same thing now it is converted for inter as well. Now for CMA inter also, so many students are purchasing our classes. That means you have to understand how strong our team, how strong our system is. So many people from North India are believing us, even we don't have face-to-face sessions. You all are in front of us. Then tell me, why can't we create wonders? Why can't we always get 70 or 75 or 60? Why can't we try for all India rank? What's wrong in it? If you get 80 in each subject, what happened? 80 into 80, sorry, 80 into 8, 560, no? 640, sorry, 640. Why can't we expect? It is possible. Sir, all India number 1 rank is not possible. Try for 50th rank at least. It is possible, no? So for getting good score or else rank, we are giving whatever the required material or else content or else teaching. The only thing is your participation and your hard work. Okay, no? So from tomorrow onwards, all of you, actually I have to tell one thing. My requirements is one notebook, better rule. Number 2, should have calculator, better own. What happened? Some people, 2 and 3 people, they'll use the same calculator on hire purchase system or lease system. Don't do that. Number 3, one more notebook for practice. Better only for one subject. It is not a all-in-one. Two pens. Better different colors and one. Yeah. These 4 are required things. I'll from my side I have to give question bank, nothing but workbook. I'm working on it. I will give as soon as possible. Concept book, already I told you it is not possible to give right now. I will give you in September, whenever your batch completed. Or else I will plan, but don't expect concept book right now. For students who have seen these lectures on online or else recorded lectures, for them definitely I will give in August or July ending. Yeah. This is the total content. So actually today is first day of this session. So do you all have notebooks? No? If you have notebooks, please write only index of corporate accounting. If you don't have notebooks, please borrow at least one paper. Kavya ji, come on. What are you looking for? Don't write all those things, categories, all those things. Soumya, where is she? Don't write all those things. Write only chapter names. I want to. Is it okay? I think so. I can't say anything. You know the reason. Please wait for 10 days. Make it fast. Then make it slow as much as possible. Teju Uchara. Where is Pranati? Hi. I think one more person is there, no? Kirti. Where is she? Hospital. On the. Manishi, are you able to understood? No. Don't write categories, all those things. Just give chapter names. Arvind, you write page numbers also. Yeah. Some student is there, I think, in Telugu batch. She will write page numbers also without starting chapters. I think you only. Yeah. Is it done? Okay. So thank you. We'll meet tomorrow at same time, same room, same session. Bye. So I think some new people are there. Please raise your hand. Who are the newcomers? Cooperate. Wait for 8 days. 7 days more. Okay, done. Yeah. From this side, 2, 5, 6. Fine. Yeah. So in yesterday's session, just we had a discussion of what is the weightage of entire syllabus, and I told you how our paper is. We had corporate accounting and audit and all those things. From today onwards, directly I am jumping into the syllabus. I think almost all people are here. So no need to wait for anyone. So I will start the syllabus from today onwards. Your ending date of your syllabus is probably my syllabus is September 6th or 7th maximum. If possible, earlier that. Yeah. Come on. So in A category chapters, we have, in my perspective, only 4 chapters. In first chapter, again there are 3 chapters: banking companies, electricity companies, and insurance companies. From these 3 chapters, we will get 16 marks. So in each and every attempt, they are asking 16 marks from these 3 chapters. These 3 chapters are looks alike. That is the reason we call this chapters as schedule-based chapters. Every time they are asking 16 marks from these 3 chapters. Very, very easy chapters. That too, they are asking like 2 sevens plus 1 MCQ. 99.99%. Those 2 questions and MCQ will comes from our discussion only. They will not even touch any other material. After that, second priority, Indian accounting standards. You know, India is 9 marks. Then schedule 3, 16 marks. Then cash flow statement 7 to 9, total 48 to 50. You know, corporate accounting is for 50 marks only. So I am giving you only 4 chapters for 50 marks. Enough. So generally, for all batches, all previous batches, I starts with company introduction, basics, issue of shares, all these concepts. But for the first time, I'm starting with accounting for banking companies. This time I'll start with weightage based. I will complete first all A category chapters. Then I will shift to B category, then I will shift to C category. Okay. So, not even single class will be repeated. Of course, the first 10 classes will be available on YouTube. After that, you can't even find out any classes except if you are an online or recorded student. So all face-to-face students, so from today onwards, we are going to start our session. So please pay more attention. In previous class already I told you very clearly, to clear your group 2 or both groups, you should get a minimum 70 plus in this paper. So of course, your efforts are needed to get 70 or 80 in this paper. Definitely I will do whatever I have to do and I want to do. Please just pay more attention. If you have any doubts during classes or after the classes, definitely feel free to ask me. I'm always open for doubts. Okay. So without any delay, I'll start this session. Before that, if you need, copy this chart, otherwise copy. Good evening. How are you, Katappa? Is there any absent still from Telugu batch? Who are they? Spandana is there, no? Then who else? Bharati, yeah, sleeping partner. In our batch, English batch, Banu. Who is Banu? Bhavana. Okay, okay, okay. What happened? Customs duty, no? On the way. Okay. Soumya, are you ready to sleep? Yeah, you can. Please copy as soon as possible. I'm very much excited to start accounting for banking companies. She is from this batch, huh? Last person. Okay. Yeah. Completed. Yeah. Come on. All of you listen very, very carefully. Pay more attention because this is 16 marks chapter. 16 marks is not only from banking companies, it might be from banking, electricity, insurance. Out of 3, you will get 2 7 marks and 1 MCQ. So for us, all 3 chapters are equally important. Once your syllabus is completed, I will tell you out of these 3, which chapter is more important in examination point of view. As of now, all those 3 chapters are important to us. Okay? Yeah. Come on. Listen. Just listen. So, accounting for banking companies. This is our first chapter in our total CM Intro Group 2. So, for some time, let's ignore the chapter name. Just focus on screen. I think majority of the banks already you are aware of these banks. Like Axis Bank, State Bank of India, S Bank, Canara Bank, Kotak Mahindra, ICICI, Bank of India, HDFC, IDBI, IndusLand, Union Bank. What is this? Indian Overseas Bank and IDBI, Bank of Baroda. Correct, no? Yeah. So normally, what is journal entry for purchase of goods? Purchases account debit to cash account. What is journal entry for purchase of asset? Asset account debit to cash account. What is journal entry for cash deposited into bank? Correct. Now think in bank point of view. So what could be entry in bank books? That's what we are going to learn in this chapter. So we are preparing books of bank, not normal business entity. Normally, for normal companies, we have Companies Act 2013. For Partnership Act 1932. But for banking, there is separate act, Banking Regulation Act. So that is the reason, first of all, out of these all banks, there is some classification is there. This classification is not important for exam point of view. Just I picked only, this is in part of study material. Still up to the recent attempt, they have not tested MCQ from this area. But if I am paper setter, definitely I will ask MCQ from this area. Because every student will ignore this area. This is the chance area for MCQ. First let us discuss about concept, then we'll discuss about MCQ. See, out of total Indian banks, they divided into 2 categories. Scheduled banks, non-scheduled banks. Scheduled banks means banks which are under the control of Reserve Bank of India. Again, under scheduled bank, 2 categories: commercial banks, cooperative banks. I think you know the cooperative banks, especially in villages and in some part of cities also. You can observe somewhere cooperative bank, district cooperative bank, AP cooperative bank or TS cooperative bank. So commercial banks again four types: public sector, private sector, foreign banks, regional rural banks. Again cooperative banks two types: urban cooperative, state cooperative, nothing but rural cooperative. Again public, nationalized bank and SBI, State Bank of India Group. This is just a classification. There is no concept in it. If examiner want to twist the question paper or they want to give difficult MCQs, they can choose question from this area, because everybody will ignore this area. Already I told you, this time our material will be the next level material. So I incorporated all areas wherever is important or else wherever there is a chance for MCQs. This is the one of the chance MCQ area. How to remember it, sir? Not a big deal. First of all, banks are two types: scheduled banks, non-scheduled. Under this, no separate classification. Ignore about it. If you remember schedule, you can automatically write a non-scheduled banks. No, scheduled again two types. Banks generally two types. Some people will do business for profit oriented. They are called commercial. Some people charitable, nothing but cooperative banks. Again commercial, we can observe public banks are there, private banks are there, foreign banks are there, some banks only for regional rural level. Coming to cooperative, urban banks, state banks. State means rural level banks. Again public sector, nationalized bank, State Bank of India Group. That's it. Nothing concept is here. Just you have to remember the entire what you call classification. First of all, tell me what is the main classification of banks? Scheduled banks, non-scheduled bank. Again under non-scheduled, is there any separate category? No classification at all. Coming to scheduled banks, again two categories. What are those? Commercial banks, cooperative bank. Again commercial divided into four. What are those four? Public, private, foreign, regional, rural. Here 2 into 2, 4. Again this cooperative divided into two categories: urban, state, nothing but rural. Again this public sector divided into two types: national banks, State Bank of India, SBI Group. That's it. So till now they have not tested MCQ from this area, but still I'm expecting. Even for recent June 25 examination they have expected, but they have asked a very easy question. Very easy question. Okay? Yeah. I will give you time at the end of class. So in this particular chapter, there is only 6 concepts. If the question comes in your examination, definitely that question should be out of these 6 topics. That is my guarantee, my promise. Some more topic is there in your syllabus. That is nothing but financial statements of banking company. As of now, they are not asking, not at all relevant for us. I'm damn confident that question comes from only the 6 topics. We will discuss each and every concept. Once concept is completed, we will solve 1 or 2 problems on it. Like concept 1, 2, 3, 4, 5, 6. Once the 6 topics completed, automatically your chapter is also completed. Banking company means from today onwards, only the 6 topics. Topic number 1, rebate on bill discounted. Topic number 2, secured loans versus unsecured loans. Topic number 3, RBI prudential norms. Topic number 4, income recognition. Topic number 5, DIC GCN. Recent examination question from this area. Section 17, this is MCQ area. Only these 6 topics. In fact, section number 17 is a MCQ area, so the question comes from only 5 topics. 5 concepts I can say. First of all, what is this? This is only they can ask for MCQ. What is that area? First of all, types of banks or classification of banks. What is the main classification? Scheduled banks, non-scheduled bank. Again under scheduled bank, 2 categories. Commercial banks, cooperative banks. Again commercial, 4 category. Public, private, foreign, rural. Again cooperative 2. Urban cooperative, state cooperative. Again under the public sector banks, nationalized bank, state bank group. That's it. Done. Coming to problematic part, we have 6 topics. Out of 6, last one is MCQ area. So what is the topic? Concept number 1 we can say rebate on bill discounted. Topic number 2, secured loan versus unsecured loan. Topic number 3, RBI prudential norms with respect to classification of assets and provisions required. Topic number 4, income recognition. Topic number 5, DICGC and ECGC. Topic number 6, section number 17. Believe me, very easy chapter. Okay. So let's begin concept number 1, rebate on bill discounted. So to explain this concept, I need your help because you are expert in this field. Do you know bills of exchange concept? Yeah, especially there is calculation of some due dates. Very interesting. We have to add 4 grace days, right? 3 only. If it is Sunday, 4 days, I think. 3 days on. Yeah, done. Then please help me. You have date of bills on your screen and term is there. Tell me due date. Kavya, tell me due date of first bill. What happened? Three months, no. You have to add 3 grace days. 1 minute. Bolo. 4. For second bill. 18. 8. Next one. Chappu. 20. Last date. August 15th is Independence Day, no? Then 4. Yeah. What happened? Fine. So, whenever it is public holiday, you have to take previous day as a due date. Yeah. So, this is important. Even our chapter also, you have to find out due dates. Okay, no? Yeah. Again, in the same chapter, do you remember bill discounting concept? Holder of the bill has 3 options. He can hold till maturity, or he can endorse the bill, or he can discount the bill. Correct, no? Yeah. So with your small brain, tell me what is answer for this question. I think group 1 is completed, if I am not wrong. At least syllabus. Yeah. At least bills of exchange completed, no? Yeah. Mr. X address a bill on Mr. Y, amount of 1 lakh rupees, or you can say draws, anything is okay. On Mr. Y, amount of 1 lakh rupees, and the same bill was discounted by Mr. X with SBI for 95,000. So here bill is discounted. What is the journal entry for bill discounting? Sorry? Bank account debit. Discount account debit. Two bills receivable. Tell me amounts, sir. Correct, no? Yeah. This entry, keep it with you. It will be important in your group 1, not here. Okay. Here, this is the requirement. For the same thing, what is the journal entry in the books of banker? Nothing but now you are accountant of SBI. Now tell me, what is entry in the books of banker? Yeah, wait. I know you are talented, but not. So, listen. Everybody say bills receivable account. No, that is not at all correct. If you write bills receivable, that is an asset. Correct? No. Bills receivable is an asset, current asset. So for bank, that is not an asset. Listen. First of all, do you know difference between savings account and current account? Savings account means it is account given to the common people like you and me. Current account means for the business people. Generally, whenever bills of exchange is there, they will accept only for business people. Otherwise, banker will not discount it. Come on. So for the same thing, what is entry in SBI? I will tell you. First of all, what happened? Think in SBI perspective. So you received some document and you are giving some amount to someone. And at the same time, the document worth is 1 lakh. You are giving 95,000 only. The balance 5K is it income or expenditure or a profit or loss? You can say income or you can say profit. No issue at all. Correct, no? Yeah. So one more thing, you are giving some money to your customer or you can say client. Correct, no? Yeah. 99.99% generally, yes, bankers will accept bills of exchange only with respect to business people, not for the common people. If such provision is there, everybody will draw the bill, they will discount the bill whenever money is required. Correct, no? That is the reason they will accept only business people bills. Here what happened? I am receiving some document and I am giving some 95,000 to my customer. In fact, I am not giving him cash. I am crediting in his account. Correct, no? So, if I give cash, I will write to cash. But I am not giving cash. I am crediting in his current account. No, I will write his name. For example, to customer. Which account? Current account. How much I am crediting? 95,000. But I am receiving something, no? What is I am receiving? I am receiving bill. Bills receivable account debit 1 lakh. Is it tallied? There is some difference of 5,000. Is it income or else loss? Income only. So what it is, you can call it as a interest or discount. Anything is fine. That is our interest, we can say. Or you can write discount, no problem at all. If you write to interest, okay. To discount, okay. You can write both to interest and discount, that is also okay. There is no objection at all. So what is the entry? Bills receivable account debit 1 lakh rupees, to customer current account 95,000, to interest and discount account. Everything is okay except debit item. Whenever you have written bills receivable, that means that is your asset. But for banker, that is not an asset. We received that document for a particular purpose. What is the purpose? We discounted that bill. So instead of writing bills receivable, you have to write bill discounted account. This is the correct entry in the books of banker, not in the books of drawer or drawee. What is entry in the books of drawer? Bank, all those things are nonsense in your group 1. Here you have to write this entry only. You have to always think in banker point of view, not in customer point of view. Sir, give me logic for this entry. Of course, I will give you logic. First of all, think if you are a SBI bank manager, so you are receiving 1 lakh rupees document, you are giving only how much? 95,000. That means 5,000 is your income, no? Do you know the basic rules in your foundation level? I think some diamond rules or silver rules, something. Yeah, golden rules. Golden rules of accounting is there, no? Rule number 5. What is rule number 5? 3 rules only. Rule number 3. What is rule number 3? Debit all expenses and losses, credit all. That is my income. That's why I credited it. That 5,000 you can say that is my interest. Fine, you can assume it as interest or a discount. Okay, fine. Or you can write both things, no problem at all. If you write 2 interest, that is correct. 2 discount, that is also correct. Write both the things, that is also correct. For safely, I write both those things, 2 interest and discount. And one more thing, I am giving something to someone. Rule number 2 is there, no? Debit. What comes in credit? Here my money is going out to some person current account. I credited to customer current account. So credit items is done 1 lakh rupees. What is the debit item? 1 lakh. That's what I know. Normally what our brain says, debit bills receivable. But that is not correct. I am receiving the document not as a bill. I am receiving it only for discounting purpose. I have to write bill discounted account debit. So correct entry in the books of banker is bill discounted account debit to customer current account to interest and discount account. This entry is irrelevant in my group number 2 or paper number 10. That is form part of your group 1 paper number 6. That is irrelevant for me. Okay, no? Tell me bros, what is the entry in the books of banker for discounting of bill? Bill discounted account debit 1 lakh rupees to customer current account 95,000 rupees to interest and discount account 5,000. Entry tallied, no? Total debits how much? Total credits tallied. 5,000 income credited and we are giving 95k credited and we are receiving bill 1 lakh debited. Done. Okay, no? Now have a look at question number 2 and give me entry for it. In the books of banker, not in the books of drawer or drawee, all those things. What is the entry? On the date of 1/1/25. What is the entry? Bill discounted account debit. How much? 1 lakh. 2. Customer current account 95,000. Okay, you are here only. To interest and discount account 10,000. Yeah. Now focus on last item. What is this? That is income of the bank accepted. But focus on the data and the term as well. What is the term of bill? 5 months. Correct now? What is the due date? 5 months means? So date of bill is 1/1/25. 5 months means 4, 6, 20. Superb. What is first year closing balance sheet date? 31st March 20. That means around here. Correct? First of all, tell me, out of this entire transaction, how much profit or loss earned by the bank? 10,000. Obviously 10,000, because we received document of 1 lakh we are giving credit of 90,000. 10,000 is our profit. Obviously, you have to accept it. But this 10,000 is not for single day. This 10,000 is for entire 5 months. Here the question will comes for your examination. Please pay more attention. Especially for December exams, I am expecting this question only. Listen. So this 10,000 is income for entire 5 months. But the problem is, out of 5 months, 3 months in current year, 2 months in next year. That means for this entire years, entire 5 months, you are getting 10,000 rupees profit. That means out of 10,000, some amount is related to this 3 months, some related to this 3 months, this 2 months. That what is the problem in it? This 3 months in current year, this 2 months in next year. But what you are doing, you are writing entire in current year only. If you open your P&L account, you will write in your P&L account by interest and discount 10,000. This is not at all correct. Why? Because your current year income is not 10,000. Out of the 10,000, some amount is relevant to the next year. How can you write in current year? I think you know, as per section number 128, your books of accounts always should show true and fair. Your entry is correct 100%. Nothing wrong here. But the problem is, you are recording entire 10,000 in current year as an income. If I ignore with this entry, definitely you will write in your P&L account like this. Out of this 10k, some amount is related to the next year. If you write here, your profit is not true and not fair. Always our books of accounts should be true and fair. At least, are you able to understand? So here, this entry is 100% correct. The problem is, we recorded entire 10,000 as our interest, our discount, or our income. That is okay, happy. But the problem is, bill tenure is 5 months. That is also okay. The original problem is, out of 5 months, 3 months is in current year, 2 months in previous year, next year. We are recording entire profit in current year only. Entire income in current year only. If you record entire income in current year, definitely your profit is not at all correct. Your profit is not at all fair. That means, out of this 10,000, I have to eliminate some amount of profit or interest or discount relevant to this 2 months or next year. Are you able to understand why I am doing all these things? Why I am doing, sir? This is relevant to next year. Example sake, for example, out of 10,000, example sake only, 6,000 is current year, 4,000 is next year. Tell me what I have to do. Out of this 10,000, I have to eliminate only 4,000 because remaining 6k is relevant to the current year only. That means, out of this 10,000, I have to eliminate 4,000. Means I have to give the reverse treatment. Reverse treatment means I have to debit it. That's it only, no? Sir, here 10k is credited, sir. We have to remove 4k. What I have to do? Debit it. That's it. So tell me, what is the journal entry? Use your common sense. Debit it, no? So debit means interest and discount account debit. How much? 4,000. Why I am eliminating this profit? The only reason is to find out correct profit or correct loss as per section number 128 of subsection 1, 2 and 3. Okay, now. So, if I need to find out correct profit, I have to eliminate this extra profit. So, I have to do all these things only on year end. Year end means 31st March, what is the date? 25. On next day means on 1/4/25. I have to reverse it because next year open, no? So, to interest and discount account, again 4,000. That means I am doing this adjustment only for one day. One entry is in year end date, one entry is in next day, in new year. Here debited, here credited, tally. I need one more entry here to credit, here to debit. So I am using one temporary account called rebate on bill discounted. What is that? Rebate on bill discounted. 4,000, 4,000. Now check it out. Debited, credited, credited, debited. All entries got cancelled. This is temporary adjustment. That's it. That's it. Concept done. They will ask you how much rebate. That's it. Nothing more than that. Problem is very, very easy. Okay, now? Yeah. First of all, try to understand what is happening in this example. So what is the bill amount? 1 lakh. What is the discount amount? 10,000. They are receiving 90k. What is entry in the books of bank? Bill discounted 1 lakh to customer current account 90 to interest and discount. What is the tenure of the bill? If entire 5 months in single year, there is no problem at all. But what is the problem here? Out of 5 months, 3 months in current year, 2 months in, but we recorded entire 10,000 in current year only. Then I have to eliminate that 2 months profit. For example, 2 months profit is 4,000. So I have to do all this on year ending date. What is entry for it? Interest and discount account debit to rebate on bill discount. Next day, what is the entry? Reverse. Rebate on bill discounted account debit to interest and discount account. Sir, here tell me, out of 10,000, now the question is, how much relevant to the current year, how much to the next year? How we did it? For example, 10,000 into 5 months, no, 3 by 5. Here 10,000 into 2 by 5. How much? 6,000, 4,000. But Banking Act says, so you should not take months, you should take number of days. Okay, na? I will tell you along with one problem. That problem is more than enough. Okay? Just give me a couple of minutes. Yeah, open your calcs is very, very important. Yeah. Look at your screen. Question number 1 is on your screen, all of you. Question number 1 is on your screen. Calculate rebate on bill discounted. So they are asking you to find out a rebate on bill discounted. Rebate on bill discounted means out of that entire 10,000, how much relevant to the next year? That is called rebate. Okay, now? When to calculate? On 31st December 21. That means they are following a calendar year. From the following data available. This answer is little bit wrong. I am rectifying in my new material. Don't focus on the answers. I will tell you for first 2, you have to do it for 3 and 4. Just listen, don't do overaction. So first date, bill 15/10/21. Okay, na? So I will do it, just focus. What is the term of bill? 5 months. So all of you tell me what is the due date. 5 months. 18, sorry, 3, 20, superb. Bill amount 50,000. Interest or discount rate, listen carefully. I will tell you how to find out rebate. Okay, no? First of all, what is books closing date? They have given no 31st December 31st December 21. So first thing you have to find out, this is the date of bill, right? 15th 10 21, due date 18th March 22, balance sheet date is 31st December. So this is current year only, no? This is not at all required for this problem. What is required? What is necessary? Post next year is important. What is next year? This is next year. Now you have to find out time gap between this balance sheet date and this due date in days, not in months. Tell me. Calculate it in your calci. I will do it. December is completed, no? In January, how many days? Feb 2022. Is it leap year or normal year? How many days in Feb? In March? 18 only, not 31. 70? That means out of this entire amount, 70 something is relevant to the next year. Listen, now I will tell you how to find out rebate on bill discount equals to bill amount. What is the bill amount? 50,000 into discount rate. What is discount rate? 8% into 77 by 365. 814 రావాలి 814 843 844. So what is the procedure? You have to find out difference between balance sheet date and due date. That is relevant for the next year. Now we have to apply bill amount into discount rate into this term. Focus on second one. I will do it second one. Don't do anything. I will calculate all those things. 3 and 4 you have to do it. Next second one, 10, 11, 21. 10, 11, 21. How many months? 4 months. 4 months means, first of all, 13. 12, 1, 2, 3. 13, 3, 21. Next one. Yeah, 2. Next one, bill amount. Amount 30K, 7%. 30,000, 7%. Firstly, I have to find out time gap between balance sheet date and due date. What is the balance sheet date? 31st December. That means December is completed. In Jan, 31, Feb, 28, March, 13. 72 days. Therefore, rebate on bill discounted equals to 30,000 into 7% into 72 by 365. 41? And that's what I remember. Yeah, 414. Done, no? Now you have to do it 3 and 4. Answers are wrong. Don't look at answers. Same question they can ask for 7 marks. I'm not kidding. Give me the answers for 3 and 4. 667 for 3. What about 4? Where is Jyoti? Hi. Kavya, are you solving question number 1? Na? It's done already. 1213, correct. It is a fancy number. Still, some, my dear lovely students, are still doing some battle on calci because they don't know how to calculate number of days. Bharat, what is the answer for last one? Na? Yeah. So all of you open your notebooks with your beautiful hands and let's write. Give a heading first of all. Accounting for banking companies. Hi. Maggie, make it faster. Sri Harika, come on. Give a heading. My dear last bench heroes, come on, make it fast. Where is Major Chandrakanta? Someone is missing, no? Nagarjuna. Ah, Mattamahesh, where is he? After giving heading, just copy this chart. Last bench, is it visible or else? Yeah. Still not, huh? Yeah. Don't write, don't copy, just write. What is the difference? Huh? Copy means just you have writing whatever is there. Tell me first of all, what is the main classification of banks? Scheduled banks, non-scheduled bank. Again, scheduled banks are divided into what are those two? Commercial banks. Again, commercial banks, four types: public sector, private sector, foreign banks, regional, rural bank. Again, cooperative, urban cooperative, rural cooperative. Last bench, anything wrong? Then what happened? Again, public sector, two types: nationalized bank, state bank. Is it completed? Maintain your notebook at least somewhat better. I'm not expecting 100% clarity. Bharat, your book likes cute. Chotu, done? కనిపించట్లేదా? ఫస్ట్ బెంచ్ ఖాళీగా ఉంది, వచ్చి కూర్చో. Completed? Can I scroll up? Give a heading, concepts. We have 6 concepts. Concept number 1, rebate on bill discounted. Concept number 2, secured loan versus unsecured loan. Concept number 3, RBI prudential norms, classification of assets and provision recognition. Concept number 4, RBI prudential norms, income recognition. Concept number 5, DICGC and ECGC. Number 6, section number 17 of Banking Regulation Act. Last date of our batch would be around September 6th or 7th. Maximum September 10th. Same thing applicable for online students also. If anybody purchased or recorded classes or online classes, we are going to upload video lectures on daily basis. You can watch whenever time permits. At the end of or August or else in the first week of September, we are going to wind up this batch. Even though batch is completed, you can watch the videos up to 9 months with 1.5 views. Your workbook is almost ready. So only pending is audit. 3 chapters are pending. I think by today's night I will complete entire workbook and I will send it for printing. You will get it by this month end or else first week of next month. What about concept book? That's what you are writing. Srivani, correct? Srivani. If completed all the topics, put a heading concept 1, rebate on bill discounted. Don't write anything in concept number 1. Directly let's solve the problem. That is enough. Just give a heading and we'll do it. Katapa completed. Yeah. Give a heading concept number 1, rebate on bill discounted, then write this entry, or else is it needed? Your wish. I think no need. Directly write, I will tell you entry, write down in the books of banker, that is side heading, in the books of banker, write this example first of all. Example number 1, which is on your screen. Write this example. Mr. X draws a bill on Mr. Y, amount of 1 lakh rupees, and the same bill discounted by Mr. X with SBI for 95,000. Kavya garu. What is the strength of this batch? 120 or 130? Okay. Completed. Then write entry. What is entry in the books of banker? Bill discounted account debit. Bill discounted account debit to customer current account to interest and discount account. 1 lakh debit, 95,000 credit, 5,000 credit. Don't worry, I will give this book to you at the end of batch. Let's solve question number 1. All of you give a heading, question number 1. Yeah. Please help me out. Don't write anything. I will give you time. I will give you time. No need to follow this format as it is. You can do whatever permits, whatever comfortable. So I will do bill by bill. First bill date 15/10/21. Don't write, just listen. 15/10/21. Term of bill is, if I am not wrong, 5 months, and rate percentage or discount rate equals to 8%. What is the pending? Bill amount equals to 50,000. 50,000. They are asking what? They are asking rebate on bill discounted. So firstly, what you have to do? You have to find out time gap between balance sheet date and due date. What is the due date? First of all, due date equals to 18th March 22. What is the time gap? 31 plus 28 plus 18. 77 days. Therefore, rebate on bill discounted equals to 50,000 into 8% into 77 by 365. 844. Same thing, number 2, number 3, number 4. For 7 marks. They have asked, I think, in June 23, if I am not wrong. Yeah, 23. Copy. You have to do it for 2, 3, and 4. I will give you the question data. So you can expect this question for your attempt, or else they may just change the numbers, amounts. Tell me how to find out rebate on bill discount. What is the procedure? Step 1, you have to find out due date. Step 2, gap between balance sheet date and due date. Step 3, bill amount into discount rate into that number of days by 365. Sometimes they will give you leap year. You have to focus on it. You should take 29 instead of 28. Don't ask me what is leap year, please. Where is Soumya? No. English batch Soumya. Yeah. Please don't ask me. All of you completed. Tell me what is the second date, right? 10, 11, 21, 30,000, 4 months, 7%. Do it. 10, 11, 21, 30,000, 4 months, 7%. Yeah, all of you tell me what is the due date first of all. 13/3/22. What is the time gap between balance sheet date and due date? 31 plus 28 plus 13. 77 days. 72. Teju said 77, that's why. Therefore, rebate on bill discounted equals to 30,000 into 7% into 72 by 365. 414. చెప్పావు కదా. నైబర్స్ ఆఫ్ జ్యోతి అర్థమవుతుందా? వాట్ ఈజ్ యువర్ నేమ్? సుధా. స్వాతి. ఓకే. కంప్లీటెడా సార్? నాగేంద్ర. Where is Karnakar? Absent. Huh? No. Some group 1 Karnakar is there. Sudhakar? Sudhakar is also absent. Huh? For every batch we have one Karnakar and Sudhakar. Is it done? And then number 3, do it in the same format. $25, 11, 21, 40,000, 4 months, 7%. What is the due date for third bill? Sorry, 28. How many days? 87 days. Therefore, rebate on bill discounted equals to 40,000 into 7% into 87 by 365. How much? Exactly 7 వచ్చిందా? 666.33. Okay, done. My dear Mahila Sangalu, all okay? Yeah. Geetanjali. Where is Shraddhanjali? Where is she? Yeah. Last one, 20th December 21, 60,000, 3 months, 9%. Twentieth December 21, 60,000, 3 months, 9%. What is the due date? 23. Okay. Number of days? 80. So last one, 1213 is the answer. Okay. That's it. Sir, everybody tell me, is there anything difficult in this problem? Then I will give one example for one date. Give me the answer. So I need accuracy and speed. Give me the answer. 4, 11, 25. $276. Anything else? What happened? What is the due date first of all? 7. Tell me gap between 31st March and 7/3. No gap. అట్టట్టు వచ్చిందంట. అవును. Now tell me. Why you are not changing your answer? Katapa, bro, tell me. చెప్పునా చిట్టు తల్లి. 31. Kirti ma'am, you are getting 236. Why so? Help her. You are taking December. Then balance sheet date. Mistake. Okay. What is the due date? 7/4/26. Next step what? From balance sheet, what is balance sheet date? Find out gap. So March is completed only 7 days in April. Bill amount 40,000. 4%. 7/365. That's it. Okay, no? Yeah. Okay, so we are discussing accounting for banking companies. I think we have covered concept number 1, if I am not wrong. If you remember, we have totally 6 concepts. Concept number 1, rebate on bill discounted. Concept number 2, secured loan versus unsecured loans. Concept number 3, why are you singing song? RBI prudential norms, classification of assets and provisions. Hi Banu, how are you? Concept number 4, నమ్మకూడదురా నిన్ను. Concept number 4, RBI prudential norms, income recognition. Concept number 5, DICGC and ECGC. Concept, good evening ra. Concept number 6, section number 17. Out of those 6, we are discussing concept number 1, that is nothing but rebate on bill discounted. So for this we need some knowledge in your group 1 financial accounting, where you are little bit unexpected, nothing but bills of exchange. So on that bills of exchange, you have to at least aware of calculation of due dates. I think, do you know, I think how to find out due dates? We have to add 4 grace days. 3 only, no? 3 grace days. For example, if you observe these 4 bills, so first bill date 1/1/2024, 3 months means 4/4. So generally 1/4 only plus 3, no? 4/4. Second bill 15/4 plus 4 days 18/8. Third bill 11/11, 3 months, 14 Feb. Last one 12/6, 2 months, 14 August. Yeah. Then whenever bill is discounted, what is entry for bill discounted in your bills of exchange? Bank account debit, discount account debit to bills. But that is in your group 1 only. In group 2, we have to think about in banking point of view, not in drawer or drawee point of view. So we have to think in banker point of view. Already we discussed what is the journal entry in this case. What is entry? Bill discounted account debit to customer current account to interest and discount account. Correct, no? Yeah. After that, we started with rebate on bill discounted. Actually, we started with an example. If you remember, so bill amount is 1 lakh. We discounted with 90,000. So what is entry in the books of bank? Bill discounted 1 lakh rupees to customer current account 90,000 to interest and discount account 10,000. But here what is the problem? Date of bill is 1/1/2025, but term of bill is 5 months. That means what is the due date? 5 months means it is around 1/6/25 plus 3 4/6/25. So what the problem is, so out of this entire 5 months, 3 months in current year, 2 months in next year, but you recorded entire 10,000 in current year income. That is not correct. As per section number 128, your books of accounts always shows true and fair view. So to show true and fair view, recording 10,000 is not at all appropriate, not at all correct. So definitely we have to remove some amount from this 10,000. Of course, out of 10,000, some amount is relevant to the current year, some amount is relevant to the next year. Just for example sake, out of 10,000, 6,000 is current year, 4,000 is for next year. This 6,000 is called current year interest, or you can call it as a expired interest. Expired interest means current year interest. Hey Mahesh, how are you? Remaining 4,000 is called next year interest or unexpired interest. For unexpired interest, we have to create rebate on bill discounted. So what is entry for it? Interest and discount account debit to rebate on bill discounted. That entry should be on balance sheet date. On next day, we have to reverse the entry. That is nothing but interest rebate on bill discount account debit to interest and discount account. All these are get cancelled. This is an adjustment entry, nothing more than that. After that, we have started with one beautiful and cute and smart problem. Question number 1. I think this is the question. Correct. So we have find out all interest rebate on bill discount for all the 4 bills. First of all, just I will recap how to find out rebate on bill discounted. Tell me, whenever question comes from this area, what we should do. Tell me step by step. Step number 1, we have to find out due date. Just answer orally and along with calci, don't without using pen and paper. What is the date of bill? What is the period? Then tell me due date. 5, 10, 5 more months. 11, 12, 1, 2, 3. That means 18, 3, 22. That is first step. Second step, we have to find out gap between balance sheet date and due date is 18th March 22. Correct, no? Find out the gap. December is already completed. Next, January 31 days, Feb 28, March 18, total 70. That is step number 2. Step number 3, bill amount 50,000 into 8% into 77 by 365. That's it. In the same manner. Yeah. Answer done. Na? In your notebook, please give me. What is the total? Okay. So for the first one 844, second bill where it is 414 for third bill, 667 for fourth bill. Then what is this nonsense? Okay, then write down, therefore total rebate on bill discount. Sorry, I forgot. First of all, had your delicious lunch? Yeah, that is important for us. All this accounting audit is secondary. What about me? Yeah, always on fasting. How do you know? Okay. We are on live. We can't say anything. Yeah. Total rebate on bill discounted. Tell me, what is the first bill discount? 844 plus, who is that sweet voice person? 414. After so much of gap, I felt my voice is so good. 414 plus 660. Thank you, ma. Yeah, even I got full confidence on my voice. Now I can go for singing. Last one. 1213. 3138. It's the total rebate on bill discount. So entry, we have to record entry for it. No, what is the balance sheet date? 21, right? What is entry for rebate on bill discount? No, interest and discount account debit to rebate on bill discounted. How much? 3138. That's it. Answer done. Next day what happened? We have to reverse, but not required. Who is R Vamsi? Okay. Tanu mi sister andi. She is so active. CBN, good evening. Completed now? So with this, we successfully completed concept number 1. I think all of you are perfect with concept number 1. If examiner picks question from this concept number 1, every one of you should answer it 100% accuracy. So they can ask only this kind of question. Maximum what they can do, they can just change the numbers, change the interest rates, nothing more than that. Or if you want to twist the question, he may include leap year in that. Generally, majority students will ignore that point. We have to buy 366 instead of 365 if they have given leap year. Okay, and otherwise 365 only. That is the maximum level they can twist the question. So that means our first concept is completed. If you have any queries, you can raise right now. Otherwise, I will move on to the next topic. Can I move on? Yeah, or the second topic, secured loan versus unsecured loans. Concept 2, secured loan versus unsecured loans. Yeah. What are you writing? You're writing something which is personal. No. You're sitting like on park bench. Fine. So, concept number 2. Concept number 2, secured loan versus unsecured loan. Use your common sense if you have. See, don't have, no problem. I will help you out. So generally, bankers will give secured loans only. They will not give unsecured loans. For example, if you need some amount of 50 lakhs right now, no banker will give you 50 lakhs without any kind of security. If you give your house or else if your assets as a security, you will get that amount of 50 lakhs. Subject to condition, your assets value more than 50 lakhs. Otherwise, you will not get that 50 lakhs. Correct, no? Yeah. But generally, what people will think, unsecured loans means loans without any security. That is correct only for definition's sake. Secured loans means loans given to customer based on security. Unsecured loans means without security. But here what happened, 99.9999% of the banks, they will give loans of only secured loans. They will not give unsecured loans because that is high risky. Correct, no? So nobody or no banker will give you unsecured loans. If you need any kind of loan, you have to give some amount or some asset as a security. For our academic purpose, please remember one point, there is no unsecured loans. Always I will discuss only about secured loans. Even just for academic purpose. But in practicality, there are some personal loans are there. They will give you without security. Okay? They will give you based upon your pay slip or your salary or your bank balance or your status. But in academic purpose, there is only secured loans are there. There are no kind of unsecured loans. Now I will give you one example. That example is enough for this concept. For example, some SBI bank is there. They have given loan on 1/4/23. Loan amount is 50 lakhs. Obviously, that loan is secured loan only. Secured asset is this house. So now think in banker point of view, not in customer point of view. Now you are the banker, I am the customer. So I approached you for a loan, you have granted me loan. So what is my security? Security is my house. Please tell me right now what could be the value of that house. It should be more than 50 lakhs. Otherwise you will not give me loan of 50 lakhs. It's common sense, no? Yeah. So what is the date of loan? 1/4/23. At the year end, nothing but on 31st March 24, what happened? This house value suddenly fall down to 30 lakhs. There are some chances are there, no? For example, like flood areas in Chennai or else Hyderabad. In such cases, definitely value of those assets will get decreased. At the time of taking of loan, this house value is 70 lakhs. But at the end of year, what happened? It is reduced to 30 lakhs. Now think in banker point of view, you are a banker, you have given loan to customer with a security or with a notion that my security is there, that is 70 lakhs. But what happened? As on balance sheet date, as on 31st March 2024, as on your closing of your books, that asset value is not 70 lakh, that is only 30 lakhs. You have to apply your prudence concept. You have to revalue your security asset. At every year you have to revalue your asset which is secured. So what is the real life value? This is only 30 lakh. For example, in this example, the value of house as on this date is 48 lakhs only. What is the loan amount? For example, interest rate 10%. Year end, what happened? You have to pay principal amount 50 lakh plus interest 10%. Total you have to pay 55 lakhs. But what is security of your customer? 40 lakhs, 48 lakhs. If a customer is unable to pay, we will acquire that asset. We will sell that asset in open market. We will get only 48 lakh. Out of this 55 lakh, we will receive only 48 lakh. Of course, customer will pay. That is no problem. But you have to revalue your assets at each and every balance sheet date. If he is a good customer, no need of security as well. He will pay on time. But what Banking Act says, you have to revalue your assets, whatever security are there, you have to revalue at each and every balance sheet date. We have given loan on 1/4/23, loan amount is 50 lakh, they have given their house as a security. On the date of loan, definitely this value of house is more than 50, it is around 70 or 80 lakhs. No problem at all. What happened on balance sheet date? Well, I am revaluing, I found that the value is only 48 lakhs. This is realizable value of house. What is the receivable amount from customer? Principal amount 50 lakh plus interest 10%. I have to receive 55 lakh. Out of that, if anything goes wrong, I will receive only 48 lakh. 7 lakh is called, I will not recover or receive 7 lakh. So what Banking Act says? Banking Act says this 48 lakh treated as a secured loan. This 7 lakh is treated as a unsecured loan. But normally what people think unsecured loans means loans without security. But here security is there, still we are calling it as a unsecured loan. Are you getting my intention? So even though we have given our assets, that means client has given his house as a security. Out of this security, out of this loan, some amount of value is called secured loan. Some amount of value is called unsecured loan. Please listen one more time. So loan amount is 50 lakh, interest rate 10%, security is house. What happened on balance sheet date? House value is reduced to 48 lakhs. So think you are a banker. How much receivable from customer? 50 lakh principal amount, 10 lakh interest. Total how much receivable? 50. Out of 55 lakh, how much you can recover from that house? Balance is 48 lakh is called secured loan. 7 lakh is called unsecured loan. For example, SBI has given loan to you, correct? No? Tell me, in SBI point of view, is it liability or asset? In SBI point of view, SBI has given loan to you. Is it asset or liability? Asset only. For you, that is loan liability. So that is the reason I should not call it as a secured loan. Why? Because loan means liability. I have to call it as a secured advance. Advance means I have given to customer. Unsecured loan, you have to call it as a unsecured advance. They have given loan only. If you call it as a loan, it looks like liability. That is the reason we have to call it as a advance. I hope you got my concept. So this example is enough. Okay, na? So I will give you one more example. ICICI Bank is there. They have given loan to Reliance Industries Limited. Loan amount is 100 lakhs, nothing but 1 CR. Or for simplicity, let's take small amount. 10 lakh rupees is the loan amount. Security is their shares. Shares of Reliance company is the security. Reliance company has given 1 lakh shares of Reliance company. At the time of taking loan, the share value, each and every share value of Reliance company is 20 rupees. That means 20 lakh is the secured portion value at the time of taking loan. For example, date of loan is 1/4/25. On balance sheet date, for example, 10% interest. On balance sheet date, what happened? Nothing but 31st March 26, share value suddenly fall down to 8 rupees. Each share value from 20, it is fall down to 8 rupees. Now tell me, how much banker has to receive? What is the loan amount? 10 lakh plus interest 10%. That means we have to receive 11 lakh. Out of 11 lakh, what is the security? 1 lakh shares into right now price is 8 lakh rupees. Out of 11 lakh, we can receive only 8 lakh. 3 lakh is unrecoverable. So this 8 lakh is called secured advances. This 3 lakh is called unsecured. That's it. Mark, this is the concept. Sometimes they will give you a question like, one question is that we will do it directly. That is more than enough. First of all, do you understood this concept? What is the concept name? Secured loan versus. But the correct term, if you follow the concept, what is the concept number 2? Secured advances versus unsecured advances. Why I am not calling it as a loan? For a banker, that is not a loan. They are giving loans. They are asset. That is asset for the banker. For customer, that is loan. Just for the understanding purpose, I have given as a loan. So in concept number 2, the question will be like this. They will give you some date of loan and loan amount. They will give you some security. At the balance sheet date, they will give you the revalued figure. So you have to tell us how much secured, how much unsecured. Same question is there in our material, but small change is there. After that, I will show you a beautiful concept. So I think you don't have material right now. So very soon you will get it. Where it is? Question number. Yes. Look at the screen, all of you. You have to observe carefully. Very easy question, but a small technique is there. The books of a bank includes a loan of 5 lakh rupees advanced. Advanced means they have given loan. Advanced on 31st December 2020. That means one bank is there. They have given loan to some customer on 31st December 2020. Loan amount is 5 lakh rupees. Interest chargeable at the rate of 16% per annum. Per annum means entire year interest is 16%. Compounded quarterly. These two words are very, very dangerous. They are compounding it quarterly. I think you know what is simple interest, what is compound interest in your childhood in 5th or 6th class. I think you are aware of those all. PTR by 100. Yeah, thank God. The security for the loan is being 7,000 shares. Here also they have given their shares as a security, 100 each in a public limited company, valued 90 each. So as of now, what is the share value? 90 rupees. How many number of shares are given? 7,000 into 90. Say 6,30,000. What is the loan amount? Obviously, our secured value should be more than our loan amount. Otherwise, banker will not give you loan. Here, tell me what you understood. What is the loan amount? What is the date of loan? What is the secured asset? Shares. How many shares? What is the value per share? 90. But the problem is they are charging interest compounded quarterly. First of all, do you know quarter? Quarter means how many months? 3 months, 4 months. 3 months, 4 months. Wait. 3 months, 4 months. 4 months. 3 months. 4 only. Kirti ma'am. 5 months. 7. Oh, 7. Matta Mahesh. 3 months. 34. Oh, 34. So, Janu, quarter means 3 months only. For entire quarter, for entire year, I'm disturbing. Even I don't know all those things, but still okay. Promise on you. Okay, we are on live. So per year, 4 quarters. For each quarter, 3 months. Okay, no? Yeah. There is no repayment till 31st March 22. This is very, very important. On 31st March 22, the value of shares declined to 80 per share. How would you classify this loan as secured and unsecured? Okay. Listen very, very carefully. I will do it. Just focus. You don't write question numbers. Just I'm changing all question numbers as well. Yeah, what is the date of loan? 31st December 2020. What is this in between? Pay more attention. I will show you question paper at the end of this chapter. For the last 5 attempts, you will be surprised. 31st December 2020. Next one, loan amount. How much? 5 lakh. Next one, interest. Yeah, this is very, very dangerous, man. Listen. Interest is 16% per annum. But they are compounding quarterly. Yeah. Secured asset equals to 7,000 shares. So, failure up to 31st March 22. Listen very, very carefully, all of you. What is date of loan? 31st December 20. They are compounding quarterly, no? Per quarter, 3 months. Tell me what is next quarter after the date of loan? 3 months. Jan, Feb, March. That means the first quarter ending would be 31st March 20. Just I am checking your presence. Not covered. So what is the loan amount? 5 lakh. Compounded quarterly means we have to just add. What is the interest? 16% per annum. But we need per quarter. Per year 4 quarters, no? That means 16% by 4. That means it will be plus 4%. You don't do anything, just listen. Focus. I will give you questions as well to answer on it on your own. Next quarter means add 3 more months. 30, 12. June 20. Again plus 4%. Next quarter means 30 or 31. 39, 20. Again plus 4%. Next quarter 31, 12 plus 4%. Next quarter failed up to 31st March, no? That quarter is also there. 31st March 20. This is the last installment where they have failed. Plus 4%. This is outstanding balance. Open you. Someone give me calci. I will do it. Otherwise, it will take so much of time. 5 lakh plus 4% plus 4% plus 4% plus 4%. 5. How much? 6. 6 lakh 326. This much amount payable by the client to the banker. Think in banker point of view, we have to receive 6,08,326 from a client or a customer. But on balance sheet, we have to check a revalued amount. So what is the revalued amount of shares? Realizable amount, I can say. Realizable amount equals to 7,000 shares into share value is declined to 80 rupees. 7,000 into 80, say 5,60,000. So total outstanding advance. How much outstanding advance? 6,08,320 minus how much secured? 5,60,000. The balance would be unsecured advance. That's it, done. You have to say secured, unsecured, 7 marks. But this is the calculation, but this is enough. Nothing more than that. Some other faculties will say in different manner, not required. This is more than enough. If the examiner asks compounded half yearly, how to do? We have to take 6 months instead of 3 months. 16 in 4% plus 8%. Yeah, listen one more time. They have given some loan to some customer amount of 5 lakh. Date of loan 31st December 2020. Interest rate 16% per annum. They are compounding quarterly. Secured asset is 7,000 shares. At the time of loan, value is 90. That is irrelevant for me. So when we are doing all these things, we are doing all this on 31st March 22. Now the value is decreased to 80 per share. They are compounded quarterly, no? So date of loan 31st December 2020. So I have to compound till 31st March 22. So plus 4%, plus 4, plus 4, plus 4, plus 4. This is called compounding, interest on interest. Total amount would be 608,326. This much amount receivable from the customer. But we have some security is there, no? What is the security? 7,000. But right now its value is only 80 rupees. That means the value is only 5,60,000. Out of 608,326, this 560 is called secured advances. The balance 48,326 is called unsecured. That's it. The same question has been asked in one of the exam. I will show you at the end of chapter. Otherwise, it will be something like missing. Copy. Question numbers, leave the space for question numbers. Why? Because I am changing the order. తీసుకెళ్ళిపోతానమ్మా నువ్వు కొడతాను ఎవరు. Don't write question number, leave the space for question number and write the answer. Geetanjali, done. Where is Shraddhanjali? Where is Kavya ji? Angita, where is Jyoti? Yeah. Karnakar, Sudhakar, Visurup, ఎవరి కింద ఈజీ. బెటర్ ఎగ్జాంపుల్ ఈజ్ నీడెడ్, నో? అయ్యో ఓఎంజీ, 1, 2, 3, 7 days more. Yeah. Please wait for 1 week. I will tell whatever you want. Where is the example? Yeah, first of all, write down concept number 2. Yeah, that's it. Concept number 2. Secured loan versus unsecured loan. Aki, completed. Mahesh M. Where is Katapa? Okay, you're acting nicely. She is somewhere else. Got it. Can I scroll? Why so? Dilip completed. Draw that pic as well. Yeah, that is my dream house. Okay, okay. Please focus on pic. Chichi, concept, not on pic. Kavya garu, come. Make it fast. This weekend syllabus of our subject is accounting for banking companies. Total chapter. From this week onwards, they will conduct weekend examinations. Even then, they will evaluate the purpose and same thing will be forwarded to your parents. Are you really drawing that picture? I think so. Otherwise, that is just for 1 minute concept. You are writing out from last 5 minutes. Yeah, make it fast. Geetanjali completed. Make it fast. What about my dear backbench heroes? Doubt? No? Okay. That's how people are. Out of this entire content, everything is correct. There is small spelling mistake. They are focusing on this a small spelling mistake. Where it is? Yeah, that's how people are. Kirti. Yeah. What happened? Real Kirti is there. Okay. I have seen you somewhere else. Are you from Birla batch? All batches. I think I have seen in yesterday's class. Yeah, 10, no? Don't try to decode all these things. That is a little bit difficulty. Yeah. Yeah. Don't decode. Chandrasekhar, Dilip. Yeah, question number, give space for question number and copy it. Mahesh, come on. When will it be your holidays? Do you know there are holidays for you? We are planning holidays. Yeah. No, no. On each and every Sunday afternoon. Yeah. On each and every Sunday you can take rest. Because there will be no more classes on Sundays. You are genius, man. For the first time in the history, you are writing the answer without knowing question number. Correct, no? Yeah. For some people, question number is irrelevant. Question is irrelevant. Like you. Yeah. Mm. Realizable value. Completed, huh? What is your name? Nishita. Correct, huh? N starts with. Make it fast. Completed, అండి. Secured advance how much? 5,60,000. Unsecured advance 48,326. So with this, our concept number 2 is also completed. What is concept number 2? Secured advances versus unsecured advances. Please try to understand why I am calling it as an advance instead of loan. What is the reason behind it? So for a banker, that is asset. If you call it as a loan, that will become liability. That is not at all correct. We have to call it as a advance. The problem will be exactly like this. They will give you loan amount and some date is there. Some security will be there. In future, that will be reduced. The only thing you have to find out what is outstanding balance. In this problem, how we found out outstanding balance? Because they have given compounded interest, I have to add plus 4 plus 4 plus 4 plus 4. By the way, how we got this 4%? Per annum 16%, per quarter 16 by 4, 4%. Why I wrote by 4? Because per year there are 4 quarters. For example, if nothing is there, and they have given nothing about compounding quarterly, then what is the answer? We have to just take interest rate. Date of loan is 31st December 20. Current year is 20. That means in between, how you have to find out the gap. That means how much gap? 31st December 21 and 31st December 22 plus 3 months. Correct, no? That means 2 year 3 months? Sorry. 31st March 22. So first year ending 31st December 21. Second year 31st March 22. 1 year 3 months. Directly apply like 5 lakh into, what is the percentage? 16% into how many months? How many months? 15 months. How to apply it then? 1.3, no, that means 1 year 3 months. 3 months means you can convert into years, like 3 by 12, 1 by 4, nothing but you have to write 1.25 years. That is also fine, you will get the answer. So based on question you have to apply this calculation. So you will get some outstanding balance. In our question the balance is 6,08,326. Then what happened? Some security is there, 7,000 shares. Present market value is 80. Nothing but 5,60,000 is realizable value. How much outstanding? 6,08,326. Out of this how much secured? 5,60,000. Balance 4,8326 is called unsecured. That's it. Okay, Nandi. So let's move on to next concept. Concept number 3. What is concept number 3? RBI prudential norms, classification of assets and provisions required. Listen, little bit interesting and conceptual concept, actually more concept topic, more conceptual topic I can say. That is exact word. Listen, first of all, for example, SBI bank is there. SBI bank has given loan to last 3 customers because I think they are mad. They have given loan to Jyoti. Who is the next person name? Sweta. Next person? Kirti. Yeah. They have given loan to these 3 people. For Jyoti 30 rupees, Sweta 20 rupees, Kirti 10 rupees. These 3 people has taken loan of this amount from SBI. Now think in SBI point of view, is it a liability or asset in banker point of view? Asset only. They will write in balance sheet of SBI on asset side like advances. That means loans given to Jyoti, Sudha, Kirti. 20, 30, 10. That means in banker point of view, all these 3 people are considered as an asset, or you can call them as a advances. Both are same. Okay, na sir? Yeah. Do you know Vijay Mallya? Who is he? Correct. How do you know? Correct. Yeah. Exactly. What you are saying is correct. So Vijay Mallya is the person, is like whatever you are thinking, whatever you have known. Yeah. So Vijay Mallya is a person has taken loans in the form of company or business from bankers, and obviously is bankrupted, is unable to pay some amount. Listen carefully. For example, these 3 persons are there: Jyoti, Spurti, na? Sweta, Kirti. 3 persons are there. Okay, no? Now think in banker point of view. For example, Jyoti EMI date is 1st of every month. Sweta EMI is also 1st of every month. Kirti EMI also 1st of every month. For example, Jyoti is paying on time every month. Second person, Sweta is not paying on time. Kirti is also not paying on time. For example, first person, Jyoti is paying on time. Every month she is paying exactly on 1st of every month. Okay, na? So, Jyoti will be called as performing asset. What is that word? Performing asset. Or else standard asset. What is that? Standard asset. That means no problem with Jyoti. For example, Jyoti paid on 1st of January her EMI, in Feb also, in March also, in April also. But in May, she is unable to pay her EMI. Still, banker will wait up to 90 days. 90 days is the maximum deadline. If your EMI is on 1st Jan, you have to pay at least up to 90 days within Jan 1st. That means Jan 1 plus 90 days. That is the maximum time you have to repay to the banker. If she pays within 90 days, even then she is a good person, nothing but performing asset or standard asset. Performing asset or standard asset means as outstanding amount if he pays on time or within 90 days. For example, I have given loan to you for an amount of 10 lakhs. You have to pay amount on 1st January, but you are unable to pay it. Up to 90 days, I will give you time. Up to 90 days, I will call you as a performing asset or standard asset only. If 90 days crossed, you will be called as something else. I will tell you what is that after a couple of minutes. First of all, let's focus on performing assets. Actually, all these guidelines has been given by the RBI. I think you know what is the meaning of RBI. What is RBI? Reserve Bank of India. I think you know RBI is the boss of all bankers. Everybody has to follow, every bank has to follow guidelines of RBI. It has given guidelines to some norms, means regulations to all the bankers. Especially there are two norms. One is classification of assets and provisions. Second one is income. This is our concept number 3. This is concept number 4. Here, concept number 3, assets. Assets means not land and building, plant and machinery, that they are not assets here. Here assets means we have given loans to someone else. That is our assets. Here don't think land and building, plant and machinery, furniture and fixtures. Here I am discussing, or we are discussing about loans to customers. We are calling it as an asset. For banker that is asset. For customer that is loan. Here what happened? SBI has given loan to Jyoti, Sudha and Kirti. Now we have to call them with the different names. Listen. So main classification is performing asset or standard asset if they are paying on time or if they pay within 90 days from the due date. They are called performing asset or standard asset. Listen. They do not create any trouble. They are very good person, just like me. Loans are advances. What happened? Why are you laughing? Loans are advances properly paid on due dates. They'll pay on exactly on 1st or 2nd, whatever it is due date. Or else, loans are advances unpaid but overdue up to 90 days. Overdue means they have not yet paid. And that means up to 90 days you will be considered as a good person only. In banking language, good means performing asset or standard asset. Overdue means due date is exceeded already. That means if you want to call one asset as a performing asset, there are two criteria. One is if they pay on time, they are performing asset. They have not paid on due date, but 90 days is not yet crossed. They are called as a performing asset only. If they cross 90 days, they will be shifted to another category. I hope you are getting my avedana. Yeah. What is my intention here? Just I want to convey what is performing or standard asset. Here asset means, my dear students, please don't think about land and building, plant and machinery, cash, all those nonsense. Here assets means loans only. Then some legendary people will ask, then write loans only. hey man, here loans is asset to the banker. If you are preparing accounts of that customer, write it as a loan. But here we are discussing accounting for banking companies. If the bank has given to loan to some customer, that is our asset only. The best example is here only. We have given loan to all the three people. Now we have to classify them based upon their payment criteria. If they are paying on time, or if there is no trouble in their payment, or if even though they are unpaid up to 90 days, they are good only. We have to give some, at least some time. That time is 90 days given by the RBI, not by me. So they are called performing assets. For example, listen very, very carefully. Please help me out. SBI has given loan to Geetanjali on 1st January 2025. Or for example, due date is 1st January 2025. Up to 90 days. Actually, she has to pay on this date. Which date? 1st Jan 2025. But there is no payment. She failed in payment. Up to 90 days. Please count it. 90 days means in Jan 30 days and Feb 28, March 31. Add it. Some more days are needed. Only one. That means 1st April 20. So up to 1st April 25, even though there is no payment from Geetanjali, she will be called as a performing asset or standard asset only. If she paid on 1st Jan, she is a performing asset. 2nd Jan, she is a performing asset. If she paid on this date also, she is performing asset only. That means maximum deadline is 90 days. Then you will called as a performing asset, or you called as a standard asset. For understanding purpose, they are good persons just like me. Once that 90 days is crossed, from 91 day onwards, they will be called as a non-performing assets. In simply, we call them as a NPAs. NPAs means non-performing assets. Non-performing assets means overdue for more than 90 days. Actually, if you follow the business news, so many loans which are given to the companies, they will write as a NPS. NPS means they are not set offing it, they are not write offing it. As per Banking Act, they have to give some name, that's it. Actually, during that Vijay Mallya issue, at every 3 months, this news is normally spreading. That, for example, Punjab National Bank is what you call writing some 50 crores of Vijay Mallya loan as a NPA. That people will understood like, people use it to think that means they are writing off the loan. No, they are not writing off. Vijay Mallya has to pay the loan. But as per Banking Act, we have to change the name from performing to non-performing. For example, SBI has given loan to Kirti. Due date is 1st Jan. Up to 1st April, she has not paid. Up to 1st April, we will call her as a performing asset. Date is exceeded. I have to change that name as a non-performing asset. That doesn't mean I am write-offing her loan. She has to pay loan. That's it. That is her liability only. But people who is unaware of Banking Act, they use it to think that I am write-offing that loan. That is not at all correct. I am not telling her to please don't pay the amount. Even I need money, she has to pay money to the bank. Just I am changing the name from performing asset to non-performing asset. Because as per Banking Regulation Act, if you read or listen any news about NPAs, that means they are not write-offing loan. They are just changing the name to comply with the RBI prudential norms. Okay now. So, tell me, assets are two types. What are those? Performing asset, non-performing asset. Performing assets are also called as Standard asset. What is the meaning of performing asset? If they paid on due date or what you call overdue up to 90 days. What is NPA? Overdue for more than 90 days. So simply we can call them as a bad fellows like you. They are not paying within 90 days or on time. Even though in bad fellows also there are some different categories are there. Small bad, middle amount, and worst fellows like you. So like that, again NPA, again NPA, three categories: substandard, doubtful, loss. Substandard means just now he entered into the zone of NPA from performing asset. I will give you notes. Substandard means he shifted from performing to NPA. From that date onwards up to 12 months, he is called as a substandard asset only. Okay, na sir? For example, I have given loan to Kirti. So she is unable to pay up to 90 days. She is called performing asset. Once 90 days crossed, she will be called as a NPA. NPA up to 12 months is categorized as substandard. If that 1 year is complete, 1 year is exceeded, then she will be called as a doubtful. That means bank has to think twice. That means banker may not receive that amount from Kirti because already overdue 90 days is crossed. She got NPA status and up NPA also 1 year completed, 1 year exceeded. Then I have to think twice. There is some doubt is there. Last category, loss asset. Loss asset means either bank or auditor or RBI, they decided I will not receive this amount from that Kirti. Then that is called as a loss asset. This classification is given by the RBI, not by me. So actually RBI gives two kind of norms. Norms means rules. What are those two rules? One is for classification of assets and provision. Second one is recognition of. So what is the first concept? Classification of assets, and we'll discuss provisions later. Let's first focus on classification of assets. Normally we know assets are two types: tangible assets, intangible assets, or current assets, non-current assets. Here assets means not like land and building, plant and machinery. Here assets means loans given by the banker to the customers. So why you are not calling it as a loan instead of asset? Because for banker that is asset, for customer that is liability. Correct? No? So out of these assets we have bifurcated into two categories: performing asset, non-performing asset. Performing assets are also called as standard asset. Again NPAs are divided into three categories: substandard asset, doubtful asset, loss asset. When to call it as a performing asset? Overdue up to 90 days. When to call it as NPA? Overdue more than 90 days. Again NPA, three categories: substandard, doubtful, loss. When you call it substandard asset, he is NPA up to 12 months, he is called substandard. When to call doubtful? NPA more than 12 months, he is called doubtful asset. When to call it as a loss asset? Either RBI or auditor or bank identified as a loss, then it will be called as a loss assets. For example, in our example, we have given loan to Jyoti, Kirti, Sudha. Jyoti overdue is up to 90 days. She is called as performing asset. Kirti overdue is 270 days or else 160 days. Tell me. NPA obviously. In NPA which category? Why substandard? 1 year is not yet completed. So she will be called as a NPA. And Sudha 366 days, she will be called as doubtful asset. And one more thing, this is very, very dangerous. People will definitely do mistake here. Listen very carefully. This is due date. Up to 90 days. 90 days means I can say 3 months, no, on an average. 3 months. From here 12 months. They will be called as a substandard asset. More than this, they will be called as a, listen very, very carefully. From due date 12 months means, they will be only, for example, listen very carefully, this 12 months from this date, not from this date. Are you getting my point? When you call one asset as a substandard asset, you have to consider from the date of NPA, not from the due date. They will ask one question in our material. They will tell you due date of 15 months from due date. Tell me what will happen 15 months from due date. Substandard or doubtful? This is 3 months, no? This is 12 months. Within this only. This is substandard only. 15 months means not doubtful. From NPA 15 months, that is doubtful. Are you getting my point, sir? So from due date to 90 days or 3 months, performing assets, sir. Here they will get NPA status. From here up to 12 months, substandard. There will be doubtful assets. Or else I will try to write the notes. Just hold on. Yeah, listen. This is due date. 90 days or I can say 3 months. Up to this they will call it as a performing assets. From here we have to count 12 months, not from here. From here we have to consider 12 months. They will be called as a substandard asset. If more than 12 months, they will be called as a doubtful asset. People will ask 15 months from due date. What will happen? From here 15 months means 3 months, 12 months, here only, within this date only, substandard asset. You have to check whether it is from NPA status or from due date. If you want to call one asset as a substandard asset, if it is from NPA, 12 months, from due date 15 months. Are you getting my point, sir? Generally, what provision says? From NPA onwards, 12 months only. But they will twist the question like from due date 15 months. What people will do? 15 months means more than 12, they will write doubtful asset. That is not correct. If they are asking from due date, 15 months is substandard asset only. If they are asking from NPA, 15 months means doubtful asset. It will cross the line. Are you getting my point? So now tell me, so total assets are divided into 2 types as per RBI norms. What are those 2 types? Performing asset, non-performing asset. Performing assets are also called as standard asset. NPS are again 3 categories. What are those 3 categories? Substandard asset, doubtful asset, loss asset. So performing assets means so overdue up to 90 days. Next one, NPA means overdue more than 90. Again that NPA, 3 categories, substandard, doubtful, loss. So if you want to call one asset as performing or non-performing, that is easy. But the difficulty thing is you have to find out whether that is a substandard, doubtful, loss. When to call it as a substandard asset? From NPA to 12 months. If you are thinking from due date, that will be 15 months because 90 days are already there. Correct? No? When to call it as a doubtful asset? From NPA more than 12 months. That will be doubtful. When to call it as a loss asset? If it is identified as loss either by the RBI or by the banker or by the auditor, that will be called as a loss asset. Clear, sir? So copy concept number. Before that, don't write concept number. Write this chart, then concept number. So first copy this chart. RBI prudential norms, first category. Category kadu, that is first norms. Classification of assets and provisions required. Second norm, recognition of income. Right up to this, only this chart. This will be our concept number 3. This is concept number 4. Chittidalli, what happened? Write this chart only. Then give a heading concept number 3. Now give a heading concept number 3. After writing this chart, give a heading concept number 3. RBI prudential norms hyphen classification of assets and provisions required. Sweta, are you writing? Yeah. Kaushik. Where is Kaushik? Completed? Then copy. Assets, 2 branches, performing asset, non-performing asset. Other number performing asset is standard assets. If not completed, you have another option. Open YouTube. Again on NPA, 3 categories: substandard, doubtful, loss. Under non-performing asset, within the bracket, write down NPA. NPA stands for non-performing asset. Everybody should aware of what is the meaning of performing, what is the NPA, what is substandard, what is doubtful, what is loss, when to call all those things. Please try to understand. If you are unable to understand, please feel free to ask me at least after the class. Can I scroll up? Okay, now can I? Performing assets. They do not create any trouble. Loans or advances properly paid on due dates. Loans or advances unpaid but overdue up to 90 days. They will be called as a performing assets. Last bench, is it visible properly? Or else you can come forward. Yeah. NPA means overdue for more than 90 days. On that, we have to again bifurcate or classify into three categories: substandard, doubtful, loss. There is no thought about loss. That is very easy. There is no dates, all those things. When to call it as a loss asset? Identified as loss by the either RBI or a banker or auditor. The problem is only with substandard, doubtful. When to call substandard? From NPA to 12 months, not from due date to 12 months. If from due date, 15 months. When to call it a doubtful asset? After substandard, I can say. That's it, no? Yeah. Teju, completed. Huh? Why so? No, I don't know. Completed? Write down substandard, doubtful as well. Being NPA for more than 12 months is called doubtful. NPA up to 12 months is called substandard. Last one, loss assets. Identified as loss either by bank or else auditor or else Reserve Bank of India. So my agenda is very clear. If the question comes from banking company, you should get 7 out of 7. If MCQ, 2 by 2. If they ask both MCQ and question, you have to feel lucky. He has to feel sad. Who is that person? Examiner. Done now? Yeah. Remaining we'll discuss tomorrow session. Until then, I'll miss you. Hi. Yeah. I think we had some delicious lunch. Yeah. Then we can start our session, which will be around 1 hour 59 minutes. Already 1 minute is completed, no? Yeah, I think majority of aware of my time sense. I'm always time punctual. What happened? Correct, no? Yeah, maximum it will be 1 or 2 minutes. Yeah, correct. Yeah, yeah, fine. We are in deep discussion of accounting for banking companies, if I am not wrong. Classification completed, no? Concept number 1 is also completed. What is concept number 1? Concept number 2. Yeah, I think in yesterday's session we covered concept number 2. I think you understood how to solve a problem if they are given from concept number 2. So what happens generally in this scenario, they will give you some loan amount and date of loan. They will give you last date of that particular outstanding balance. Firstly, you should find out what is the outstanding balance receivable from the customer. Then you have to revalue, revise the figure of security to the extent of security that is called secured advance, balance is called unsecured advance. This is also covered in the previous session. Yeah, we are discussing prudential norms of Reserve Bank of India. There are two kinds of norms. One is classification of assets and provisions required. Second one is income recognition. So we are discussing first topic, classification of assets and provisions required. Already I told you very clearly here assets means not land and building, plant and machinery, furniture and fixtures. Here assets means loans given to the customers. So there are two types of assets, performing assets, non-performing assets. Performing assets are also called as standard assets. Yeah, again under NPO there are three subcategories. Substandard asset, doubtful asset, loss asset. When to call one asset as a performing or substandard asset? When it is overdue up to 90 days. Performing assets or good assets or good persons like me, they do not create any trouble in what you call in the time of receipts or settlement. Second category, NPA. When you call it as NPA, when it is overdue for more than that. Second one, third one, substandard assets. When you call it substandard asset, substandard assets means from being NPA up to 12 months. Doubtful assets beyond 12 months being NPA. Loss asset, it is identified as loss either by Reserve Bank of India or else auditor or else RBI. Yeah. Fine. So this classification is very, very important. I will tell you why this is important. Just remembering particular names is not at all sufficient. You have to understood when one advance is called as performing, when substandard, when doubtful, when loss. For example, some loan is there that is overdue up to 80 days. Is it performing or non-performing? 80 days, 89 days, 90 days, 91 days, non-performing. From non-performing, you have to check whether it is substandard, doubtful or loss. No need to think about loss asset because for categorize a loss, there is no need of any kind of term, all those things. The problem only is with two things, substandard and doubtful. When to call substandard, when to call doubtful. Once that asset is categorized as NPA, from the date to 12 months, that is called substandard, and after that it will be doubtful. That much easy. Don't make it complicated. Performing is anyway easy. There is no complication. Overdue within 90 days. Loss is also easy. What is loss? It is identified as the loss either by the banker or by the auditor or by the RBI. What is the remaining two? Substandard and doubtful. From NPA to 1 year, doubtful, beyond one, sorry, from NPA to 1 year, substandard, beyond 1 year, doubtful. Correct? No, that much easy. Yeah. Now, listen. Do you know prudence concept? What is prudence concept? Sorry? Correct. How do you know? How do you know? Yeah, great. Yeah. So, prudence concept means you have to anticipate your future future losses. ఎందుకు మధ్యలో ఏదో వచ్చింది? Yeah, you have to okay, we are on live. Yeah, we have to anticipate future losses, not future wife కాదు, future profit. Summary is you should not expect future profit, you should expect future losses. Whenever if there is any evidence that there will be any losses in future, you have to be create some amount of provision. Correct? No? Yeah, listen very carefully. Today's discussion will be very, very important. Listen, every day I will say the same dialogue because every day is important. Yeah. Yeah, done. Listen. For example, I have given a loan to all these three people, Kirti, Pragati, Teju. Yeah. So I have given loan to all of these three people, each one 1 lakh, 1 lakh, or else second bench. I will go for the next example. 1 lakh, 1 lakh, 1 lakh. Correct, no? Yeah. Now what happened? Think in my perspective, I have given loan of 3 lakh rupees to three people. The term is 4 or 5 years. Tell me, definitely I have to think about my future receipt. I have to think about what is their status, financial status. For example, Kirti ma'am is financially sound person, then I may assume that there is no problem in this 1 lakh. Second person, there is small doubt. I think there is some kind of insolvency is going there. So she made an application to court for insolvency. Then definitely I have to rethink about this 1 lakh. Teju is also, she is financially is okay, but I am expecting I will receive only 50% of that 1 lakh. That means right now I know that I am going to lose 1.5 lakh out of those 3 lakhs. This is my loss, but this loss is future loss, not present loss. Whenever this loss is an evident, I have to create provision for this loss. After all, Varma is an individual, 3 lakh is nothing. Think in banker point of view, banks will give crores of rupees loans. Crores of rupees loans to the customers. Definitely, every bank has to create some amount of provision. If they will not create any provisions, there will be chances of liquidation also. If there is a kind of Vijay Mallya or Nirav Modi in such scenarios. So every bank has to create some amount of provision. For example, I have given loan to Kirti. I know Kirti is a good person, but still I have to create some amount of provision. Same thing for Pragati and Sandhya. I have to create some amount of provision on it. Now the point is how much I have to create. Is it 5% or 6% or 7%? No need to worry. Banking Act itself says they will tell you how much amount provision you should create. They will give you percentage. But the problem is they are not giving single rate. They are giving multiple rates depend upon which kind of asset it is. For performing assets, one kind of rate. For substandard, one kind of rate. For doubtful, one kind of rate. For loss, one kind of rate. You have to create that much of provision on that particular asset. You can expect this kind of questions in your examination, at least for MCQ. I will show you very easy concept. First one, standard assets. Standard assets means performing assets only. That means overdue up to, for standard asset they have given 3 rates. 0.25, 1%, 0.40%. If that is a performing asset, if the loan given to agricultural sector and SMEs. SMEs means samosa popcorn, small and medium scale enterprises. If the loan is given to these kind of people and they are paying properly, if they are called as a performing asset or standard asset, you have to create 0.25% of provision. Because agricultural people and SMEs are generally genuine people. That too, they are performing asset only right now. Performing assets means they are paying on time. They are good and they are honest people. Very small amount of provision is required, 0.25%. If they are real estate commercial people, commercial real estate sector, even though they are commercial people, they are performing asset only. Performing assets means they are paying on time. They have to create 1% of provision. Who has to create? Bank has to create 1% of provision. Sir, this is performing asset only, but they are not agricultural, they are not SMEs, they are not commercial real estate sector. If any other people is there, you have to create 0.40 percentage. So very easy. If it is a performing asset, three rates are there: 0.25, 0.25, 1, 0.40. Special rates are 0.25 and 1. Common rate is 0.40. You have to check firstly that should be performing asset. If it is non-performing asset, if even that is agricultural, this rate is not applicable. Are you getting my point? If it is agricultural sector, this rate is applicable only if that loan is a performing asset. Sir, I have given loan to SMEs, that is NPA, I can't apply this rate. You should apply this rate only if that is a performing asset. When to call that asset is a performing asset? When they are paying on due date or up to within 90 days. Are you getting my point, sir? So if just you have to check for which asset you are creating provision. If it is a performing asset, check whether it is comes under first category or second category or third category. What is first category? It is agricultural or SMEs 0.25. If it is agricultural and performing asset 0.25 only. Agriculture non-performing asset, which rate I will tell you later. As of now, we are focusing only on performing asset, nothing but standard asset. How many rates? 3 rates. What are those 3 categories? First of all, first category agricultural and SMEs. Second category commercial real estate. Third category others. What are those rates? 0.25%, 1%, 0.40 percentage. These rates only applicable for performing asset. For example, the bank has given loan to SMEs, but that loan is a non-performing asset. Which rate I have to apply? No, these rates are not applicable. We will discuss later. Okay, na? So you have to recheck 2 checkpoints. Checkpoint number 1, that should be performing asset. Checkpoint number 2, it should be covered under these 2 categories. Are you getting my point, sir? So we are discussing how much provision bank has to create. Firstly, if performing asset means they are a good person only, that means if you observe the rates, all rates are very small rates. Out of 100 rupees loan, you should create only 0.25%, 1%, point for very small percentages. Think practically why they are creating very small percentages, because they are genuine people, they are paying on time. Even though if you not create provision also, I think there is no kind of any bad debts because they are paying on time. Still, for the sake of what you call safeguarding of banking, or else to comply with the Banking Companies Act, we should create provisions. I'm discussing about what standard or performing assets. How many categories are there? 3 categories. What are those 3 categories? Agricultural and SMEs. Second category, commercial real estate. Third category, what are those 3 rates? For agricultural and SMEs, 0. For commercial people, for others, 0.40, 0.25, 1, 0.40. Mahesh, are you okay? Yeah. Second category, substandard assets. If it is substandard assets, again some rates are there. In substandard asset, first of all, what is the meaning of substandard assets? NPA up to 12 months, not overdue up to 12 months, NPA up to 12 months. If it is a substandard asset, of course there is some kind of secured, unsecured. Concept number 2. Up to secured person, you have to apply 15%. Remaining unsecured, if that loan is given to infrastructural companies, 20%, for others 25%. That's it, done. That means in substandard assets there are three rates again. 15, 20, 25. 5 3s are 15, 5 4s are 20, 5 5s are 25. This 15 is for secured portion. This 25 is for unsecured. Unsecured infra loans 20, unsecured others 25. Now tell me, we covered right now two rates, two kind of assets. First one is for performing assets. Second one is for substandard assets. In performing assets, there are three rates. Tell me, what are those three rates? 0.25, 1%, 0.40. 0.25 for whom? Agricultural sector, and SM is 1% is for commercial real estate sector. 0.40% is for other category. Second one, substandard assets. Again three rates. 5 3s are 15, 5 4s are 20, 5 5s are 15, 20, 25. 15 is for secured portion, 20 is for unsecured infrastructural projects, 25 is for others. Last category, last only, in fact, doubtful assets. Here, doubt only 4 percentages. For unsecured, first of all, tell me, what is the meaning of doubtful asset? Before that, if you observe, rates has been increased when compared to performing assets. Why? Already they are becoming NPA, no? Some chance of bad debt is there. That's why slightly I increased the rate. For secured, rate is less. Why? Security is there, I can sell it in the open market. For unsecured, rates are little bit more. For doubtful, what is doubtful? NPA more than, already he is NPA and 1 year also increased. That's why we have to increase the rates when compared to substandard as well. If it is unsecured, already doubtful and no security, 100% I have to create. For secured, if it is a doubtful, up to 1 year from doubtful, 25%, 1 year to 3 years, 40%, more than 3 years, 100%. So in doubtful, already if that person is doubtful asset, if there is no security, use your common sense, he is unable to give and no security, 100% you have to create, there will be no more receipt. Doubtful, but up to 1 year only, 25%. 1 year to 3 years, 40. More than 3 years, 100. That means even though security is there, if it is more than 3 years, we should create 100. And unsecured also 100. 25, 40. Here it ends with 25, no? Here begin with 25. 25, 40, 100. Unsecured anyway 100%. For loss asset, no need to think of it, 100%. Okay, no? So I will tell all the rates, just listen. Yeah. So first of all, RBI has given prudential norms for recognition of provision. So we have to create some amount of provision on loans given to the customers. In fact, they are my assets. I have to create provision depend upon which kind of category it is. If it is a performing asset, there are three rates. 0.25, 1%, 0.4%. 0.25% is for agricultural sector and SM is 1% is for commercial real estate sector. 0.40% is for others. Second category, substandard assets. There are only three rates, 15, 20, 25. 5 3s, 5 4s, 5 5s. 15% is secured portion. 20, 25 is for unsecured portion. 20 is for infrastructural. 25 is for others. Third category, doubtful assets, 4 rates. For unsecured, entire 100%, that ends with 25, no? 25, 40, 100. 25 is up to 1 year. 1 to 3, 40. More than 3, 100. Last category, last asset 100%. Here the problem is you should know when to call one asset is substandard, doubtful, loss. And at the same time, you should be aware of these rates. For example, in exam, they will ask you loan given to a customer X, overdue date is something. They will tell you overdue up to some 360, up to 3 years or whatever it is. You have to first find out which category it is, and you have to give that rate. They will give you MCQ. If you have detailed clarity on it, you can easily answer it. Otherwise, every answer looks like correct only. Because they will give you mostly these rates only. 0.25, 140, 25. Everything seems correct, but they are not. Okay, no? You tell me. So what is our concept number 3? First of all, RBI. First one, classification of assets means is it performing or substandard or doubtful, or second one, how much provision we have to create. First of all, tell me how many main classifications, what are those, or else I can say performing asset as again NPA assets are 3 categories. What are those? Substandard, doubtful, loss. Tell me when to call one asset as a performing asset. Overdue up to, if they are paying on time also, they are performing asset. Second category, NPA. When to call it as NPA? Overdue more than. Next one, substandard assets means from NPA to 1 year. When to call doubtful? More than 1 year. Next one, loss asset. When to call loss asset? Loss identified by the banker or auditor or RBI. Next one, provision to be maintained or created. It's depend upon which category of asset it is. For example, it is a performing or standard assets. How many rates? What are those 3 rates? 0.25 percentage, 1 percentage, 0.25 percentage is for agricultural, and 1% is for 0.40% is for others. Next, substandard, there are 3 or 4. 3 rates or 4 rates. What are those 3? 15% is for secured portion. 20 is for unsecured infrastructural loans. 25 is for unsecured others. Now tell me, I will ask some kind of doubts. For example, loan given to agricultural sector, if that is a substandard asset, what is the rate? Gone. I will repeat the question. Loan given to agricultural sector, if that asset is a substandard asset, what is the rate? Generally secured only. If it is unsecured, sir, agriculture no 0.25% only, no? That is only for performing asset. Done. Super. For doubtful, how many rates? What are those 4 rates? 100, 25, 40. For unsecured, secured up to 1 year, more than 3 years, more than 3 years, 100%. 2 years, 3 years, 3 years, 1 day, 100%. 100% you are correct. Last asset? Yeah, done. You have done with your concept. Are you writing notes or what is the last one? You are in losses, huh? Yeah. Make it profit. Last bench, are you able to? Or else you can come. Where is? Good evening, bro. I feel like I want to give you a compliment. Yeah. Out of my past 5.5 or 6 years experience, for the first time, I feel the best batch. Yeah, Nizam. Promise on you. You can ask you even your juniors as well. I told the same thing. Uh, Please wait for 6 more days. I will come to you. We can discuss more and more. Anybody who by any chance material? No. Financial accounting, please. Kavya, done. Hi. Where is Licky? Aki, what happened? Okay, okay. Something personal, I can't talk. Okay, okay. Approach arbitrator. Can I? Manishi, are you fine? I don't think so. Ghana. What happened, Sri Harika? Samira, are you there? Where is Katapa? Okay. Mahesh. Yeah, tell me. Meanwhile, I will ask my small doubts. You can write and give me answer. Tell me what is the rates for performing assets? 0.251, 0.40. For commercial real estate sector, for agricultural sector, for real estate, for SMEs, for bank, for example, loan given to Reliance Industries Limited. What is the percentage? 0.40 if it is a performing. Doubtful assets, 4 rates for unsecured 100, secured up to 1 year 25, 1, 2, 3, 40, more than 300. Sai completed. Step number 3. Standard turnover minus actual turnover for indemnity period. Calculation for what is that? Short sales equals to Sai. Step number 1 calculation of. Step number 2 GP ratio na. Step number 3 Sai. Step number 4 3 into 2. Wow. Great. Do you need something? We'll discuss about it during break. Yeah. I will give you whatever you want. Where is Nagarjuna? No more. Completed. If completed, please take 60 seconds or 1 minute to revise those rates. Then we'll solve one problem. Yeah. Time up. Are you ready? Kirti ma'am, are you ready for it? Let's go for it. Question number 5 is on your screen. Yes, we can do it. From the following info of the details of advances of X, not my X, it's capital X. X Bank Limited. Why are you always curious about her? Okay, we are on live. Calculate the amount of provision to be made in P&L account. They're asking how much provision we should create. Yeah, I won't help you. Just listen very carefully. You will answer it. Yeah. Open your calculator. Open means just switch on it. Maggie, are you ready with your calc? Yeah. So first one, standard assets. Standard assets. What is the amount of loan? 6,000. Tell me what is the rate for standard asset? 0.25, 1%, 0.25% is for the people of agricultural or SME. 1% is for real estate. 0.40% is for. If nothing is given, we assume it is a other category. Nothing but we have to apply the rate of 0. And switch on your calc, apply 0.40% here. 24. Second one, substandard. We have 3 rates in substandard, right? What are those 3 rates? 15, 20, 25. When to apply 15%? When to apply 20%? Unsecured infra. When to apply 25%? But here nothing is given. Tell me what should I do? Is it secured or unsecured? First of all, already I told you in the first class itself, banks always will give secured loans only. That means how much percentage? Into 15%. Sorry, 660. Next one, doubtful for 1 year. What is the percentage? 20. 2 years. 3 years. 3 years. Up to 3 years, 40% only. Sorry? More than 3 years? How very chititali? Do it into 100%. 600 into 100%. Calculated already. Yeah. For last asset. Into. Do it, no problem. She is expert in calculation. If you ask 1 plus 1 also, she will use calculator. That is her specialty. Total? That's it for 7 marks. For you, it is wow only if you in your exam, if any rates are just mismatched, done 0. Then you have to say wow. Even though wow, your result will be wow. Okay, correct. Is it main or additional question? Anyway, I am changing all this question pattern, but still okay. Copy the answer. Here, there are 2 points you have to remember. Point number 1, if nothing is given, we have to assume it as a secured. If there is no such criteria, we have to assume it as a other category. For example, in first one, they have given standard, but there is no details about agricultural or SME or commercial. Then you have to assume it as a others. In second, substandard is there, no data about secured, unsecured. You have to assume it as a secured. Yeah, you should remember those. If you take for unsecured, you will take 20 or 25. Answer is 100% wrong. It looks like easy because I am doing the problem and this is classroom. If it is exam hall, then should be next level. If you take any number instead of 25, you take 20%, your answer is wrong. You have to be very cautious while solving this kind of problems because very easy answer, but you have to write correct amount of percentages. If you know everything accurately, correctly, it will take hardly 1.5 minutes to get 7 marks. Otherwise, you will lose the same marks even within the same time. Yeah. If you need, copy it. Otherwise, copy. Manishi, are you able to understand? Yeah. Maggie, anything personal? I think already I told you this weekend exam syllabus is accounting for banking companies. Two more days, no? Friday and Saturday. Yeah, we can conclude the chapter. I think Maggie is not interested. Not at all, no? Yeah. Sir, in your main exam, there will be MCQs. I think you are aware of it. 15 MCQs are there, no? Yeah, where we have to answer those MCQs? In OMR sheet only, okay? Yeah, remember. I'm not kidding. In recent examination, many of outsiders, even still I'm getting messages, they've written on their answer sheet, not on OMR. They have not observed their OMR up to last exam. Last exam, they came to know some OMR is there. All marks are gone. All five papers. Five or six papers, I think. Yeah, is it completed? Done everybody? Kirti ma'am, are you drawing some chatabadi or yeah? No. Soumya, are you sleeping? Yeah, fine. Ma'am. Make it fast, yaar. We don't have time. Teju, bolo. Why are you laughing, man, always? You're spreading positivity. You only. Center person. Yeah. I won't help you out at all. Give me answer for it. Question number 3 or 4. What is 3? Yeah, 3 only. There is some twist is there. Yeah, observe very carefully and give me answer. there are 2 to 3 tricky points are there. Even though if your answer goes wrong, no problem at all. I'm not going to give any kind of prizes or such kind of rewards. Just do it. Where is Telugu batch Karnakar? Absent. Viswarup? Okay. Geetanjali, what is the answer? Correct. Chotu? 32. 40? Bootu. Samira, tell me. Yes, you are wrong. Tell me. Dilip, what is the answer? 30.30? That is wrong. Super. Yeah, I will help you out definitely because I'm so kind-hearted person. Listen, my dear kids. So, firstly, advance fully secured. They have not given whether that is performing, non-performing. Nothing but performing, substandard, doubtful, loss. They were given fully secured. If nothing is given, assume it as a performing asset only. If it is a performing asset, there are 3 rates, no? What are those 3 rates? 0.25, 1. Is it agricultural sector? Is it SME? Is it commercial real estate sector? That means we have to apply 0.28. Second one, already I told you this point 2 to 3 times. They told you overdue for 15 months, not NPA for 15 months. From overdue 15 months means up to 3 months NPA, remaining 12 months substandard only. Are you getting my point? So this will be substandard only. In substandard we have 3 rates: 15, 20, 25. 15 is for secured, remaining 2 is for unsecured. Here there is no data about secured and unsecured. If nothing is given, you should assume it as a secured. Means how much? Say 3. Next one, advance overdue for more than 2.5 but less than 3. It comes under Doubtful asset. What is less than 3 years? 40%. 10 into 40. Chittadalli. But there is some adjustment. Is there? Listen. Yeah. What is this? Yeah. Listen carefully, all of you. Advance overdue for more than 2.5 but less than 3. It comes under doubtful, no? Under doubtful we have 4 rates. For unsecured 100%, for secured 25, 40. They have given some additional data. The data is out of this overdue for more than 3, security is there of land and building valued 5 lakhs. Switch on. So 5 lakh worth of, hello, come on. Ranu, what is happening? Some ETV or Gemini? Ra. Sir, we know. So some security is there up to 5 lakh. That means the loan amount is 5 lakh. For that 5 lakh security is there. That means this is doubtful and security is there. Correct now? That means total how much? 10 lakh. Out of 10 lakh, 5 lakh is secured. Remaining 5 lakh is? Listen very, very carefully. So, out of this 10 lakh, we have divided into 2 categories, 5 and 5. 5 is secured, 5 is, what is the rate for secured portion? For what is unsecured first of all? 100 means 5. For secured 3 rates, no? What are those 3 rates? 25, 40. It comes under second category, 40. 5 into 40 means 2 plus 5. For loss asset, what is the last person? Unsecured, not recoverable. Loss asset, 100%, 20. 28 plus 3 plus 7 plus 20. Sorry? 28 plus 3 plus 7. What is it? This is 0.28. Yeah. 0.28 plus 3 plus 7 plus 20. 30.28. So problem is with this point only. I repeat this point. There is some doubtful asset is there. If doubtful, we have to divide into 2 categories. How much secured, how much unsecured. They are telling 5 lakh is unsecured. Balance 5 lakh is secured. For unsecured 100%. For secured we have 3 rates. 25, 40, 100. This comes under second category, no? 40%. Okay, no? So they can give this kind of question in your exam. Clear? So with this, concept number 3 is done. Now the time is 3:06 only. Our class is up to 4. We can conclude the chapter as well. Come on. Concept number 4. What is concept number 4? That means income recognition. You tell me, my dear students, normally what is income for banking companies? Interest only. They'll give the loans, they will charge interest. Yeah. For example, I have a given loan to Kirti. At the same time, I have a given loan to Vijay Mallya. Both the person has to give interest to the banker. But Vijay Mallya's loan is NPA, Kirti's loan is performing asset. Already you are aware of this kind of treatment in your incomplete records or single entry system chapter, irrespective of actual receipts or payment, we have to record. Accrual basis we generally follow. Even though Kirti and Vijay Mallya, if they are not paying interest in cash, I have to write on credit side of my P&L account. That's what my accrual basis says. That's what my accrual system is. But what happened? Kirti is paying on time, but Vijay Mallya is not paying from last 20 years. Even though I am writing on credit side, buy interest, what is the use on it? Banking Companies Act says, if you are recording your income, if that interest is on performing asset, that means it is like a Kirti, record on accrual basis. If that is a kind of NPA, looks like Vijay Mallya loan, don't follow accrual basis, follow cash basis. If you receive, write by interest, otherwise keep calm. Are you understood my point? Very easy, there is no concept of difficulty here. If that interest is related to performing asset, follow accrual basis. Definitely you will get that interest from Kirti, no problem. If that loan given to Pragati or else Vijay Mallya, we can't expect on time. So you have to apply cash basis. If they give, write on credit side of by interest. Otherwise ignore. Okay, no? So on this we have a small problem. First of all, copy it. Concept number 4 is that's it. One small problem is there. I think. అది మీరు ఊరు చేస్తాను ఆన్సర్ బుక్ ఇస్తాను కదా రాసుకుంటారా ఇచ్చేస్తా బుక్ చిట్టి తల్లి why people are laughing? Kavya ji. Okay. Aki, come on. Thanks for defending. Manishi. Where is Banu? Hi. So income recognition as per norms of RBI is very clear. If that interest is related to performing asset, we should follow accrual basis. If it is non-performing asset, we should follow cash basis. There is some logic or common sense is there. If it is NPA, if you record on accrual basis, your profit always increased, but in practicality you are not getting any amount from that particular customer. Completed. Then one small problem is there. Not yet completed. Okay, I will come. Yeah, all of you look at the screen. Please. Given below are details of interest on advance of a commercial bank. So performing assets are there, non-performing assets are there. On performing assets, there are 3 kind of loans: a term loan, cash credit. Just they have given loans names. Nothing is important for us. For us, interest earned, interest issued. Earned means Accrual basis, received means cash basis. Already I told you, if it is a performing asset, you should follow accrual. NPA should follow. Listen, this is performing asset, no? Tell me which basis I have to follow if it is performing asset. That means we have to follow these three rates. These rates are irrelevant for me. Second category, NPA. I should follow. I have to follow this rate. That means I have to ignore. That is the answer. 240 plus 1500 plus 300 plus 10 plus 24 plus 30. Done. Don't expect this kind of silly questions for 7 marks. They will write on loan basis. For example, they will write term loan, performing asset 240, non-performing asset 10. Second category cash credit 1500, 24, like that. You can see. Total is same anyway. Okay, no? Yeah, question number 4. Question number may get changed. Copy the answer. First of all, Ardhamainda. Nothing is difficult, sir. If it is a performing asset, we should, all these are performing assets. So I have to follow accrual base. Accrual means earned. This is irrelevant for me. Second category NPA, I should follow cash basis. This is irrelevant for me. Open, switch on your calci and add all those 6 things. 24 plus 1500 plus 300 plus 10 plus 24 plus 40. What is that? That's what answer is. You can see. They are writing on classification. Term loan, performing is it, non-performing is there, no? Term loan, performing is at 240, non-performing 10. Second one, cash credit, performing 1500, non-performing 24. Third one, bills purchased 300, 40, 340. Anyway, answer is same. Okay, no? Copy the answer. Maheshyam, what are you waiting for? How many concepts completed? First concept is bill discount, rebate on bill discounted. Second concept is secured loans versus. Third concept is RBI prudential norms, classification of assets and provisions required. Fourth concept is RBI prudential norms, income recognition. What are the remaining 2 topics? DICGC, ECGC. Last one, section number 17. Section number 17 is on MCQ, that's it. Ma'am, are you writing? Last person. I will come. Yeah, all my dear boys done. Backbench heroes. Yeah. Heroines. Yeah. Ma'am, completed. Acting చేస్తున్నారు ఆమె. Yeah, superb. Yeah, come on, let's move on to the next topic, DICGC and ECGC. Yeah, Sri Harika, listen. DICGC full form is Deposit Insurance and Credit Guarantee Corporation, and ECGC means Export Credit Guarantee. Yeah, these two are government related entities, corporations. Listen carefully. I will give you an example that will be enough. So recently, that means way back 1 year, in 2024, what happened? In 2024, especially in AP, Andhra Pradesh, post elections after TDP government, sorry, NDA government came into power. So central government has given 15,000 crores rupees for construction of capital. I think all of you aware of it. As of now, Andhra Pradesh has capital, but we don't have capital. That is the problem. So for construction of capital, we need capital, nothing but investment. Correct, no? So central government has given 15,000 crores rupees given grant to the AP, but reality is they have not given single rupee. Central government has given permission to take loan from World Bank of 15,000 crores rupees. Generally, World Bank will not give this much of huge amounts to a particular state government. They will give that much of amount to the state governments only if there is guarantee given by the central government. In this case, central government has given guarantee to World Bank. No problem, you can give loan to AP state government. If there is any default, I will repay it. That is the guarantee of central government. Now, who is lender? World Bank is lender. Who is borrower? AP is borrower. So central government is just a guarantor. Even the central government has given guarantee, World Bank will ask some amount of security. We have to give some amount of security to World Bank. We means AP has to give security to the World Bank. So what is the loan amount? 15,000 crores. For example, AP government has given all buildings, all government buildings as a security to the World Bank. For example, as on today, buildings value is 10,000 crores as on today. For example, AP government failed to repay it. Now what will happen? World Bank will take over all these buildings. Still we have to pay 5,000 crores more. This 5,000 crores will be repaid by the central government to the World Bank. Are you getting my point? Generally, central government will not directly give guarantee. That means Narendra Modi or Amit Shah, they can't give guarantee. So to give guarantee, they'll incorporate some kind of corporations. They are nothing but DICGC and ECGC. These two are central government bodies only. They are giving guarantee, means central government is giving guarantee only. They will not give 100% guarantee. They will give at least 40 or 50%. For example, in this case, how much payable? 5,000 share. Out of 5,000 share, 40% or 50% will be the DIC. That means out of 50 means 2.5 is guaranteed by the DICGC. Balance is unsecured. Are you able to understand, sir? Ignore this example. Let's come on. Let's go with small example. For example, one SME is there. SME means small and medium scale enterprise is there. Generally, every government will encourage SMEs. Okay, no? So, this SME has taken loan from SBI, amount of 10 lakh, for example, big amount, 100 lakhs. But SBI will, even though this SME is there, if they approach SBI bank for 100 lakh rupees, nothing but 1 crore rupees loan, SBI will not give loan because they are a new startup company. How SBI can give 1 crore to that SMEs? Even though they are a caliber persons like you, SBI can't give loan without any kind of their performance. Because they are a new startup, they can't give. In such a case, what government will do? Government will give guarantee to SMEs, to encourage SMEs. They will say, my dear SBI, you don't worry, you please give loan to that SMEs. We will giving guarantee of 50 or whatever percentage is there. Even though you can take security from SMEs. Definitely SMEs will give, for example, they give security as some land, example sake. At year end means this loan is on 1/4/25. Year end means 31st March 26. Bank has to revalue, same as secured, unsecured. You have to check what is our position. If I am checking, land value is, for example, 60 lakhs. What is the loan amount? 100 lakhs. What is the security value? That means how much still receivable? Out of 40 lakh, they have given. What is the guarantee? 50%. That means I can receive. Remaining 20 lakh is unsecured. Total secured how much? 20 lakh from central government. This land 60 lakh. Total out of 100, 80 is secured, 20 is unsecured. Clear, sir? DICGC and ECGC are central government and Reserve Bank of India subsidiaries or bodies. For encouraging SMEs or some kind of companies, they will give guarantee on behalf of those companies to the bankers. Even though guarantee is there, banker will ask securities from the borrower. When DICGC or ECGC has to pay, firstly banker has to realize the securities of the borrower. Still anything is pending, then DICGC or ECGC will come into the picture. One question is there, that is more than enough. Where it is? Question number 6. Very easy question, just listen. Balance outstanding, or there are two kind of loans, term loan, export loan. That is irrelevant, two loans, that's it, nothing more than that. First let us focus on first loan. What is the loan amount outstanding right now? That means think in bank point of view, how much receivable? DICGC, how much they covered? Securities held. What is the securities value? But we have to check realizable value, not original value. What is the realizable value? This 10 lakh figure, 15 is irrelevant for us. Revalued figure is important for us. As of now, we have to receive 35 lakh. But what is today's realizable value? That means out of 35 lakh, we can receive very comfortably 10 lakhs. Correct, no? How much still pending? out of this is 10 lakh is secured portion only. Out of 25 lakh, how much guaranteed by DICGC? This is also security. 40% means what is the balance amount? This 15 is here two secureds. This 10 and this 10. Total 20 lakh is secured, 15 lakh is unsecured. You tell me in second loan what is the outstanding amount? That means how much we have to receive? How much guarantee given by the corporation? Securities held 10 lakh, realizable value 8 lakhs. Which is important? 10 or 8? This 10 is irrelevant for us. Tell me out of 30 lakh, how much secured by the borrower? That means how much still receivable? The out of 22, how much guaranteed by ECGC? 50% means how much unsecured? Here secured means this 8 lakh plus this 11 lakh. Unsecured 11. That means secured is 19, unsecured is, add those two, you will get 30. Are you getting my point? Same thing. 35 is outstanding. Out of 35, realizable value 10, balance 20. Out of 25, so 40% covered, 10, balance is unsecured. Here also 50, 10, no, this side. 30 out of 30, 8 is secured, 22 is unsecured. Out of 22, 11, 11. This is enough. This is not required. Okay, no? Last concept. Actually, I have given notebook as well. Okay. Last concept, section number 17. One small provision is there in Banking Companies Act. Every bank, out of their year-end profits, available profit, they have to transfer 25% of its available profits to reserve fund. For MCQ, very, 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 very important. They are asking very, very frequently. This rate is for banking companies as well as cooperative societies. It will comes under audit. This is banking. For both those things, rate is same 25%. Where to transfer? Reserve fund. Copy this concept. Concept number 6 is missing, no? 5 also. You have written the concept at least. Concept 5. What is concept 5? Yeah. Write down then concept 5. DICGC and ECGC. What is full form of DICGC? Deposit Insurance and Credit Guarantee Corporation. ECGC means Export Credit Guarantee Corporation. DICGC and ECGC are governmental bodies. They will give guarantee towards loans taken by the companies. Write that example as well. So we have to apply that 40% only after reducing realizable value of securities. They will give you original value of securities. You should not consider that value. You should consider realizable value only. So here, what is the total security? 400, 4,000 plus 6,000, 10,000. Some security through land, some security is by DICGC. How much unsecured? 6,000. Total 10 plus 6, 16 equals to loan outstanding. Bharat? Last concept, concept number 6, section number 17, 17. So with this, our banking company's chapter is completed successfully. Fish or vegetables? Yeah. Are you leaving? No. My dear backbenchers, please close the windows. Is there any newcomers by any chance? Hi, Karunaka. After a long gap, yeah, I miss you. Please be seated. Yeah. Are you from this batch only? Okay. Yeah. What is your sweet name? Okay. Yeah, please be seated. Bro? Yeah. Okay, I knew you. Yeah. Next person. Tammudu. Okay. Yeah. Kaushika. Both are Kaushiks only. Yeah. Please be seated. Yeah. Actually, one chapter is already completed. So I can't do anything, but you have one option. You can go for YouTube videos. Yeah. TV is there, no? Yeah. Yeah. So that's it. So let me enter into second chapter of corporate accounting and audit. That is accounting for electricity companies. Already I told you in the second class of mine. So for me, accounting for banking companies, accounting for electricity companies, accounting for insurance companies are single chapter. Why? Because the weightage is 16 marks. 7 plus 7 plus 2. So already in previous session we opened 2 question papers. I promise you I'll open 5 question papers. So definitely I'll open remaining 3 question papers as well. So we covered June 25 and December 24, right? June 24 question paper, I'm opening it. Corporate accounting and audit. You can see MCQ number 5. A banking company needs to transfer a minimum of dash of its profits to reserve fund. That is concept number 6. Nothing but section number 70, 71 of 17 of Banking Companies Act. That is one MCQ. Next, coming to 7 marks question. Yeah, this question is from concept number 1. You have to find out rebate on bill discount. Actually, we have summer question, we can do it. So this is June 24 and December 23, syllabus 22. Again, paper number 10. No MCQ from banking, but already I covered this MCQ. This is audit MCQ, but I told in banking itself. So same percentage here as well. How much? 25%. Coming to problem. Yeah, this time they were not asked from banking. The one question is from insurance, one is from electricity. Yeah, that's it. That's all about previous 5 attempts question papers. Out of 5 papers, 4 times they asked question from banking companies. For you, they may or may not give. But for us, each and all three chapters are very, very important. That's why I told, for me, those 3 chapters are single chapter only. Okay, now? Yeah. Let me enter into second part of first chapter, nothing but accounting for electricity companies. This chapter is also very, very easy chapter. But few things we have to remember. That is the only problem, but still okay. But first of all, give your notebooks with your beautiful hands and give a heading with your cute handwriting. Accounting for electricity companies. Shruti, good afternoon. Yeah, thank you. Thanks for being here, physically and mentally. I hope so. Geetanjali, all okay? Yeah. Samira, what happened? You're acting so innocently. Yeah, done. Listen carefully. So, normally every company should comply with the Companies Act 2013. But for electricity companies, along with Companies Act 2013, there is another act called Electricity Act 2003. Every electricity company, first of all, electricity company means who are producing electricity, who are generating electricity power, they have to follow Electricity Act 2003. Don't write anything, just give heading and listen very carefully. I will give you time for writing. Okay. Already I told you, first 20 minutes are very, very important for each and every new chapter, where I will discuss the basics or background of the topic. Listen. So I think everybody of you using mobile phones, right? Okay, fine. Tell me, there is a service called prepaid and postpaid services. What is prepaid service means? We have to first pay, then we will use services. Postpaid means firstly we will use services, then we have to pay next. For example, I want to fly in Indian Airlines. Is it prepaid or postpaid? We have to pay, but otherwise they will not enter. Postpaid means first we have to use service, then we have to pay the amount. So in the same manner, electricity bill or electricity service is a postpaid service. I think first of all, do you know electricity? What is electricity? Yeah, this is electricity. Yeah. So electricity is a postpaid service. So even in our homes or else any commercial places, we can see we will use normally 1 month. After that, one person will come, they will generate the bill. We have to pay on due date. So that is a postpaid service. Yeah. Listen carefully. Again, same here also. There are only 5 concepts in this chapter. If the question comes from this chapter, majority, there are 99% chances are there they can ask only from these 5 areas. They can't go beyond these 5 areas. Area number 1, security deposit. Area number 2, depreciation. Area number 3, cost of capital. Area number 4, return on equity. Area number 5, these are the only areas they can test 7 marks question. Okay, no? Yeah. First one, concept number 1, security deposit. Just now we discussed electricity is a postpaid services. For example, I am producing electricity services and they are my customers. For example, all those 3 have started a startup company. So they purchased my electricity services. They used it for 1 month. So their first month bill is, for example, 20 lakhs. They are not paying on due date. Tell me what will happen. Is it profit or loss to electricity company? 100% loss. Already I have given services to that startup company. Similar kind of customers are there. For me, 100 customers out of 100, 99 customers are defaulted customers only. That means total investment is gone. So this is the scenarios where maybe electricity companies get loss. If I convert into prepaid services, it might not be work out for all the people, especially below poverty line people. They can't pay it in advance because their usage is very minimal usage. So that is the reason we can't go for prepaid services. We have to go for postpaid services only. If I go for postpaid services, there may be some bad debts like these 3 people. Tell me what happened. Think in company's perspective. Company means electricity company perspective. I have to give postpaid services. I'm ready to give postpaid services. What is the problem? There is a loss of default, like a bad debts like these 3 fellows. In such case, Electricity Act says, you don't worry. Whenever you are giving services to the new customer, please take some amount as deposit. Actually, this concept is there in some kind of corporate colleges in +1, +2. Actually, I can't reveal those colleges names, Chaitanya and Narayana. So in those what happened? Yeah, in those colleges, generally they will collect 3 or 5,000 from each student whenever they are giving admission. That amount is called caution deposit, CD. That deposit is not part of fees. Every student has to pay 5,000 at the time of admission, or 3,000 subject to correction. They have to pay some 3,000 at the time of admission. If anything loss happened or occurred because of that student, they will reduce amount from that caution deposit. If nothing is there, they will give you the full amount at the end of +1 or +2 whenever you are leaving the campus. Here also same. Whenever you are giving new services to new customer, whenever you are giving connection to new customer, take some amount as a deposit. If they defaulted in payment of bill, adjust the deposit amount. Actually, nowadays everybody has mobile phones, including beggars. But in olden days, there are no such kind of connectivity. Actually, my uncle, nothing but my father's brother is a Indian Army employee. So at that time, we had a landline connection. Still, I remember at the time of taking connection, we deposited 1800 rupees. I asked that person whenever he is taking that money, why you are collecting this 1800 rupees? He said, same thing, whatever I told you. If we unable to pay the bill amount, they will adjust that amount to the bill amount. For example, our telephone bill is 800 rupees. Our deposit is 1800 rupees. If we are not paying any amount, what they will do? They will adjust that 800 from that 1800. They will disconnect your connection. Here also same. Whenever you are giving connection to a new customer, take some amount as a deposit. Which deposit? Security deposit. What is security here? Security means if they defaulted, I can use that security. If they are not defaulted throughout their life, I will give that amount to back whenever they don't need any services from me. Just like your caution deposit. What is caution deposit concept? If nothing loss occurred because of any student, they will give entire amount back at the time of relieving. Here also same. If there is no default in payment until your last services, they will give your money back. That is security deposit. Still, I can give one more example. For example, dairies, milk dairies. Especially in Vizag, there is a dairy called Vishaka Dairy. In Vijayawada, there is a dairy called Vijaya Dairy. In Guntur surrounding, there is a dairy called Sangam Dairy. All these dairies are generally they focus on district level. You can't see Vishaka Dairy for shops in Guntur or Vijayawada. Similar vice versa. Actually, you can observe some number of shops like Vijaya Dairy in Vijayawada, Guntur, some places. But you can't see 100 or 200 shops at single area. You can maximum you can observe 2 to 3 shops in a single area, because they can't give a shop to everybody. For example, if you want to start a dealership of Vishaka Dairy or Vijaya Dairy in Newsweed, you have to pay 2 lakh rupees as a caution deposit to that particular Vijaya Dairy. Then they will give you products every day. You have to sell it and give money back to them. You will get some amount of commission. Whenever you don't need the dealership, you will get the 2 lakhs back. That is security deposit for the Vijaya Dairy people. Here also same. Whenever electricity company is giving a connection to new customer, they will charge some amount as a security deposit. What is the purpose of the security deposit? Generally, electricity is a post-paid service. There is a loss of bad debt. To cover that bad debt risk, they will charge some amount as a security deposit. So concept number 1, security deposit. What is security deposit? And there is some electricity bill. It is a sample copy. You can observe. Where is the name? I think there should be. Where it is? Okay. Yeah. It's related to some person who is irrelevant for me. Yeah. Okay. What happened? Yeah. So you can observe security deposit 1200 rupees. Actually, this bill belongs to case Varnalata. It is a Google takeout. Okay. So 1200 rupees is a security deposit. What is the current month bill of Swarnalata? 983 rupees. If she pays this 983, no problem at all. If she defaulted, what will happen? They will adjust this 983 from this 1200. Then there is no such kind of bad debt from Swarnalata. Then electricity company can feel happy because no bad debt. Okay, no? So whenever you are paying this deposit, you will get this kind of receipt from company, not relevant for our exam. If you need refund, you can make an application, then they will disconnect your services and they will give your money back. Now tell me, here who is taking security deposit? Electricity company from customers. Now think with your accounting brain. Whenever electricity company is taking deposit from the customer, think with your accounting brain, is this income or expenditure or asset or liability? 100% liability only. Why liability? Whenever I got the deposit, either I have to give services to that customer or else I have to refund their money back. Whenever an obligation is there, already I told you so many times in your group 1 accounting, rights or assets, obligations or liabilities. Now obligation is with the electricity company. What is that obligation? Either they have to provide services or else they have to refund their money back. This is our obligation, that is our liability. And use your common sense if you have, and journal entries. Tell me, what is journal entry at the time of receiving security deposit? You are receiving cash, no? So bank account debit to security deposit account. That's it. On receipt of deposit, bank account debit to security deposit account. What is the logic? Why you are debiting bank account? I am receiving it. Why you are getting security deposit account? That is my liability. You tell me. That means in simple sense, we have taken loan from customer, I can say. It is similar to loan only. Definitely, whenever that is a liability, we have to pay interest, obviously. Who has to pay interest? Company to customer. But in practical sense, we don't pay, but we have to write due entry first of all. What is due entry? This is due entry. Interest account debit to interest accrued on security deposit account. Accrued means we are not yet paid. That is payable amount. So first entry on receipt. What is the entry? Bank account debit to security deposit account. Second entry, interest entry. What is interest entry? Interest account debit to interest. All of you can participate. There is no kind of GST or SGST and customs duty. You can participate it. Yeah, I already you know that I'm very much expert in Sanskrit. You know why I am not using it, because we are on live. So second entry for making interest. What is the entry? Interest account debit to interest accrued on security deposit account. Third one, actually now electricity company has to pay amount to the customers. Normally we use it to see, or we can see, customers will pay bill to the company, but we can't see electricity company will come to each and every home, they will pay interest. Instead of paying, they will adjust your bill. For example, here what? For example, here Swarnalata deposit is 1200 rupees. Imagine interest rate 10%. How much 1200 into 10% means? 120. They will not pay 120 to Swarnalata akka. What they will do instead of? In next month, for example, next month bill is 800, they will reduce 120 and they will charge only 680. Are you getting my point? This is called adjustment of bill. On adjusting interest accrued on deposit in consumer bill. What is the entry for it? Here credited, no? Here debited. Interest accrued on security deposit account debit to. Here sales means services only, nothing more than that. These are the only 3 entries in this concept number 1, nothing more than that. Very, very easy concept. Concept number 1, security deposit. First of all, why electricity companies will take security deposit? What is the reason behind it? Why? Because this is a post-paid service. There is a chance of bad debt. So instead of overcoming that bad debt risk, Electricity Act says take some amount as a security deposit. How much that is irrelevant for us. Whenever you are taking, what is the entry? Bank account debit to security. Why you are debiting bank account? Because I am receiving cash. Why you are creating security deposit account? That is my liability. Second one, who has to pay interest? Who has to pay interest? Electricity company to the customer. What is the entry for it? Interest account debit to interest accrued on security. Why you are debiting interest account? That is our expenditure as per rule number 3. Why you are creating interest account? This is also liability. We have to pay. What is the third entry? Instead of paying, we are adjusting. What is adjusting entry? Interest accrued on security deposit account debit to. Here sales turnover means consumer bill services only. So very basic thing. Only 3 entries. First entry is receipt. Second entry interest due. Third entry adjustment of that interest. Use your common sense. Deposit means what is our liability only. When receiving, what is the entry? Bank account debit to security deposit account. What is interest due entry? Interest account debit to interest accrued on security deposit. What is third entry? Adjusting that interest. What is the entry? Interest accrued on security deposit account debit to. Here what happened? Credited, debited, completed, closed. First entry bank to deposit. Second entry interest account debit to interest accrued on deposit. Third entry interest accrued on deposit account debit to sales turnover. So every entry is tallied. Only 3 entries from this concept number 1. Are you all clear with it, Andy? First of all, tell me what is our chapter name? Accounting for electricity. How many concepts we are going to discuss? What are those 5? Security deposit, depreciation, cost of capital, return on equity. So first one is tell me, is it asset or liability or income or expenditure or profit or loss? Liability only. So how many entries we have to write here? First entry is at the time of receipt of deposit. What is the entry for it? Bank account debit to security deposit account. Why you are debiting bank account, sir? You are receiving cash through bank. Why you are creating security deposit? That is our liability. Second entry at the time of creation of interest. What is interest entry? Correct. Correct. So why you are debiting interest account? Because that is my expenditure as per rule number 33. Rule number 3. Why you are creating interest account security deposit? This is also liability. What is third entry? We have to adjust that interest in a bill. What is the entry? Interest accrued on security deposit account debit to. That's it. Concept number 1 is done. Apart from this concept, remaining all you have to remember. All these you have to remember. I will tell you. Don't worry about it. This is the only concept. Some accounting is there. Remaining all are very easy and no concept is hidden in remaining concepts. Yeah, write down. First of all, copy. Yeah, Sunday is exam day. Syllabus is 25 marks from our banking companies. So 2 questions which we discussed in our class only, and 5 MCQs. 5 MCQs, all 5 from concept number 3. What is concept number 3 in banking companies? I asked all questions from the provisions amounts. Okay, no? You can answer main descriptive questions in easy manner because already we covered those 2 problems. I think today would be the last class on YouTube live. From tomorrow onwards, we'll go with recordings. Then it will be more friendly. Where is Soumya? Yeah, hi. Spandana, are you there? Sir, complete banking companies as soon as possible. That means by tomorrow evening, your banking companies should be completed. If you don't have time, sit on Sunday. After examination, prepare all those questions. That means by this weekend, your banking company should get completed in all aspects. In MCQ, descriptive, theoretical part, in every area. Now your question or doubt is, where is material? I knew that. Notebook undi kada. That is enough right now. Go with that concept. If you need questions, you can get it from old books. I think we have some old materials. I will tell you to distribute at least for 2-person single book. Yeah, concept number 1, security deposit. Kavya garu, please copy that pic as well. Yeah, sure. Chittidali, what happened? Kirti? Only three entries. First one is at the time of receipt of deposit. Second one is at the time of creation of provision on interest, nothing but interest due entry. Third one is adjustment of that interest. What is receipt of deposit entry? Bank account debit to security deposit account. Second one, interest due entry, interest account debit to interest accrued on deposit account. Third one, adjustment of that interest in bill of consumer. So entry would be interest accrued on security deposit account debit to sales turnover. Here sales turnover is nothing but bill services rendered only. Is it done, sir? Mahesh M. స్టాఫ్ రూమ్కి వెళ్ళు, బుక్స్ కార్నర్ ఉంటుంది కదా, పేపర్ నెంబర్ 10 కార్పొరేట్ అకౌంటింగ్ ఆడిట్, టేక్ వన్ బుక్. Yeah, all of you look at question number 1 is on your screen, related to the concept number 1, nothing but security deposit. Consider the following information provided by ABC Power Supply Company Limited. So the company is electricity company, so we can observe the same by reading that company's name itself. Security deposit received from a customer on 1/10/2020 for 2 lakh rupees. So they are receiving how much? What is the date of receipt? What is the entry on the date? Bank account debit to security. How much? Done. Interest rate applicable was 8% for 2021, 9% for 21-22. Different rates, no issue. So first of all, we received a deposit on 1/10/20. What is the next balance sheet date? 31st March 21. How many months? 10, 11, 12, 1, 2, 3, 5 months. So what is the bill amount? Sorry, not bill amount, deposit amount, 2 lakh rupees. So 2 lakh rupees into what is the interest rate for current year? 2 lakh into 8% into 5/12. So here we receive deposit only on 1/10/2020, not on year beginning. So we have to give interest only for 5 months, not for entire 12 months. So how much? What is the entry for it? Interest expense account debit to interest accrued on security deposit account. Next, what happened? First of all, the accrued interest for the year is adjusted against the bill. Of course, they'll adjust as per our expectation. When they will adjust? For the immediate next quarter, I will tell you what to do. Journalize the above transactions. Journalize means they are asking you to write journal entries. So you also give a heading. Let's write together. Question number 1, electricity companies. Or else just listen and please help me out. So what is the question number 1? So what is the date of receipt of deposit? 1/10/20. What is the entry on it? Bank account debit to security deposit. How much? 2 lakh rupees. So this is the first entry at the time of receipt. Next, what we have to write? Entry for interest due. When we have to pay interest generally? At year end only. What is the year end date? Next March. Next March means 31st March 20. We know the interest entry. What is interest entry? You can write interest account debit to interest accrued on security. How much, sir? We know interest rate. How much interest rate? What is the deposit first of all? Can I write 2 lakh into 7%? No. Why? Because it is only for 5 months. We received on 10th. So 10, 11, 12, 1, 2, 3. 5 months only. So 2 lakh into 7% into 8%. 8% into 5/12. Sorry? Are you sure? 6 months, no? Yeah, 6 months. 10, 11, 12, 1, 2, 3. 6 months. How much? 8,000. So we recorded receipt entry, second entry, deposit entry. What is the next entry? Adjustment entry. Look at the question. When they are adjusting? In the immediate next quarter. Already we had a discussion of quarter in banking companies, concept number 2. Am I right? Yeah, concept number 2. There is a question with respect to shares. So quarter means how many months? 3 months. What is the next quarter then? April, May, June. Nothing but 30th June 21. This is the next quarter. What is entry for adjustment? Interest accrued on security deposit account debit to sales turnover. How much? Entire 8,000. First year is completed. Next year, what is next year? What is the next entry? When it will comes next entry? Second year ending. What is second year ending? 31st March 22. What is entry? Again interest entry. What is interest entry? Interest account debit to interest on security deposit. How much deposit amount? 2 lakh. What is the percentage? 9%. Superb. Interest rate has been changed. Excellent. But here full year, not 6 months. Full year means 18,000. Again we have to adjust in next quarter means again same. Next 3 months. 30th June 22. What is the entry? Interest accrued on security deposit account debit to sales turnover account 18,000. That's it. Your answer is completed. You can write n number of it, but 2 are enough. Are you getting my point? First, I recorded entry for receipt. What is the entry? Bank account debit to security deposit account. Second entry is interest due entry. When to record interest due entry? Year end. What is the year end? 31st March 21. How to get it? Deposit into interest rate. But what happened? We received only up to 6 months only. How 6 months? 10, 11, 12, 1, 2, 3, 6 months only. So 2 lakh into 8% into 6 by 12, nothing but 8,000. What is the next entry? So we have to adjust the interest in a sales turnover. What is the entry first? Interest accrued on deposit account debit to. Sir, what is the date of this entry, sir? We have to, they'll tell you, they will adjust in next immediate quarter. What is the immediate quarter for March? 3 months. April, May, June. For next year, when we have to record entry, again interest entry. When is interest entry? Year end. What is year end? 31st March. What is the entry? Same entry. Interest account debit to interest accrued on security deposit. Here, interest rate has been revised. They are giving that 9% in 21-22. 2 lakh into, why I am writing here 6 by 12? Because here it is with us for entire year. So 18,000. Next immediate quarter, 30th June, we are adjusting it. Entry is interest accrued on deposit account debit to sales turnover. Answer is done for 7 marks. But you have to give working notes for this and this. Are you able to understand, sir? So what is our concept number 1? Security deposit. So how many entries generally? First entry is at the time of receipt. Second entry is interest due. Third entry is adjustment of interest. What is first entry for receipt? Bank account debit to security deposit. When to record this entry? Whenever you are receiving, that's it. Second entry is interest due. What is interest due entry? Interest account debit to interest accrued on. When to record this entry? Balance sheet date. Correct, no? Third entry. What is third entry? What is adjustment entry? Interest accrued on security deposit account debit to sales. When to record this entry? They will tell you. Maybe in your main exam, they tell you they will adjust after 6 months. Then you have to write after 6 months means you have to count. After March, 6 months means April, May, June, July, August, September. 30th September 2021, whatever it is. They will tell you. You have to find the date. They are telling us immediate quarter. Immediate quarter means 3 months. 3 months means April, May, June, 30th June. What is entry? Interest accrued on deposit account debit to first year comes. Second year again we have to repeat this entry. Why I am not repeating this entry? Receipt is only once in a lifetime. So this entry I have to repeat it. When to repeat it? Next balance sheet date. Next adjustment. Done. You can write next year, but this is enough. 2 years. Are you getting my point, sir? You can expect same question in your main exam as well. Okay, no? Yeah. Copy. Question number 1. What about narration, sir? Is it required in examination? If the same question asked in your exam, is narration required or not? If you need marks, required, otherwise not required. Tomorrow I will check your notebooks. From tomorrow onwards, I will be back. Okay. Record it. Yeah, fine. So, out of 5 concepts, successfully we completed concept number 1, nothing but security deposit. Concept number 2, depreciation. I think you all are expert in depreciation. SLM, cost minus your value by life into 100. Correct, no? Cost of asset minus your value by expected life of asset. Yeah, correct. Listen. Normally we know the depreciation concept. Tell me with your accounting brain, we have different methods of depreciation, right? Tell me two methods apart from SLM and WDV. Sinking fund, blinking fund. No blinking. Annuity method, sum of years digits method, number of units method. So n number of methods are there, but in India we are majorly using SLM and WDV. Okay, we follow WDV for our convenience. And tell me, for example, a Geetanjali, he started a business, so she bought one asset and she decided to follow WDV method. Definitely she has to take some percentage, right? 10 or 20 or 30. Who will tell that percentage to Geetanjali? Who will tell that percentage to Geetanjali? Nobody will tell. She has to decide based upon her usage, her expectations, her expected usage, life of asset and scrap value, whatever it is. Generally, in our sole proprietorship or partnership, business entities will decide rate of depreciation. But coming to electricity companies, you are not right person to decide depreciation rate. Act itself has given some depreciation rates. They have given some list of depreciation rates. So you have to remember all those rates. I think we have some 20 or 30 items and rates. There is no concept on it. You have to remember it. No other option with you. I will show you the list. These all are assets names and depreciation rates. You have to remember all these rates. In electricity companies, selecting method of depreciation is not in the hands of company. Selecting the rate is also not in the hands of company, because Act has given rate of depreciation. Every company should follow these rates. They are telling asset names and rate. You have to follow these rates only. So how to remember these rates? Even I don't know. You have to remember it. But that is not easy to remember all these rates. But if you observe last 10 items question paper, they have not even tested even one time as a 7 marks question. Once they have tested an MCQ. Even I am not expecting for your attempt also. Still, I don't want to take a risk in the coaching session at least. Let's see. They are giving assets names. First one, land under full ownership. If that is your own land, what is the rate of depreciation for land normally? No depreciation, 0%. If that is a lease land, definitely we should depreciate it rate of 3.34%. Who has given this rate? Act only. Which Act? Electricity Act 2003. Next one, plant and machinery in generating means electricity generating stations, rate 5.28. Cooling towers and circulating water system, all these related to electricity only, 5.28%. Hydraulic machines, 5. All these color in 5.28. These are 3.34. These are 0 or 100%. And buildings and civil engineering works, 3.34. If it is a temporary wooden construction, 100%. Transformer substation equipment, 5.28. Switch gears and cable connections, 5.28. Lightning arrestor, 5.28. Batteries, 5.28. Overhead lines, 5.28. Electricity meters, 5.28. Self-propelled vehicles, that means vehicles which runs on their own, 9.50. ACs, static AC, 5.28. Portable AC, 9.50. Street light fittings 5.28, furniture 6.33, motors on lease 6.33, machinery on lease 9.50, communication equipment 6.33, IT equipment 15%, any other assets 5.28. We have 23 assets altogether, including other assets. So they have given at actual majority rate is 5.28. We have 4 rates, I think. One is 5.28, 3.34, and 9.50, 6.33, 0, 100. 0 is only for one asset, that is own land. 100% is only for one asset, temporary wooden construction. 15 is only for one asset, that is IT equipment. These are the unique rates. 6.33 only for 2 assets, 3 assets. One is furniture, second one motor on lease, third one communication equipment. Remaining all are either 5.28 or 3.34. 3.34 is for lease land, buildings and civil engineering works, and only 2. That's also. Remaining all are 5.28 percentage. 9.50 is self-propelled vehicles, portable ACs, and machinery on lease. There is no shortcut to remember all these rates. So at least for the sake of your convenience, I divided into different color formats. All are similar rates in one color. But there is no concept on it, how to remember. Why, if you ask me why 3.34, why not 4.34, I don't have answer, because it's given by the act itself. Some people will say, sir, why 5.28? What is the criteria for that percent? Ask act. I can't do anything. I'm here just to tell what is in act. That's it. I will come. Please wait for one more day. Okay. So this is the concept number 2, depreciation. They will ask you weighted average depreciation. If they ask a question, formula is total depreciation by total asset. You should ignore free land, that means own land, because no depreciation on it. Till now they have not asked a question from this area. Even for you also I am not expecting, but I told you. So while coaching is our first step, preparation is second, revision is third. I will tell you with 100% confidence on day before exam you can skip this area, but right now I can't do that. That is not ethics. So right now this is also important for us. Please try to remember in your own style. Maybe you can create some cheat codes or whatever it is if you observe it. Okay, but in examination point of view, please don't feel it as a pressure. How can I remember all those things? Don't worry. I will tell you how to do day before exam or else before your revision exams, whatever it is. Right now, just take it as a one of the concept. Don't take pressure to remember all those things. Even you can remember it, but very easy. Let me tell you how to remember it. First one, 0% is only for one asset. What is that one asset? 100% is only for one asset. What is the logic? Temporary wooden construction, temporary only, that is will be only for short term. 100%. 15% is only for one asset, that is software persons, IT equipment. 3 rates, 3 assets already done. And let's focus on unique rates. 3.34, lease land, buildings and civil engineering works, only those two. 3.34, what are those? Lease land, buildings and civil engineering works. Next one, next unique rate is 6.33 for 3 assets, furniture, motor on lease, communication equipment. Next rate is 9.5. Machinery on motor on lease is 6.33, machinery on lease is 9.5, portable AC 9.5, self-propelled vehicles 9.5. That's it. Remaining all are 5.28. That's it. If you are unable to remember also, don't worry. Nothing will happen, because they will not ask a question in your exam, main exam. Maybe they can ask in your weekend exams. Okay? Yeah, that's it. Concept number 2. We have one problem on it. But they will ask you weighted average. How to do it? So weighted average rate of depreciation, normal rate formula total depreciation by total cost of, we should ignore own land. Why should we ignore own land? Because land is a non-depreciable asset. So we should ignore depreciation, we should ignore cost also. But what is the difficulty in concept number 2? We have to remember all these rates. Still, let's try to remember at least half of those rates. So I don't open it. Let's try whether are we able to remember or not. 0% is only for own land. They can say freehold land. That means own land. Second one, 100% is for temporary wooden construction. Number 3, 15% is for IT equipment. IT related communication. Communication is a 9.50. Am I right? Yeah, no. 6.33. Two more rates are there with that. Motor on lease and furniture. 6.33. And 3.34 is only for 2 assets. Lease land, buildings and civil engineering. Personally, I am against to this remembering concepts. For example, if you qualify your CME, is it necessary to remember? You can easily open Google and know that you can apply it. Why should I remember all this nonsense? For journal entries or else accounting, you should aware of it. What is the concept behind remembering? Nothing concept here. Why should I remember? Why should student remember? Why should waste his space in the brain for this nonsense? I don't accept at all this kind of things, but I can't do anything because that is not in my hands. Okay? Yeah. Even I can give some chart for all these rates. You can use cheat codes, but I can't do anything. That's not my personality. So what is the final thing? Weighted average rate of depreciation. What is the formula for it? Total depreciation by total. But we should ignore land and land cost and land depreciation. One question is there. Just let's try. Are we able to do it or not? Question number. Yeah, just tell me. Land under full ownership. What is the rate? Into 0%. Second one, land under lease. 3.34. Buildings and civil engineering works. What is the rate? 3.34. Temporary erections. Temporary wooden structures. Temporary, no. 100 per IT equipment. Self-propelled vehicles. Self-propelled vehicles, man. 9.50 is for 3 assets. Self-propelled vehicles, static ACs, portable ACs, machinery on lease. So, how much? 9.50. Portable AC, 9.50. Next one, other than motors, if anything, 5. What is that? Motors on lease, no? 7A. Sorry? Where it is? 3B. Yeah. I think everything is missed. Tell me one by one then. Land under lease, how much? 0. Land under lease, how much? 3.34. Buildings and civil engineering works, 3.34. Railway sidings, that is. So that's what we are discussing. So depreciation rates has been given by the Act itself. Some rates are there. Already I told you this is not that much important. Don't take any pressure. If you ask me personally, they will not test question from this area. If that is important for your attempt, I know how to deal with it. So right now, just let's do it, this question. So land under full ownership, what is the rate? into 0 means no. Land under lease 3.34. Buildings and civil engineering works, how much? 3.34. Railway siding, that means they are constructing some civil engineering only, no? Construction means again same rates 3.34. Temporary wooden structure, how much? 100. IT equipment, self-propelled vehicles. This rate is for 3 assets if I am not wrong. What are those 3? Portable ACs, self-propelled vehicles, motors on lease. Second one, portable AC, same rate, no? 9. Motors on lease is 9.50. Machinery on lease is 6.33. You can check it out. Motors on lease 6.33. Machinery on lease 9.50. That means we have to write here 9.50. Next one. Sorry, motors, how much? Motors. For motors is 6.33. Correct? Why? Because I don't remember this all rates. That's why I'm confusing. Because already I told that's irrelevant for me. If I want, I will just Google it. That's it, man. If there is any concept, you have to for what you call remember it. Motor only 6.33. So the question is firstly motor only, no? Other than motor is 9.5. Motor on lease is 6.33. Communication equipment 6.33. Next one, furniture and all those things, nothing is given. All other things 5. Cooling towers 5.28. Plant and machinery 5.28. Hydraulic works 5. Transformers 5.28. Lightning arrestor 5.28. Meters 5.28. Static ACs 5.28. Street light 5.28. Vehicles other than vehicle self-propelled 5.28. So if you remember at least some rates, remaining all are 5.28. After this question, I knew some important rates. So what are those important rates? First one is land. There are 2 rates for land. One is 0, second one is 3.34. One is 0 if that is a own land or freehold land. One is 3.34 if that is a lease land. Second one, 100% rate is there. This 100% is for temporary wooden structure. Third one is 15% is there. This is also IT. These 3 rates are single rates. They are only for one kind of assets. And some rate is there, I think 3.34. Correct? This is only for 2 assets. 3.34 only, no? For which assets? Lease land plus buildings and civil engineering works. 3.34 already have written here. Lease land plus buildings and civil engineering works. This is only for these 2 assets. And third one is some 9.50 is for 3 assets if I am not wrong. I remember portable AC. What else? Apart from portable AC? Portable AC, machinery on lease, self-propelled vehicles. That's I forgot. Self-propelled vehicles. Next one. Machinery, not motors. Machinery on lease 9.50. One more unique rate is there. 6.33. This is motors on lease. Sorry, motors on lease. Machinery on lease is 9.5. Motors on lease is 6.33. What else? What is that? Where it is 6.33. Communication equipment and furniture. For these 2, 6.33. For remaining 5.28. If you remember, otherwise no problem at all. So just remember and listen. That's it. Done. No, that problem is not enough right now. We'll discuss tomorrow that problem and focus on next concept. This is we can do and little bit interesting as well. Cost of capital. So I think in FM there are, what is the chapter right now running? Cost of, yeah, thank God. Cost of capital. Tell me, what is the cost of capital? Yeah. So there is some formulas, all those things in your FM, no? Here we should not apply that knowledge. Here how to find out cost of capital? Again given by the act itself. I think you know, in each and every company capital or each and company's money, some amount of debt will be there, some amount of equity will be there. You tell me, as a financial management student, is debt is better or equity is better? Which is better? If you say debt is better, I have some answer. What is my answer? We need to pay more interest. Then your profits will get reduced. If your answer is equity is better, again I have an answer. What is my answer? If equity is more, ownership will get diluted. Our EPS will get reduced. Then what should I follow? You have to balance both debt and equity. That is called debt equity ratio. How much debt equity ratio should be generally? That is depend upon their company, their discretion, their choice. Nobody will tell you you should maintain this much of this much of equity. That's you have to decide. But in Electricity Act, that is not in your hands. Act itself says your debt equity ratio should be 70:30. That means your debt should be more. Out of your 100 rupees capital, you should have 70 as debt, 30 as equity. That means Act says maintain more debt and less equity. Normally, if debt is more, we should pay more interest, no? And I'm giving you an open question to all of you. What could be the intention of the lawmaker by giving more debt and less equity? What could be the reason behind it? They have to pay more interest, no? They will get less profit. Even then, Act says maintain this ratio only. What could be the reason behind it? Control. They can control ownership if they follow 4159 or else 4951. They can control it. Huge gap, no? 70 debt, 30 equity. When they lose control now. At least are you able to understand my question? What is my question? Their Electricity Act says maintain more debt. If you have 100 rupees, out of 170 rupees should be debt. Take loan from some people. 30 should be your own. What could be the, what is it? Encourage? How can you say encouragement? You have to pay more interest on it. Anybody in the class? Why should Electricity Act says 70 rupees as debt, 30 as equity? Listen, reason is very genuine and very honest. For example, 10 rupees debt, 90 rupees equity. That means out of 100, majority will be with the shareholders, equity shareholders. Whenever out of 100 rupees capital, 90 rupees is with the shareholders, what they will expect? They will expect more profits, more dividend. Now company has to satisfy shareholders. because they'll expect a dividend from the company. To give dividend, they have to increase their revenue. How they can increase their revenue? They have to increase the power bills. If they increase power bills, who will affect? Normal common man will affect. In common man, there should be average or rich people or poor people, middle class. There may be BPL persons are also there. BPL means below poverty line people also there. Definitely, whenever to satisfy the shareholders, company has to charge more from the normal common people. They have to suffer just because of this ratio. That is the reason Act says no, maintain more debt, then they will become. They can't expect. If they don't want, they can sell their shares and they can go back. So you can observe how honestly Act itself here they are telling 70:30. Why they are telling us 70? Debt means very simple. If equity is more, what is going to happen? If equity is more, what is going to happen? Equity shareholders will expect more dividend. To give more dividend, they have to earn more profits. To earn more profits, they have to increase their electricity charges. If they increases, what will happen? Common man will suffer by paying more. They have to pay more out of their less revenue. That means only if we increases more equity, it impacts entire society or entire state or entire country or one set of community. They have to pay more. If equity is less, what is going to happen? If debt is more, they can't expect more profit. If they are not expecting more profit, no need to increase our current bills. If no need to increase our current bills, people will happy. Are you getting my point? That is the reason Act says you should follow only 70:30. You should not increase. I can see here. Generally, debt equity is the option of the company normally, but in electricity companies, Act says it should be only 70:30. That means in 100 rupees of capital, 70 should be debt, 30 should be equity. Why debt more? This is the logic. If equity increases, what will happen? That's what I told you till now. But for example, listen carefully. I am running electricity company. My total capital is 100. My debt is 70. Equity 30. Is it correct? Obviously correct. Okay, na? After some point of time, so she has given me loan. Okay, no? So I repaid that entire amount to you. So I repaid 50 rupees to her. Now what happened? My debt will be 20. Equity is 30. Here what happened? Ratio again changed. Now equity is increased. But it is not intentionally I have increased. What happened here? Because of decreasing of debt, ratio will be changed. In such case, how much equity is more here? 10 rupees. This is not intentionally I have increased. Why it is increased? My original debt is 70. I repaid 50. So it becomes 20. It is same. In such case, this extra 10 rupees, you should assume it as a loan only. You should not treat it as a equity. If by any chance, if your equity is increases, then debt, you should assume it as a loan, not as a equity. Here this 10 is assumed it as a loan because you should not give power to the equity shareholders. If you give power, what will happen? They will increase more dividend. To give more dividend, we have to increase charges. If we increase charges, who will affect? Common man will affect. That is the main criteria behind it. So you can see here. That is the note point. In any case, equity increases more than 30%. Such excess shall be considered as a normative, means that is not an original loan, but we have to assume it as a loan. Okay, no? Not actual loan, but we are assuming it. That is called normative. That is not a real loan, but we assume it as a loan. Okay, na sir? Yeah. And concept number 2 and 3 are done. So here how to write this concept number 2. I will tell you, give a heading. depreciation concept number 2. Write these 4 points. In electricity companies, selecting method of depreciation is not in the hands of company. Second point, selecting a rate of depreciation is also not in the hands of company, because Act has given rate of depreciation. Write these 4 points as it is. So that's what we are discussing. So depreciation rates has been given by the Act itself. Some rates are there. Already I told you this is not that much important. Don't take any pressure. If you ask me personally, they will not test question from this area. If that is important for your attempt, I know how to deal with it. So right now, just let's do it. This question. So land under full ownership, what is the rate? Into 0 means no. Land under lease 3.34. Buildings and civil engineering works, how much? 3.34. Railway siding, that means they are constructing some civil engineering only. Construction means again same rates, 3.34. Temporary wooden structure, how much? 100. IT equipment, self-propelled vehicles. This rate is for 3 assets, if I am not wrong. What are those 3? Portable ACs, self-propelled vehicles, motors on lease. Second one, Portable AC, same rate no? 9 point. Motors on lease is 9.50. Machinery on lease is 6.33. You can check it out. Motors on lease 6.33. Machinery on lease 9.50. That means we have to write here 9.50. Next one. Sorry. Motors, how much? Motors. For motors is 6.33. Correct? Why? Because I don't remember this all rates. That's why I'm confusing. Because already I told that's irrelevant for me. If I want, I will just Google it. That's it, man. If there is any concept, you have to for what you call remember it. Motor only 6.33. So the question is firstly motor only, no? Other than motor is 9.5. Motor on lease is 6.33. Communication equipment 6.33. Next one, furniture and all those things. Nothing is given. All other things 5. Cooling towers 5.28. Plant and machinery 5.28. Hydraulic works 5. Transformers 5.28. Lightning arrestor 5.28. Meters 5.28. Static ACs 5.28. Street light 5.28. Vehicles other than vehicle self-propelled 5.28. So if you remember at least some rates, remaining all are 5.28. After this question, I knew some important rates. So what are those important rates? First one is land. There are two rates for land. One is 0, second one is 3.34. One is 0 if that is a own land or freehold land. One is 3.34 if that is a lease land. Second one, 100% rate is there. This 100% is for temporary wooden structure. Third one is 15% is there. This is also IT. These three rates are single rates. They are only for one kind of assets. And some rate is there, I think 3.34. Correct? This is only for two assets. 3.34 only, no? For which assets? Lease land plus buildings and civil engineering works. 3.34 already have written here. Lease land plus buildings and civil engineering works. This is only for these two assets. And third one is some 9.50 is for three assets if I am not wrong. I remember portable AC. What else? Apart from portable AC? Portable AC, machinery on lease, self-propelled vehicles. That's I forgot. Self-propelled vehicles. Next one. Machinery, not motors. Machinery on lease, 9.50. One more unique rate is there. 6.33. This is meters on lease. Sorry. Motors on lease. Machinery on lease is 9.5. Motors on lease is 6.33. What else? What is that? Where it is 6.33. Communication equipment and furniture. For these two, 6.33. For remaining 5.28. If you remember, otherwise no problem at all. So just remember and listen. That's it. Done. No, that problem is not enough right now. We'll discuss tomorrow that problem and focus on next concept. This is we can do and little bit interesting as well. Cost of capital. So I think in FM there are, what is the chapter right now running? Cost of, yeah, thank God. Cost of capital. Tell me what is the cost of capital? Yeah. So there is some formulas, all those things in your FM. No, here we should not apply that knowledge. Here, how to find out cost of capital, again given by the act itself. I think you know, in each and every company capital or each and company's money, some amount of debt will be there, some amount of equity will be there. You tell me, as a financial management student, is debt is better or equity is better? Which is better? If you say debt is better, I have some answer. What is my answer? We need to pay more interest. Then your profits will get reduced. If your answer is equity is better, again I have an answer. What is my answer? If equity is more, ownership will get diluted. Our EPS will get reduced. Then what should I follow? You have to balance both debt and equity. That is called debt equity ratio. How much debt equity ratio should be generally? That is depend upon their company, their discretion, their choice. Nobody will tell you you should maintain this much of this much of equity. That's you have to decide. But in Electricity Act, that is not in your hands. Act itself says your debt equity ratio should be 70:30. That means your debt should be more. Out of your 100 rupees capital, you should have 70 as debt, 30 as equity. That means Act says maintain more debt and less equity. Normally, if debt is more, we should pay more interest, no? And I'm giving you an open question to all of you. What could be the intention of the lawmaker by giving more debt and less equity? What could be the reason behind it? They have to pay more interest, no? They will get less profit. Even then, Act says maintain this ratio only. What could be the reason behind it? Control. They can control ownership if they follow 4159 or else 4951. They can control it. Huge gap, no? 70 debt, 30 equity. When they lose control now. At least are you able to understand my question? What is my question? Their Electricity Act says maintain more debt. If you have 100 rupees, out of 170 rupees should be debt. Take loan from some people. 30 should be your own. What could be the, what is it? Encourage? How can you say encouragement? You have to pay more interest on it. Anybody in the class? Why should Electricity Act says 70 rupees as debt, 30 as equity? Listen, reason is very genuine and very honest. For example, 10 rupees debt, 90 rupees equity. That means out of 100, majority will be with the shareholders, equity shareholders. Whenever out of 100 rupees capital, 90 rupees is with the shareholders, what they will expect? They will expect more profits, more dividend. Now company has to satisfy shareholders because they'll expect a dividend from the company. To give dividend, they have to increase their revenue. How they can increase their revenue? They have to increase the power bills. If they increase power bills, who will affect? Normal common man will affect. In common man, there should be average or rich people or poor people, middle class. There may be BPL persons are also there. BPL means below poverty line people are also there. Definitely, whenever to satisfy the shareholders, company has to charge more from the normal common people. They have to suffer just because of this ratio. That is the reason Act says no, maintain more debt, then they will be calm. They can't expect. If they don't want, they can sell their shares and they can go back. So you can observe how honestly Act itself here they are telling 70:30. Why they are telling us 70 debt means very simple. If equity is more, what is going to happen? If equity is more, what is going to happen? Equity shareholders will expect more dividend. To give more dividend, they have to earn more profits. To earn more profits, they have to increase their electricity charges. If they increases, what will happen? Common man will suffer by paying more. They have to pay more out of their less revenue. That means only if we increases more equity, it impacts entire society or entire state or entire country or one set of community. They have to pay more. If equity is less, what is going to happen? If debt is more, they can't expect more profit. If they are not expecting more profit, no need to increase our current bills. If no need to increase our current bills, people will happy. Are you getting my point? That is the reason Act says you should follow only 70:30. You should not increase. I can see here. Generally, debt equity is the option of the company normally, but in electricity companies, Act says it should be only 70:30. That means in 100 rupees of capital, 70 should be debt, 30 should be equity. Why debt more? This is the logic. If equity increases, what will happen? That's what I told you till now. But for example, listen carefully. I am running electricity company. My total capital is 100. My debt is 70. Equity 30. Is it correct? Obviously correct. Okay, na? After some point of time, so she has given me loan. Okay, no? So I repaid that entire amount to you. So I repaid 50 rupees to her. Now what happened? My debt will be 20. Equity is 30. Here what happened? Ratio again changed. Now equity is increased. But it is not intentionally I have increased. What happened here? Because of decreasing of debt, ratio will be changed. In such case, how much equity is more here? 10 rupees. This is not intentionally I have increased. Why it is increased? My original debt is 70. I repaid 50. So it becomes 20. It is same. In such case, this extra 10 rupees, you should assume it as a loan only. You should not treat it as a equity. If by any chance, if your equity is increases, then debt, you should assume it as a loan, not as a equity. Here this 10 is assumed it as a loan because you should not give power to the equity shareholders. If you give power, what will happen? They will increase more dividend. To give more dividend, we have to increase charges. If we increase charges, who will affect? Common man will affect. That is the main criteria behind it. So you can see here. That is the note point. In any case, equity increases more than 30%. Such excess shall be considered as a normative, means that is not an original loan, but we have to assume it as a loan. Okay, no? Not actual loan, but we are assuming it. That is called normative. That is not a real loan, but we assume it as a loan. Okay, na sir? Yeah. And concept number 2 and 3 are done. So here how to write this concept number 2. I will tell you, give a heading. Depreciation concept number 2. Write these 4 points. In electricity companies, selecting method of depreciation is not in the hands of company. Second point, selecting a rate of depreciation is also not in the hands of company because Act has given rate of depreciation. Write these 4 points as it is. So we are discussing accounting for electricity companies. So already I told you n number of times, even in the second session of our batch, especially while discussing weightage of the total group to corporate accounting and audit, the highest prioritized area is accounting for banking companies, accounting for electricity companies, accounting for insurance companies. From these three chapters, you will get 16 marks. That too 7 plus 7 plus 2. That means 2 sevens plus 1 MCQ. So out of three chapters, already we covered accounting for banking companies. So tomorrow you have to write exam on accounting for banking companies. It will be for 25 marks, 2 questions plus 5 MCQs. So come back to accounting for electricity companies. Already we had a discussion on previous class. If I am not wrong, we covered some problems as well. Yeah, just let me recap. So we have separate act called Electricity Act 2003. Every company should follow that act. And we covered, is it prepaid or postpaid services? Postpaid. What is the meaning of postpaid service? First of all, firstly, customer will enjoy the services. Then customer has to pay bill for whatever services he has used for it. So in this chapter, we are going to learn only 5 concepts. Concept number 1 is security deposit. Number 2 is number 3 cost of capital. Number 4 return on equity. Number 5 working. 99.99% question will comes from only these 5 areas. So already we covered concept number 1, security deposit. So first of all, why electricity companies will charge or accept security deposit? We had some discussion. Because it is a postpaid service, there is a chance of bad debts. That is the reason all electricity companies, they will accept some amount as a security deposit. Already we covered, is deposit comes under income or expenditure or asset or liability. Liability only. Why liability? We have to either provide services or else we have to pay amount back. So that is our obligation. Already everything we covered in the previous session. So in this concept, there will be 3 entries. If you remember, first entry is at the time of receipt of money. What is entry for it? Bank account debit to security deposit account. So I have given logic as well. Tell me why we are debiting bank account? Because we are receiving money, basic rule number 2. And why you are getting security deposit account? That is our liability. Liability should be credited. That's why it is credited. Second entry, it comes on balance sheet date. Nothing but we have to write interest due entry. What is interest due entry? Interest account debit to interest accrued on security deposit account. Why you are debiting interest account? That is expenditure as per rule number 3, debit all expenses. Why you are writing interest accrued on deposit account? That is also our liability. So our liability is getting increased. We have to credit it again. Third one, generally company has to pay interest amount to the customers, but in practical life they will not pay any kind of amount. Instead of paying in cash, they will adjust in the next month or next bill. They will tell you in which bill they are going to settle or adjust. What is entry for adjustment of a bill? Interest accrued on security deposit account debit to. Here sales turnover means their electricity charges, nothing but current bills only. So here credited, debited, got cancelled. Here the important thing is dates of entries are very, very important. When to record first entry? Whenever you are receiving, you have to record the same entry. That means out of entire life, this entry will comes in only one time. That means at the time of receipt of deposit. When to record second entry? Second entry we have to record on year and date. Every balance sheet we have to record the same entry. When to record adjustment entry? They will tell you when they want to adjust. If you remember in that problem, they told you at immediate quarter. Immediate quarter means within 3 months. If they say immediate next year, we may take 1 year. If they say half year, we'll calculate 6 months. Chala inka vinu. Concept 2, depreciation. Concept 2, depreciation. Normally in depreciation we have different methods. SLM, WDV, so many number of methods. Generally in our foundation or else CAT, even in your intro group 1 as well. So generally nobody will tell company or else proprietorship or partnership you should follow this method or that method only. Of course income tax act says follow W, that is different concept altogether. Coming to accounting perspective, no one will tell you follow this method only, or else no one will tell you follow this percentage only. But coming to electricity companies, you should not take your own choice. Company Electricity Act itself says some rates. Already we covered this concept as well. If you remember, there are different rates. 0% is there, 100% is there, 15%, 9.50, 6.33, 3.34. At least let us try to tell at least 3 to 4 rates. 0% is for own land, or we can say freehold land. 100% is for what is the temporary wooden construction. 15% is for, so For 3.34, I think 2 or 3 rates. Lease land is one. Second one is buildings and civil engineering works, if I am not wrong. For 6.33, 3 rate, 3 assets. What one is furniture, second one is motors on lease, communication equipment. For 9.50, machinery on lease is one thing. Two more things are there. Already I told you, I don't focus on all these remembering things. Yeah. They may ask, calculate weighted average rate of depreciation. What is the formula for it? Total depreciation by, we should ignore land cost and land depreciation. And I think we covered concept 3 as well, or else not it. Is it done, completed? Okay, done. So concept number 3, cost of capital. I think already this concept is covered in your financial management subject, nothing but chapter called cost of capital. There you are going to learn more what is cost of capital. So there you may realize debt equity ratio, all those things. Here my subject is not to tell debt is better or equity is better. I am nobody to tell which is better. Generally that's depend upon company, all the things, FM concept. But coming to electricity companies, Companies Act itself says everybody should maintain 70:30 debt equity ratio. That means out of 100 rupees, 70 rupees should be debt, 30 should be equity. This is the correct logic, already I told you in the previous session. Why here debt is more when compared to equity? Whenever equity is more, what will happen? They will expect a dividend. To give more dividend, we have to earn more profits. To earn more profits, we have to increase electricity charges per unit. Whenever per unit charges is increased, maybe people like you may not suffer because you are rich enough, but people like me who are under below poverty line, definitely we may suffer a lot when compared to you. So that is the reason Act says maintain 70:30 ratio. In some scenarios, even though they are not increasing their equity, maybe that ratio may get changed. I will give you an example. For example, ABC Power Supply Limited is there. Their debt is 70 rupees, equity is 30 rupees. This is correct only, they are legally valid. Debt means repayable only, no? Suddenly what happened? They repaid 50 rupees. That means 20 is debt, 30 is equity. Or else I can say they repaid 10 rupees. Then what happened? 60:30. What is the ratio? 60:30. This is also, if any, for example, ratio should be 70:30. This is the legally permitted ratio. They should not issue more than 30 rupees equity. But sometimes they may repay this debt. For example, they repay 20. It will become now 50:30. This is not acceptable. In such case, what is the extra debt? Actually 20 rupees should be more than what as of now their debt equity ratio. So actually they have to maintain 70:30, but currently it is showing 50:30. If you tell in ratio, what, for example, I will give you an example. FM is completed, no, this chapter? Yeah. Then you can do it. Tell me, 100 rupees is capital, okay? Out of 100 rupees capital, 70 rupees is debt, 30 rupees is equity. Tell me debt equity ratio. 70:30. Imagine they repay 20 rupees debt, the revised debt is 50, equity is 30. Now tell me, what is a ratio? What is ratio? When compared with 100 rupees, not 50:30, 80 only, no? Then it will be 5:3. It should be maintained 7:3. So here the extra 2 rupees is there, no? Already I told you in the previous session. So this extra 2 rupees is called normative loan. That means in sometimes what happened, even though company has not issued external equity, it may increase the equity. It should be treated as a normative loan. So first of all, you can see in any case equity increases more than 30%. In such a case, excess shall be considered as normative loan. So no sir, still I'm not that satisfied. Then let me change the figures, you will get more clarity. For example, capital is 500 crores. Out of 500 crores, what act says your debt should be 70% means 350 crores. Equity should be 30% means 150 crores. Suddenly what happened? Their debt got decreased. That means they repaid, for example, 250 CR, or else let me take 50 CR only. They repaid 50 CR. Out of 350, they reduced 50 means 300 CR. Here equity is same 150. Total capital would be revised, no, 450. Out of 450, 300 is revised debt, 150 is revised equity. Take the ratio. What is the ratio? 2:1. But they have to maintain 7:3. That means this is not at all correct when if you follow Electricity Act. Here, if the debt is 300, equity should be how much? If you follow the debt equity ratio as per Act 70:30, no, 300 by 7 into 3, 900 by 7. Tell me how much? 900 by 7. 128 point. But here showing some excess amount is there, no? That excess should you assume it as a loan, even though that is not a loan. If you not yet satisfied, that is no problem at all. You can ignore it. Just theoretical point of view only. Simply what they are saying, if any point of time your equity increases more than 30, that is not acceptable as per Electricity Act 2003. You have to assume it as a loan. That is called normative loan. Okay. Yeah. With this, all previous day concepts are revised. So this is new concepts for everyone. Concept number 4 is return on equity. So listen carefully, including all people. So we have return on equity formula, right? What is the formula for return on equity? You will learn same thing in financial management. You will have some formula, all those things. Here, no need of any formula, because they will tell you one format. You have to follow that format as it is. So no need to apply all those formulas and nothing. So normal formula, return on equity, this is the formula, but no need in this chapter. Then how to find out return on equity in electricity companies? They have given the format. You have to just follow this format. So gross opening equity, they will tell you that amount in the question. Less adjustments in opening equity, they will tell you everything, they will tell you in the question. But you have to just remember this terminology. But still now, up to last 5 attempts, they have not asked a question from this area. Any adjustments during the year, then you will get net opening equity. Any increases in equity due to additions, less decrease. Actually, the point is return on equity and working capital. These two concepts, they'll give you some format. You should remember it, no other option. Their students feel little bit discomfort. Why should I remember? Because we have to follow Act, no other option. Even working capital, you can easily answer it. There is some logic is there, but for this concept, no logic at all. You should remember it. Maybe out of practice, you may able to remember those things. But very easy. Gross opening equity less adjustments. Any adjustments, net opening equity. Increases in equity due to additions during the year. Less decreases due to decapitalization, less decreases due to reversal. Sir, what is the meaning of those things? No need at all. They will give you in the question everything. Just write the format and substitute it. That's it. Less decreases due to reversal, add increases due to discharges, net closing equity, opening is there, closing is there, opening plus closing by 2 averages, they will give you rate, apply total return on equity. So actually finding return on equity is a bigger concept in financial management subject. We will have one formula and derivation, everything will be discussion in financial management. Here nothing to discuss. They will give you one format, you have to follow as it is. Sir, why should I follow this format only? Can I apply one more method? You don't have another methods because it's given by the act, not by BCCA or else me. You have to follow this particular format, whatever given by the act. Sir, what is the meaning of gross opening equity? What is all those things? Nothing required. Even I know I can explain all those things, what is capital and all those things, but it is irrelevant for you. Even though if you understood or else if you are able to listen all these things, that is irrelevant for your exam and for your future concept also. And last concept, concept number 5, working capital. This will be very, very easy concept. Working capital means current assets minus current liabilities. I think if you already aware of working capital in financial management subject, you can easy to correlate this concept. For example, working capital means how much expenditure you incurred for running day-to-day operations. That's already, I think you know about working capital. So what is the formula for working capital normally? Current assets. Here this formula is not applicable. Again they will give you one format. This is the format. This is very easy. Simply you should record all revenue expenditure. Revenue expenditure means whatever incurred to run the operation, which is not a capital expenditure. Capital expenditure means related to some asset. For example, cost of coal, is it related to asset? No. Lignite is also kind of coal. And fuel cost, revenue expenditure. Secondary fuel, revenue expenditure. Liquid fuel stock, revenue. O&M means operational and management expenses, revenue. Spares, revenue. Receivables, revenue. All these comes under revenue expenditure only. So working capital means only revenue expenditure. So they will give you rate of interest, add all those things, apply interest rate. In your main exam, in not in June 25, in December 24, they've asked a question from this area. That question is very, very, very easy question. So you just add all those figures given in the question into rate given in the question. I will show you the question paper now itself. Please give me 1 minute. December 24, I think. No need of concept as well. Just you can do it on your calci. No paper and pen also needed. Yeah, you can see on the question on your screen. They have given some data. What is the last requirement? Calculate interest on rate is given, no? Open your calci, that means just switch on your calci. Yeah, cost of coal 2000, under 2000. Secondary fuel 200 plus 200. For next year, that is not relevant right now. O&M 250 plus 250. Spares plus 100. Receivables plus 1800. That's it, into 12%. That is the answer for first year. That's it. For second year, make it 0. For second year, again coal 2000. Secondary fuel same for 2 years, no? That means plus 200. O&M 250 for first 2 years. That means plus 250. Plus 100 plus 1800 into 12%. Here also same. Correct, no? Second year, third year. Coal is same 2000 plus secondary fuel, what happened? Plus 300. O&M plus 350. Maintenance spares plus 100. Receivables plus 1800 into 12%. For fourth year also same, fifth year also same. For 7 marks. Even the format is there, no need to follow format. Everything is revenue expenditure only or revenue items only. If they have given anything in between asset purchase, you should not take it. You should take only revenue items. But fortunately, they will not give any assets or anything. Just you have to use your calci and into 12% for 7 marks. If they have given question from the what you call return on equity, that is little bit difficult. I mean, I accept, but I am not expecting right now. It's depend on your MTP paper. We have to wait for some more time to decide whether they will give question for your attempt or not. Right now, everything is important to us. So that's it about all electricity companies. Let's discuss some problems. Before that, what is your notebook status? Depreciation is pending. Yeah, rates. Anybody have material by any chance? Give me that. Yeah, draw this. Below that we'll write items names. As tomorrow is working day. For you only, I think. No, I won't come. Zero percent is only for own land, or we can say freehold land. %100% is only for temporary wooden constructions. They may test an MCQ from this area. Is there anything else for 100% apart from it? %15% is also single rate. IT equipment. $9.50 is for how many assets? 3 assets are. Tell me what are those 3 if you remember. Machinery on lease. Correct? Motor on lease. Machinery on lease. Portable AC. Machinery on lease. Second one, portable AC. Third one, what is that? Super. Self-propelled vehicles. Propelled ante they'll work on their own. They will not depend on manpower. $6.33 is for motor on lease, communication equipment, varnish and communication equipment and one more thing is there, no, about 6.3 furniture and fittings. 3.34 is only for land under lease land. Second one, buildings and civil engineering works. For others, any other assets, how much? 5.28. They may test an MCQ from this area, or they may test 7 marks question, but I'm not expecting a 7 marks question from this area. Sir, how many of you completed banking companies? Notebook kadu preparation. Yeah. Hi. What about Geetanjali? No. Take your own time. 6 months. What about Nishanti? Person beside you. Yeah. ఏమైపోయింది లంచా? Nagendra completed. What do you want? Tell me. You can't understand. Tell me. Bolo. Amma? Ekkada? Buildings and civil engineering works. Janu completed. Sudhakar edra alada completed sir. Yeah, then what next? Write this formula. Weighted average rate of depreciation. రాయలేదు. Why? Copy weighted average rate of depreciation. Some topics in this chapter may be a little bit dry because there is no concept in it. Just try to focus on it. Don't leave or don't lose focus. Just listen classes with 100% concentration. I know how to get you more than 70. without listening all classes or without watching all lecturers, please don't expect any kind of exemption in our paper. Just marathons or EVO batches are not enough. They're enough to get 30 or 40. Trisha, are you able to sleep? Yeah, you can. If it is 10, concept number 3, cost of capital. What happened? Once all concepts are completed, we'll move on to all the problems and we'll revise at least 2 times all problems. In classroom itself, we'll close all problems. Cost of capital. Then please copy these 3 points. Generally, debt equity ratio is the option of the company. But debt equity ratio as per Electricities Act is 70:30. That means in 100 rupees capital, there should be 70 as debt, 30 as equity. Banu, all okay? Or else you are thinking about something or someone? No? Yeah. Where is that person who is always thinking about something? Hi. Is it done? No, why? Bharat Ainda. Can I scroll? Write down what will happen if equity is more. Give the logic reason. What will happen if equity is more? What is the main problem? Who will expect more dividend? Shareholders. To give more dividend, they should get more profit. To get more profit, they should earn more revenue. More revenue means they have to increase their rates. Manishi, come on. Where is Ankita? No, no, that one. Okay, Sri Harika. Kirti, what happened? Completed. Tamudu. Yeah. So give note point in your note. If in any case equity increases more than 30%, such excess shall be considered as normative loan. Normative loan means that is not a actual loan, but we have to assume it as a loan. Once all concepts are completed, we'll solve all the problems at once, then you will get confidence on this chapter. Still, what is concept number 1, by the way? Debt equity ratio, na? Security deposit. There we have to learn only 3 entries. Concept number 2 is we have to remember all those rates. Concept number 3 is cost of capital. There, what is the important in cost of capital? 70 is to 30. Next, concept number 4, return on equity. Return on equity. You have to write the entire format. Don't focus on terminology, just you have to follow that format. Nana? Yeah. That is your wish. I will give the same thing in your material. That's it. Yeah. Give me 2 minutes. Let me revise. First of all, please participate. In accounting for electricity companies, how many concepts are there? First of all, 5 concepts. What are those 5 concepts? Security deposit. Second one. Third one, cost of capital. Fourth one, what is the last concept? Working capital management. In tell me what is the first entry in security deposit? Bank account debit to security deposit account. Second entry is related to interest due entry. What is interest due entry? Interest account debit to interest accrued on security. Third entry is adjustment of interest. What is the entry for adjustment of interest?
interest accrued on security deposit account debit to sales turnover account. In concept number 1, those 3 entries are more than enough, nothing more than that. Concept number 2, what is concept number 2? But in your examination, I am not expecting personally any question. Why student has to remember all those rates? Still, let's try for it. So there are some 6 rates if I am not wrong. First rate 0% is only for own land, 100% is only for temporary wooden construction, 15% is only for IT equipment. Next one 9.50, next one 6.33, (9.50) 6.33. What is the one more rate we have? 3.34. 9.50 is for 3 assets: machinery on lease, portable air conditioner, self-propelled vehicles. 6.33% is again for 3 assets: motors on lease, communication equipment, furniture, and 3.34 is for 3 assets: land, lease land, buildings and civil engineering works. Only 2 rates. Remaining all assets is 5.28. So next concept is concept number 3 is about return on cost of capital. Here you don't expect 7 marks question, just there is a concept of 70:30. What is 70, what is 30? Debt 70, equity 30. Generally already you know debt is cheaper than equity. So what is the reason behind it? Why debt is more, equity is less? We have given the logic as well. If the equity is more, general expectations for reaching expectation, we have to give more dividend. For more dividend, we should get more revenue. For more revenue, we should increase our charges. Finally, consumer will have to pay more. That is the logic behind it. And next concept number 4, return on equity. Generally we have formula for it, but here no formula is required. We have to apply this particular format. What is this format? In fact, I personally don't suggest this concept to read it, because we have to remember all this content. But as a faculty, I should not ignore this concept. If I am in your place, I don't read this content at all. But as a faculty, I can't ignore. That's why I'm just giving you info. That's it. Don't focus on what is the meaning of all things. Just write the format and we'll solve 2 problems on it. You will get clarity. Okay, copy. Mahesh M, come on. Gross opening equity. What is the word within the bracket? Listen, normal means concept number 3. What is concept number 3? Cost of. There we discuss a debt equity ratio, right? What is debt amount? What is equity? 70 debt. Out of, for example, 1000 is capital. How much should be debt? Equity should be 300. Here normal means you should take only 30% because they are discussing about equity only. They will give you total capital into 30%. That means normal. Normal means as per act. Less adjustments in opening equity. They will tell you if there is any adjustments. Any other adjustments. If nothing is given, just ignore. Write the format and ignore. You will get clear confidence in problems. Don't worry at all, first of all. Then we will get net opening equity. Generally, for this, there will be no data. Generally, for these two. So there will be opening gross. That will be the net opening gross. That's it. Then increase in equity due to additions during the year. Then decrease in equity due to decapitalization. Decapitalization means they are dividing their capital or reducing capital. Don't focus on the terms. If anybody feels difficulty to write, please try to copy. No other option. What happened? Chotu completed, huh? Not yet completed. Samira completed of lunch. You are planning for dinner, I think. Yeah. Please don't smile. అయితే వెళ్ళి నెక్స్ట్ కాన్సెప్ట్ రాయ్. ఆగు. రిటర్న్ ఆన్ ఈక్విటీ. కరెక్ట్ నో? Manishi, what happened? For me, no, not at all. It is the requirement of our team. I'm very shy person, unlike you. నీకంటే సిగ్గులేదు. డన్. తేజు, ప్రగతి, కీర్తి, అక్కి, శ్రద్ధాంజలి, సుధాకర్, కరుణాకర్ రెడ్డి, వంశీ. Where is Vamsi? R Vamsi. Firoz Bhai. What happened? Katappa. Last concept, concept number 5, working capital. Yeah, super boys. Without noise, you are nice. Yeah, please maintain the same thing and copy. Last concept. So here we should not apply this formula. Which formula? Working capital equals to current assets minus current liabilities. Banu, what happened? Yeah. Ankita, copy. Kirti, done. Are you looking for a good time? Yeah, this is correct time only you can. So with this, total concepts in this chapter is completed. If your writing is completed, take 10 minutes of time and read entire concept. After that, we'll move on to problematic part. Done? Yeah. Open your notebook and go through the entire 5 concepts. Everybody, please. Yeah. So I think everybody is perfect with the concept. So let me enter into problematic part. So listen very carefully. In classroom itself, or all problems should be completed. Yeah. Listen. Question number 1 is already completed on yesterday's session. So very easy. First one, receipt entry. What is receipt entry? Bank account debit to security deposit. Second entry, interest due entry. What is interest due entry? Interest account debit to interest accrued on security deposit account. Third entry, adjustment. What is adjustment entry? Interest accrued on deposit account debit to next year. 2 and 3 entries will be repeated. Come to question number 2. So let's directly look at what is the requirement. Calculate return on equity for next 5 years. Don't think too much. This question is from concept number 4. We have to draw the pro forma as it is format. Then we have to think if there is info, if information is there, right? Otherwise, nil. So for answering it, for answering this question, you need to copy paste your format as it is. Already in your notebook format is there. Just copy. We need 5 years. Year 1, year 2, year 3, year 4, year 5. Gross opening equity less adjustments. Again adjustments. Net opening equity. Add increase in equity less decrease in decapitalization, decrease in reversal. Add increase or decreases due to discharges. You will get net closing. Average means opening plus closing by 2. They have a given rate. Apply it, you will get return on equity. So difficulty in this problem is you have to write this pro forma as it is. Till now, if you observe past 10 attempts question paper, they have not even asked even single time. The reason is very clear. Student has to remember all these things. Okay. So don't think too much. Just copy format in your notes or else copy from the material. Don't copy these figures. We'll do it. We will do it together. Just write the format.
చెప్పు.
Don't write amounts. We'll do it together. Yeah. Ah. Okay, done. Thank you. Thank you. Fine. So now let us focus on question. So format is a little bit lengthy, but you will be surprised after answering. That easy. Consider the following information provided by the YZ Power Supply Company Limited. Amount in lakhs. Gross opening equity. They have given gross opening equity 3,000 rupees as on 1/4/2019. Adjustments in opening equity nil. Adjustments during the year nil. Increase in equity due to additions 500 per year. Full stop should be there, it is missing. Decrease in equity due to reversal and decapitalization nil. Increase due to discharges nil. Everything is nil. We have only 3 data. Gross opening equity is there. Apart from it, increases in equity per year 500. I think only 2 things, nothing more than that. Correct. Now we have performer, right? Don't write anything, just focus on it. First one, what is the performer in your first one? Gross opening. Is it given in the question? Don't write, please. Don't write. I will give you time for it. How much? 3,000. What is the next item in the question? In the answer format. Any adjustments are there? Nil. Any adjustments during the year? So next, total 3,000. Any increases during the year? Yes. How much? Any decreases during the year? Any decapitalization? Any increases? Done. How much? 500. Average means A plus B by 2. 3,000 plus 3,000 plus 500 by 2. 1750. Interest rate is given, I think 18%. Sorry, 80. 31. Done. Only 2 things. 3,500 average into percentage. Next year opening is current year close. What is current year closing? So next year opening is 500 plus 3,500 plus current year. Any changes? Nil. 3,500 again 500 nil. Total is 35 kada. Closing 500. Tell me. This is closing means 35 plus 4,000 by 2. How much? 18%. Third year opening is 4,000 hyphen 4,500 hyphen 4,500 4,000 plus 500 85 by 2 4250 na అంతే కదా ఎందుకు నాన్న ఓపెనింగ్ 4,000 కదా క్లోజింగ్ 4,500 8,500 by 2 okay opening 4,000 tell me anything wrong in year 1 what happened okay got it what is the opening closing by 2 3 to 18% 58 second year opening 500 closing 4,000 35 plus 4,000 by 2 18%. Sorry, next year 3,500. Just I am testing your presence. Aithe complete it. 4,500 4,500, 425076. Last year 4,500, 500, 5,000, 4. Sorry, 855. 4750. ఇదేనా 18%, 8. Here 4 is 5 is also there. That's you can do it. Is there any difficulty, sir? Writing that format is difficulty. Yeah, listen carefully, all of you. For example, hello, excuse me, my dear boys and girls and other people. Yeah, listen. For example, the same question has been given in the question, but unfortunately, I have not seen that format. What to do? Just observe the question format. They have given gross opening equity, some amount is there. They have given increase. Increase means I should add. Anything else? Write remaining thing somewhere else. Obviously, nil only, no? Apply that rate, you will get the same answer what the person who have followed 100% concept. If they have given decreases, reduce it. Nothing more than that. Okay? Yeah. Pragati? Yeah. If you have any query, don't ask me. What is your doubt, ma'am? Bolo. చెప్పండి. My dear MCQ batch, is everything fine? Yeah, hope so. Okay, okay. Do you need hotspot? What is your weekend plans? కట్టప్ప కాదు కన్నప్ప. Classes only. Yeah. My dear investigation team, please do it. I'm correct only. All these first bench people, they'll feel themselves as CBI officers. You are the head. I knew that. Completed, huh? What about 5th year? Opening figure is 5,000, closing is 5500. By 2 means into 18%. 945. That's it. 4 plus 5, 9. 5 plus 4, 9. 9 equals to 4 plus 5. Tallied. Harshita completed. Chitti Talli. Yeah, everybody. Last bench heroes. Yeah. So we have, all of you listen, we have one more question on this concept, question number 3. After that, question number 4 is on working capital. That's what already we have seen in exam paper. Similar question. If I think same question, copy pasted. And question number 5, this is a kids question actually, just additions. This question is already we covered in last session, depreciation rates. That's it. Balance sheets, all those are not required. So in tomorrow's session, I'll complete the remaining questions. After those questions are completed, I will give you 30 minutes of time for preparation of that chapter. So with that, you can successfully close those 2 chapters, nothing but B and E, nothing but banking and electricity. And tomorrow only I will start last part of first chapter, insurance companies. I will also complete that chapter around by Tuesday or Wednesday. That means within 1.5 week, I will complete 16 marks. Not in your weekend exam, by the way, for your main exam. Immediately I will enter into Indian accounting standards for 9 marks. For that I will take exactly 1 week or less than 1 week. 16 plus 9, 25 marks. After that I will move on to some small chapters for third week. Some basics, issue of shares, all those kind. From there you can expect 9 to 10. After that again I will get back to important areas. Fifth or sixth week we can conclude corporate accounting. From 7th week onwards we'll move on to audit. In audit also, first week I have to discuss basics. From second week onwards, same in examination weightage pattern only. So by 10th week our syllabus will be closed. I will take one more week, which is 11th week. In 11th week I'm going to revise entire concepts. 12th week you can complete the syllabus. So our they'll give so I think schedule is 12 weeks exactly. More than enough for me. Meanwhile, already my workbook is completed, only printing is pending. Actually I can give this old material. The problem is there is some mistakes over there, and I have to delete some questions, add some questions. That's why I'm not giving this material. Okay, yeah, we'll meet tomorrow at same time, same room, same time. Oh. Tomorrow is Sunday, no? Yeah, happy Saturday. ఇంకొంచెం. Yeah, can we start? Yeah, firstly had a delicious lunch, that too Sunday. Okay, okay, got it. Fine. Yeah, నేను ఫుల్గా తిన్నాను సండే. Yeah, fine. ఓకే అయితే విను. సో వెరీ స్పందన. హాయ్. యా, మ్యాగీ. వెరీ చిట్టి తల్లి. గీతాంజలి. మనిషి. యా, సుధాకర్.
కర్ణాకర్ మహేష్ ఎం. ఓకే. తాగుబోతాడు అన్నాడా? కట్టప్ప. యా, fine. So listen, yeah, come on please. So we are discussing accounting for electricity companies. If you remember, we have covered first of all, what is the act year? Electricity Act 2023 or 33? 2003 only. So in this chapter there are totally 5 concepts. The first one is security deposit, second one is depreciation, third one is house property, thank god, cost of capital, fourth concept return. Okay, last concept working capital. So coming to security deposit, so first of all tell me, whenever one company is receiving deposit from the customer, so is it income or expenditure or asset or liability or profit or loss? Definitely that is liability only in the point of view of electricity company. So why? Because either we have to provide services or else we have to repay their money to their customers. So we have totally 3 entries in deposit. Whenever you are receiving, what is the entry? Bank account debit to security deposit account. So why you are debiting bank account? You are receiving money. Why you are getting security deposit account? That is my liability. Liabilities always should be credited. Second one, we have to pay interest. So we, because we are following accrual basis, we have to first try to due entry. What is due entry for interest? Worst. Interest account debit to interest accrued on security deposit account. So generally they have to pay interest to each and every customer, but in practical life that is not possible to come to each and every door and pay the interest. Instead of, they'll do adjust the balance in their next bill. That means, for example, if you got interest of some 200 rupees, if your next bill is 400, they will ask only 200 by reducing interest 200. That is called adjustment of interest. What is entry for it? Interest accrued on security deposit account debit to sales turnover. So if they have tested a question from this area, what are the points you have to remember? First one, dates. So you have to record first entry on date of receipt of the deposit. Second entry is always on year end, but you have to be very careful when you received, when you are calculating interest. For example, you have received on 1/1/2023, balance sheet date is 31st March 23. That okay, that means only 3 months. You have to calculate interest only for 3 months, but for next year entire 1 year. Correct, no? And third entry, they will tell you when to write adjustment entry. In our problem they told that in immediate next quarter. Quarter means 90 ml. What is that? Quarter means next 3 months. I think she is expert in that, not 90 ml. And okay, got it. 180 na? Then 90 ml is called half. 2 halves are 1 quarter. How it is? Okay, fine. Okay, got it. Yeah. Depreciation, concept number 2. Generally in our regular life, practical life, so we can follow either SLM or WDV or whatever method is comfort for you, and at the same time we can take 10% or 20%, and that is our wish. First of all, do you got material? నాకు ఎందుకు చెప్పలేదు? Okay, fine. So SLM or WDV, when rate is also your discretion, but coming to electricity company, so that is not in the hands of company, it's decided by the act itself. So we have discussed some rates. If you remember, we have, I think, 6 rates. 0% is only for one assets, that is own land.
100% is for one assets, temporary wooden structure. 15% is only for IT equipment. 9.50 is for 3 assets, machinery on lease, portable ACs, self-propelled vehicles. 6.33% is only for 2 assets, 3 assets, motors on lease, communication equipment, furniture, and 3.34% is for lease land and buildings and civil engineering works. For all other assets, 5.28. I'm not expecting question from this area. If they ask, they'll ask like weighted average of depreciation. What is the formula for it? Total depreciation by total assets. We have to remove land. Concept number 3 is cost of capital. So cost of capital is not a concept for a 7 marks question, but we have to remember debt equity ratio. What is debt equity ratio? Normally in this Electricity Act, 70 is to, that means your debt should be more, equity should be less. We have discussed logic also. Why debt should be more? If equity is more, who will expect more dividend? Shareholders. To give more dividend, company has to earn more profit. To get more profit, they have to increase their electricity. If charges are increased, hello, what is going to happen? Automatically common man will suffer. Correct, no? That is the reason. So always your debt should be more when compared to equity. And concept number 4. Concept number 4 is return on equity. So generally formula is net income by something that is irrelevant for us. But in this concept, we have to follow one pro forma. Already I told you how to write this pro forma, and there is no other option except one this particular pro forma. And I think we covered one problem as well. And last concept, working capital. Generally working capital is nothing but current assets minus current liabilities. One person is missing beside you. Kasturi, right? Yeah, fine. Current assets minus current liabilities. But here, nothing like any kind of formulas. You have to take all revenue expenditures. I think you are aware of what is revenue expenditure at least. Capital expenditure means which are not a revenue expenditure. Revenue expenditure means not a capital. Super talent, keep it with you. So capital expenditure means expenditure related to assets. Revenue is other than assets. So that much easy. All concept is covered. Now let me open problematic part. And coming to workbook is almost same as whatever you are holding, but I am deleting some questions and I have added throughout the material 2 to 3 questions totally. You can follow it. If possible, I will give you new material. Otherwise, that is okay. But concept book is, yeah, I think in that material you have concept in first then workbook. No, don't follow any single concept. I will give you a new material for it. Okay, use it only for workbook. Come on, question number 1 I think covered. No, what is question number 1 is on security deposit. Correct? No. Next one, concept number 2. Sorry, question number 2. Is it covered? So I think this is the last question in our previous day. Come to question number 3, all of you. Yeah, all of you listen, focus on question number 3. From the following information, calculate return on equity. Highlight return on equity. Tell me how to find out return on equity in this chapter. We have to follow one particular pro forma is there. I think you have pro forma in your notes. Already we solved one problem as well. If I am not wrong, this is your pro forma, right? What is that pro forma? Gross opening equity less adjustments in opening year, less or adjustments during the year net opening, add increase in equity due to additions, less decrease due to decapitalization, less decreases due to reversal, add increases due to discharges, closing, average A plus B by D, and return on equity rate and total return on equity. That's it, no? Yeah, come on. Okay. Okay. Got it. I won't open. Yeah, come on. So, date of commercial operations is 1st April 2019. Approved opening capital cost. All of you please highlight. This is very, very important. It looks like not, but it is important. Opening capital cost is 15 lakhs. Details of allowed additional, highlight additional capital expenditure is there. So actually in previous problem they have given gross opening equity, right? In this problem they have not given gross opening equity, but they have given total capital. What is the total capital? What is the total capital, sir? 15 lakh is total capital. But in come to question number 2, they have given directly opening equity 3000. But in question number 3, what is the twist? They have not given gross opening equity. Without gross opening equity, I can't continue that particular pro forma. Very easy. Here you have to apply your concept number 3, cost of capital. Already I told you, out of your capital, there should be some debt and there should be some equity. 70% should be your debt, 30% should be your equity. Apply it 15 lakh into 70%. 70%. Correct. 10 lakh. Correct. Already I told you while discussing our pro forma, within the bracket something is there. What is that? Normal. Normal means you should take only 30%. That means what is gross opening equity? 4,50,000. That is our gross opening equity. They are given indirectly. Okay, now if they are given directly, we'll take that figure as it is. In this problem, what happened? They have given total capital. We have to take only 30%. 15 lakh into 30%, 45 lakhs. Koncham gap. Yeah, chalu. Into 30%, 45 lakhs. That's me. Yeah. Nivalla. 4,50,000. Okay, no? Yeah. All of you open your notebook, draw the pro forma. Question number 3. Give me one book. నువ్వేవో యాక్టింగ్ చేస్తావు నాకు తెలుసు. Only 4 years. Make it fast. Don't waste our time. We have to complete this chapter in this session only. After that, already I promise I'll give you half an hour time after my class. Maintain the same level of participation till at the end of batch. Definitely result will be COVID positive కాదు, A positive. Aki, you are looking for something. If something, that is okay. Likki, you became so silent after holidays. Okay. Yeah. I feel better now. Anuddu, please.
వద్దు. Write only pro forma, don't copy answer from your book. Pragati. Shri Harika. Make it fast. Where is Kirti? Yeah. Katapa. Where is he? For? ఏమైంది? మార్నింగ్ కనిపించాడు కదరా. Chittitalli, is it done? Make it fast. Manishi, what are you doing? What is going on? Write only one time. I think some people are writing 2 or 3 times. No. Yeah, my dear boys and girls and last benchers, completed. Yeah, come on. So starts with gross opening equity, but we don't have gross opening equity. Come to question, we have total capital, no? So we have to apply 70-30. What is equity? If you apply 30%, 4,50,000. Write directly in your format in year 1, gross opening equity 4,50,000. Next, what is the next point in your format? Adjustments in. Is there anything in the question? Ignore. Next one. Nothing, ignore. Next one. Yeah, add it. What is the total up to now? 4,50,000. Next one. Increase in equity due to additions during the year. Come to question. All of you, please. Very, very important point is here. So, what is the point number 3? Additional capital expenditure. All of you listen very, very careful. This point is a little bit important. So, electricity company has spent some amount on capital expenditure. Capital expenditure means they have spent amount on assets. In year 1, they purchased assets of 1 lakh rupees.
Tell me, for example, this asset is TV only. Imagine 1 lakh rupees. That means electricity company purchased TV rupees 1 lakh. Now tell me, this asset belongs to whom? Is it relates to only to shareholders or also to debenture holders? It's applicable to both, because the total out of the total capital, 70% investment is of debt, 30% is related to equity. Just apply that percentage. Imagine out of this one, like how much belongs to equity, how much belongs to debt. Common sense. 70,000 relates to debt, 30 related to equity. Here also same. They have spent 1 lakh in year 1. Out of 1 lakh, how much debt, how much equity? 70,000 debt, 30,000 equity. What is our pro forma as of now? Increase in equity. Increase in equity, current year expenditure only. How much? Only 30,000, not 1 lakh. Why 30,000? Out of 1 lakh, 70k related to the debenture holders or debt. What is the next one? No decrease, no decrease, no increase. Total 4 lakh 50 plus 30, 4 lakh 80. So we got opening capital, opening equity, closing equity. What is the average? 450 plus 480 by 2. 4,65,000. Actually, info is missing in the question. Write down return on equity equals to 15.5% in your question. 15.5%. Apply on it. 7 to 0. Yeah, listen one more time. What is the difficulty in calculation? Actually, there are only two items. One is 450, one is 30. How we got this 450? They have given total capital. Total capital is 15 lakh. Our portion is only 30%. How 15 lakh and 30% means 4 lakh 50,000. Nothing is there except increase in equity. So how we know that increase in additional expenditure is there? Total expenditure in year 1 is 1 lakh. Only out of 1 lakh, 30% is related to equity. 1 lakh into 30%, 30,000. Remaining is nothing, just you have to average it. Don't try, help me out. What is second year opening? 1 minute. What is second year opening? First year closing to second year opening, right? 4 lakh 80,000. Nothing else, 0. Total 4 lakh 80,000. What is second year increase in equity? 30,000 into 30%, 90,000. I'm just checking your presence. 4 lakh 80 plus 9, 4 lakh 89,000. We have opening and closing. Average it. 4 lakh 84,000. Apply the rate 15.5%. 75,000. 75. 0, 9, 8. That's it. Coming to year 3, tell me. I will leave you for year 4. In year 3, what is the opening equity? 4 lakh. How you got it? Previous year closing. So opening is again same 4 lakh 89,000. What is the additions? How you got it? 20,000 into 30%. Chittatali, do it on your calculation. 20,000 into 30%. 6,000. 4 lakh 89,000 plus 6,000. 4 lakh 95,000. Give me the average. 4 lakh. Apply the 15.5% on it. Sorry. 216. Year 4 you do it on your own. Okay. Yeah, please copy it first of all. Don't copy, do it. Renuka, completed. Hello. Completed. Yeah, make it fast. Wow, all legendary people at one place. Vishwaroop,
Himesh, Ishwar, Pradeep. Wow. Kattappa is missing. And my drinker. Manshi, are you writing or not? I will check your notebook. Calculate for last year as well. What is the last year return on equity? 7.6. Correct. Some people are not participating. I don't know why. Okay. Noted. Karnakar completed. So my dear boys, is it completed? Then why are we waiting for? Let's move on to the next segment. Question number 4. Actually, this is the recent exam question, June 25. Consider the following estimated information provided by the XYZ Power Supply Company Limited for next 5 years. So go to at end, highlight it, calculate interest on working capital. They are asking interest on working capital. Already I told you. So normally what is the formula for working capital? Current assets minus current. Here that formula will not work out. Take all revenue expenditure, ignore capital expenditure and add it, apply that rate. But happiest thing, they will not give any capital expenditure. Even if you don't know concept, you can do it on your own. But the thing is, they are asking for 5 years. You have to draw the chart like with 6 columns. Particulars, year 1, year 2, year 3, year 4, year 5. Then they have given some expenditure. Let's first me read it out, then we'll solve the problem. First one, cost of coal. Is it capital or revenue expenditure? Revenue, we should accept it and we should take it. Cost of secondary fuel. Revenue, we should take it. Cost of O&M. O&M means operations and management. That is also revenue. We should take it. Maintenance spare parts. That is also revenue. Receivables are also revenue. So all are revenue in nature only. Just add it and multiply with the rate given in the question. You will get the answer. Generally they will ask the same question or else they will change the numbers, because even they don't know what are the items to be included in the question. So you are at 100% safe zone. No need to think of it. Just add all those things in the question into rate. But before answering it, check once if there any assets are there, especially fixed assets. If I am not wrong, they will not give any kind of additions. Definitely they will copy paste it and they will change the numbers. For your attempt, I am not expecting this question because recently they have tested the question. But still okay. Yeah, they are asking for 5 years. No, open your notebook and give 6 columns.
So particulars year 1, 2, 3, 4, 5. Tell me what is the first item in the question? First expenditure. Cost of, write down. Cost of coal. How much in year 1? 2000. What is the sentence in the question? Please wait. 2000 per year for first 2 years. Sorry, 200 per year. No. 2000 per year for all 5 years. Write down for all 5 years. 2000, 2000, 2000. Every year same. 2000, 2000, 2000 and 2000. Done. What is the next item in the question? Cost of secondary fuel. What is the amount? 200 per first 2 years, 300 from year 3 to 5. That means in year 1 how much? 200. Year 2 also 200. Year 3 300. Year 4 300. Year 5 300. Superb. Wow, only. What is the next item? O&M expenses. O&M expenses. How much? 250 per year for first 2 years, 350 from 3 to 5. That means in year 1 how much? 250. Year 2, year 3, 350. Year 4 also 350. In year 5 also 350. What next? Maintenance. Maintenance spares. Maintenance spares. How much? 100 per all years. Happy. 100, 100, 100, 100, 100. What else? Receivables 1800 per year. Receivables 1800, I think, for all years. Correct. What else? What is that? Who is that cute person? Okay. What is your sweet name, by the way? Iga. Kirti. Your original name is Kirti? Okay. Anything else? Oh, she said rate of interest. OMG. Yeah. Add it year by year. Hey, Agu.
बोलो 4000. वाओ. నీ తేడాగల తయారయ్యారు నువ్వు. నెక్స్ట్ వన్. Write down that is total working capital. Apply rate of interest. What is the rate of interest? 12%. Interest on working capital. What is that? 522. 522. Here 4 and 5 also same, no? That's it. This is for 7 marks. Wow. What is happening in last bench? MCQs. Yeah. Okay, okay. I will spot. Maggie done? Yeah. Narendra. Surendra. Jyoti. Okay. So last question, question number 5. Actually very easy question, even calci also not needed. Where is the answer? Banking, electricity only, right? Where it is? Insurance. Insurance. Mixing. Yeah, question number 5. All of you listen. Chitidali, please do it. Consider the following estimated information provided by XYZ Power Supply Company Limited. So they have given something. Please focus. Very very easy question. Even second class student can answer it. That much easy. Some normative O&M expenses are there. In year 1, 2500, and this will increase 10% every year. That means in year 2 plus 10%, year 3 plus, year 4 plus 10. Allah. Water charges 500 for year 1 and 2, there increases by 20%. Security expenses 750 per year up to 4 years, 800 per year 5. You have to add all those things. That's it. Nothing more than that. You can observe 25 plus 10 plus 10 plus 10 plus 10. Water charges 500 500. After that it increases 10%. 500 plus 10%. 10 or 20. Wait, yeah, 20% plus 20 plus 20 plus 20. Security expenditure first 4 years 750. Last year 800 total. That's it. We have to add all O&M expenses. That's it. Okay. Yeah, copy it. Question number 5. కొత్తదే కదా, సెకండ్ హ్యాండ్, కొత్త బుక్ కాదు అది. My dear Viswaroop, is it done? Yeah. Sir, do you understood the last question, sir? So we have to take all OM and M expenditure, O and M expenditure. They will tell you all the details. Just add and give that addition only, nothing more than that. Even no need to apply rate also. Chandrakant completed. Yeah. Yeah. So additional question number 1 is already completed in previous session. Nothing, that is nothing but calculation of depreciation. Question number 2 is not required. They are asking financial statements, not at all required. That's it. Our chapter is completed in all aspects. Okay. So electricity companies revision part. So separate act is there. What is that act? Electricity Act 2003. So every one of us consuming electricity. So generally there are two kind of services: prepaid and postpaid services. Prepaid means we have to pay first and then we can utilize services. Postpaid means firstly we can use service, then after service we have to pay the bill or amount. So electricity is always postpaid services. That means at first month, that means every month we can use services. At the end of month we will get the bill amount. So concepts, there are only 5 concepts. What are the 5 concepts? Security deposit, depreciation, cost of capital, return on equity, working capital. That's it, nothing more than that. Coming to deposit, think in examination point of view. Oh, nothing more than that. So there are only 3 formulas. One is receipt of deposit, second one is interest due, third one is adjustment of interest. What is entry for receipt of deposit? Bank account debit to security deposit account. Second one, interest due entry, interest account debit to interest accrued on security deposit. Third entry, adjustment of interest, interest accrued on deposit account debit to sales turnover. Concept number 2, depreciation. In examination point of view, only these rates are enough. So nothing more than that. They may ask weighted average rate of depreciation. This is the formula. Coming to rates, we have 6 rates. Out of 6, 3 rates are 3 or 4. 4 rates are individual rates. Like 0% is only for land, 100% is only for wooden structure, 15% is only for equipment. Remaining 3 rates are there. One is 9.50, 6.33, 3.34. 9.50 is for 3 assets: machinery on lease, portable air conditioner, self-propelled vehicles. 6.33% is for motor on lease, communication equipment, furniture and fixtures. 3.34 is for lease land plus buildings and civil engineering works. For other assets 5.28. So formula for weighted average rate of depreciation equals to
total depreciation by total cost. You should ignore land. Apart from that, two more concepts are there. I think cost of capital, return on equity, and working capital. Concept number 3, cost of capital. Here nothing is there to solve the problem. So we have to maintain 70:30. 70 should be the debt, 30 should be equity, and we discussed the reason why debt is more when compared to equity. Why we should maintain more debt? What is the wrong if we maintain more equity? If we maintain more equity, obviously shareholders will expect more dividend. To give more dividend, we should earn more profit. To earn more profit, we should increase our sales, nothing but increase our rate per unit. Then the common man will affect. That is the reason. And concept number 4 is return on equity. Generally, in our financial management subject, we have formulas for return on equity, but here no formulas, nothing. We have to just apply the format. What is the format? Gross opening equity less any adjustments in opening equity, any adjustments during the year, you will get net opening equity plus increase in additions or increase in equity due to additions or capital expenditure, we can say, less decreases due to reversal, less decreases due to decapitalization, and you will get net closing equity. Opening plus closing by 2 average, you should apply rate, you will get total return on equity. So here the problem is you have to remember the entire format. Sometimes they will give you directly, otherwise for example, sometimes what happen, they will not give you gross opening equity, they will give you total capital cost. In such a case, what should we do? We have to apply 30% on capital. We have one problem. In that problem, total capital is 15 lakh. We have to apply 30% on it. Then 4.5 lakh will be the gross opening equity. One more point is that is with respect to increase in equity due to additions. They will not give directly, sometimes they will give you capital expenditure. Again, you have to apply 30% on it. First year closing will be the second year opening. Second year closing will be the third year opening. Last concept, working capital. Normally, calculation working capital is we have to apply formula CA minus CL, nothing but current assets minus current liabilities. But here, we should not apply that particular formula. We have to apply pro forma, nothing pro forma. Actually, we have to take all expenditure and add it, apply the rate given in the question. That's it. Very easy. This all are concept. And coming to problematic part, problem number 1 is there. In this problem, what happened? We received some deposit and interest rates are given 8% for first year, 9% for second year. Interest is adjusted in the immediate next quarter. Journalize transactions. First entry is for receipts. When we received on 1/10/21. Second entry is for interest due. What is interest due entry? Interest account debit to interest accrued on. But here we should apply which percentage? 8 or 9%? 8. But how many months? 10, 11, 12, 1 to 6 months only. That means 2 lakh into 8% into 6 by 12. Third entry, interest adjustment entry. What is interest adjustment entry? Interest adjustment account debit, interest account debit to interest accrued on deposit account debit to sales turnover. That's it about question number 1. Question number 2, just now we discussed return on equity question. We should apply the format. But here there are only 2 items, 3,500. That's it. If you forgot the format, just use your common sense. Opening equity there, increasing means add it. Nothing more than that. Total 3,500. That will be the previous year, next year opening. Again 500, 4,000 next year opening. Again 500, 4,500 next year opening. Same concept. Apply the rate in the question and average it. Very easy. Question number 3 is also related to the concept number 3. 3 or 4. 4, return on equity. Here what happened? They have not given gross opening equity directly. Instead they have given total capital cost. What we should do? We have to apply 30% on it. What is the total capital? 15 lakh into 30% means 4 lakh 50,000. They have not given increase in equity. They have given indirectly capital expenditure. Apply into 30%. You will get that amount. Here also only 2 items, nothing more than that. You have to average it, apply the rate. That's it.
Coming to question number 4, this is the recent examination question. This is on interest on working capital. So what we should do, we have to take all figures and add it and apply the interest rate in the question. And the last one is very easy question. We have to add all the things like O&M. And coming to depreciation rates, we already covered this problem. That's it. So chapter is completed, no? To get more confidence, let's open last 5 question papers. So examination question paper portal. First is June 25. Paper number 10. Paper number 10. No question is here. I think that is previous paper. Banking and insurance is there. Okay, fine. December 24. Again paper 10. In December 24, I think question is there from electricity companies. No, this time also banking and insurance. June 24, paper number 10. Banking. No, question is there. No, మనం చూసాం కదా. December 23, paper number 10. I think this is the paper. Yeah. Exam question paper, same question. No? What is they are asking? Interest on working capital. That means out of 5 papers, they have asked only once. That means you have to understood one point very clearly. Out of 3 chapters, they are testing repeatedly banking and insurance. Sometimes they are testing electricity. But don't take that priority. For us, all 3 are important. For your attempt, they may ask this chapter. Fine. This is how your exam will be. No MCQ from this area. Yeah, that's it. So that is all about your insurance companies. Electricity companies. Very, very easy chapter. Same as banking companies. Now let me revise entire electricity chapter once. Listen carefully. So if you prepare or else think in examination point of view, this chapter is the most highly important chapter or highly weighted chapter. Already I told you so many times, even from my first class onwards. This will be your weightage even for your December and June examinations. The first is banking, electricity, insurance, from where they will ask 16 marks, 2 7s plus 1 2s. Already we covered first 2 chapters. I am going to revise electricity. If you are lucky, total 16 may comes from these 2 chapters only. So come back to electricity companies revision portion. So generally in our group 1 there is a subject called company law. In company law you may aware of what is incorporation of company, what are the types of companies, all those things. Generally every company should follow Companies Act 2013, but there are 3 separate companies are there. They are like banking companies, electricity companies, insurance companies. For them, even the Companies Act is there, they have to follow their separate acts. For electricity companies, they have a separate act called Electricity Act 2003. So for them, this act is important. Then secondary is Companies Act 2013. And coming to electricity, I think everybody of us using electricity. We are using means someone has to provide electricity. But in our state, majorly AP government and Telangana government. Yeah, started. Come on, attack. Fine. So we have completed successfully the first 2 chapters, accounting for banking companies, accounting for electricity companies. So it's time to start one more new chapter, accounting for insurance companies. So if you ask me what is the weightage of this insurance companies chapter, I can't tell, because in aggregate that means banking plus electricity plus insurance together they are asking 16 marks. Sir, what about my attempt, sir? If your attempt is December 25 or June 26, same weightage will be there. 2 sevens plus 1 2. Though they will ask 2 questions from 1 minute. Yeah. So definitely if you observe past 6 attempts question paper, they are testing 1 question from insurance companies for sure. Remaining 1 may be banking or electricity. So this time I can't give assurance. Again question comes from this chapter. They may test question from 1 from banking, 1 from electricity. So I can't tell individual chapter wise, but in an aggregate the weightage will be the same weightage. Okay. Yeah. Come on. So let me start accounting for insurance companies, and open your beautiful notebooks and give a heading, accounting for insurance companies. Maggie, what happened? Where is Kirti, by the way? Yeah. Still some people are absent, huh? Boys? Yeah, everybody is here. What about girls? Strength again the roja? Okay. Sudha, Kasturi. Oh, fine. Yeah. So this chapter has a little bit basics in your group 1 chapter called accounting for, chapter called insurance claims. I think you are aware of that chapter. It consists of 2 concepts. One is loss of stock. Second one is loss of profit. So there maybe your faculty had discussed what is loss of stock, what is loss of profit, how to find out all those things. We have to apply average class, under insurance, over insurance, full insurance, everything is covered there, no? Yeah. Just let me recollect the entire concepts in insurance claims as well as insurance companies.
Just let me discuss at least 2 minutes about the basics. First of all, let me ask a question, just hypothetical question, don't feel. For example, you are writing your attempt in December, right? Yeah. For example, you cleared your group 1 or group 2 or both groups in coming December attempts, example sake. And after that, definitely you will join in articleship. Definitely I have to feel sad about your auditor. That is okay still. So after that, you will write your final examination. If surprisingly, if you qualify your CMA final as well, definitely you will get a job. Imagine surprisingly you got a job in a big 4 companies. Shockingly, your package is around 15 LPA. That means you are getting 15 lakhs per annum. Tell me, definitely you will get some 1 lakh plus amount for first month. Tell me, what would you do with that first month salary? You have to firstly clear your debts, whatever it is. After that, definitely, already I told this concept in your group 1 accounting. You have to take an insurance policy. That is very, very important. Definitely in present situation. Why? Because if you are unmarried like me, then will be no problem at all. But if you are married, what happened? Why are you laughing? If you are married, definitely there will be some dependents will be there. Your wives or children or vice versa. So they have to live their remaining life without any kind of support. So definitely they'll need some kind of financial need. They need some amount for their health, their education and their survival. And already you are expired, no? Then they will not get their monthly expenditures. In such a case, that is a risk for a person like you. What is the option? We can take an insurance policy. If anything happened to you, your nominees or family will get a huge amount. They can survive with that money. There we covered loss of stock, loss of profit, all those things. If you observe in your group 1 insurance claims chapter, we have to do accounting in the point of view of business entity or company. But here, we have to think not in business point of view, we have to think in insurance company point of view. Now we are LIC company, we are a life insurance company. Now you have to think not in the customer point of view, you have to think in business. Business means here insurance company point of view, not in customer point of view. In group 1, for example, ABC Limited is there, they insured their stock with LIC or else some SBI insurance company. There we did accounting for ABC Limited, not for LIC or SBI. Here our discussion is not about ABC, our discussion is about LIC or SBI insurance or Star Health insurance, whatever it is. So here our main accounting or agenda, or we have to think in the point of view of insurance company. That is the reason our chapter name itself says accounting for insurance companies. First of all, you tell me how this total insurance concept will be. For example, LIC company is there, it is an insurance company. So for example, Varma is a individual. So I have an insurance policy with LIC. LIC, the term of that policy is 21 years. Every year I have to pay 1 lakh rupees up to 21 years. If nothing is happened to me up to 21 years, total paid amount is 1 lakh into 21 lakhs, but I will get 40 lakhs. If anything happened to me in between this 21 years, definitely I can't pay this 21 lakh, but whenever I expired, my family members will get 40 lakh rupees cash. That means here my responsibility is every year I have to pay 1 lakh rupees to the insurance company or to the LIC. For example, I paid for the first year, second year, third year, but I am unable to pay from the fourth year onwards, then that policy will be expired. So definitely the person who has taken insurance policy, he has to pay every year that 1 lakh rupees. Whatever the amount paid by the person to the insurance company is called premium. Premium means the person who has taken policy has to pay amount to the insurance company. By the way, person who has taken policy is called insured. So the entity or a company who has given policy is called insurer. LIC is called insurer. Varma is called insured. This 1 lakh is I have to pay every year to insurer. That means insured has to pay every year some amount to insurer. That is compulsory or obligatory thing. If you fail to pay that amount, your policy will be expired. Whatever the amount you are paying is called premium. What is this? Premium, or you can call it as a insurance premium. If anything happened to you or your expired, your family members will get this 40 lakh. This 40 lakh is called claim. Okay, now this all is the fundamentals already we discussed in our group 1. If you not aware of that insurance claims, ignore. That is not relevant here. So before that, already I told you. So our mode of teaching will be in 2 dimensions. One is clarity about concept. Second one is exam oriented. So in this chapter we are going to discuss 8 topics. Topic number 1, basic concept. Topic number 2, about bonus. Topic number 3 is about life assurance fund. Topic number 4 is reinsurance. Topic number 5 is unexpired risk reserve. 6 is something is missing. Valuation of net profit and section 28 and financial statements. These 8 are the topics we are going to learn in this chapter. So let me enter into first concept, basic concept. So some terms are there, just let me explain. Already you are aware of those words, obviously. Yeah. First word, insurance policy. Insurance policy is a contract between insurer and insured. Just now we discussed the meanings of insurer and insured. Insurer means insurance company. That might be LIC or Star Health or SBA or whatever it is who are giving insurance policies. Simply for our convenience, LIC will become called as a insurer. Insured means the person who has taken policy. In my example, Varma is insured, LIC is insurer. That's what I have given the second point. Insurer means a person or entity who is taking that risk. What is that risk? If anything happened to me, LIC has to give 40 lakhs to me. That is risk only, obviously. Generally, insurer means insurance company. So LIC is called as a insurer. Insurer means the person or entity who is giving policies. Second one is insured. Insured means the person who insures his risk, nothing but who is taking policy. So Varma is called as insured, LIC is called insurer. Our contract between me and LIC is called insurance policy, where I will sign on each and every page. What is that contract? I have to pay every year 1 lakh to LIC. If anything happens to me, my family members will get 40 lakhs. If nothing happened to me, I will get 40 lakhs at the end of 21. This is the contract between Varma and LIC. That contract is called insurance policy. So LIC is called insurer, Varma is called insured. Try to differentiate between insurer and insured. Insurer means insurance company. Insured means person who is taking the policy. Types of policies. There are 2 types of policies: life insurance, general insurance. You know, so I have taken LIC, life insurance policy. So for example, my car is there. Even for my car, I can take an insurance policy. That insurance is called general insurance. Both are different. General insurance is not a life insurance. Different types are there. I'm expecting MCQ from here. Which of the following is not a general insurance? They can ask a question like that. There are 5 types of non-life insurances are there. First one, fire insurance. Second one, marine insurance. Third one, medical insurance. Fourth one, motor vehicle insurance. Fifth one, others. Fire insurance will be there related to fire accidents, especially it will be related to crackers, such kind of things, and chemicals as well. Marine insurance is related to ships, all those kind of things, cargoes. Third one, medical insurance like a health insurance, and motor vehicle, it is a vehicle insurance. Remaining all comes under others category. They can ask MCQ from this area. So in insurance companies, I am telling the first MCQ area is types of general insurance. Already I told you in paper number 10, wherever I am stressing this is MCQ area, please note all those points. Definitely out of all those areas, you can easily identify 7 to 8 same questions in your main examination paper. Please try to highlight whenever I am saying this is important area for MCQ. So simply we can categorize insurance into two types: life insurance, general insurance. Again, there are 5 categories under general insurance. What are those? Fire, marine, medical, motor vehicle, others. Next word is premium. Already we covered this in our basic discussion. Premium means amount should be paid or payable by the insurer to insured. Insurer means the person who has taken policy. Insured means insurance company. Amount paid by the insured to insurer. Every year insured has to pay premium to insurer. If you unable to pay, or if you fail to pay your premium, your policy will get expired. You will not get such claim if anything happened to you, or if nothing happened to you, if the term is matured. If you want to get your claim, definitely you should pay premium on time or on due date. Claim, just now we covered this as well. Claim, it is amount paid or payable by the insurance company to insured person, or we can say amount paid or payable by the insurer to insured. When he will get claim? If it is a life insurance, when death or maturity. Death means when he expired, his family members will get that money. Maturity means not mental maturity. Maturity means term is completed. If nothing is happened to him, then he will get that same amount. If it is general insurance, when loss arises, like insurance claims, loss of stock or loss of profit. In loss of stock, when you will get a claim? When it is a fire accident, otherwise you will not get. Same as well. Here maturity concept will not applicable. For example, we have taken loss of stock policy for 2 years. If there is no accident for 2 years, you will not get any claim. You will get claim only when there is a loss. But for life insurance, you will get claim in case of your death or your maturity. Of course, you will not get amount if you expired. Instead, family members will get the same thing. So next one, commission. This person looks like Dilip. Commission. So commission is a amount payable by the insurance company to insurance agent. So for getting such business, so that's why you can observe in our regular life, persons will approach, just they'll solicit insurance company. They want you to take insurance policy because they are not doing any social service like me. They are just doing business, nothing more than that. So let's write the entire thing. By the way, any people in online? One person is on. May I know what is your name? The person who are watching me in online. You can text me through your chat box. Yeah, remaining people, please give a heading. Concepts. Lasha Priya. Are you from? So totally we have 8 concepts. First one, basic concepts, bonus, life assurance fund statement, valuation of net profit, reinsurance, unexpired risk reserve. Section number 28, financial statements. Okay. Please try to complete banking and electricity companies as soon as possible. If you have any doubts in those chapters, feel free to ask me. I'm always available for doubts and open for doubts, first of all. Samira, are you sleeping? Okay. Jyoti, are you ready to sleep? Yeah, come on. You can. Yeah, concept number 1, basics. Or you can write basic concepts. There just to be discussed terminology, nothing more than that. Sriharika, are you writing? In casting book? Huh? No. Law, fine. Some people are in a wrong notion. This is accounting subject. No, this is not a financial accounting, corporate accounting, by the way. Better at least write that name of LIC beside the concept. Yeah, actually I could insert my image. Samira, what happened? Soumya? Yeah. Can I scroll? Types of policies. Two types. Male, female. No? What are those? Life insurance, general insurance, or we can call them as a non-life insurance. But in CBI offices, what is going on? Nothing. Great color combination, right? Yeah. Let me test your involvement in the class. Yeah. Especially this question is for the students who have attended for my second class. Yeah. My question is accounting for banking companies. I told the first MCQ from there, classification of banks. Tell me what are the main classifications? That's I know. Now I'll ask randomly. CBI officer stand up. Tell me what is the subcategory in scheduled banks? Commercial and cooperative. Again under commercial. Please be seated. CBI officer number 2, stand up. Please be seated. Kavya ji, stand up. Bolo. You need question once again. Huh? What are the classifications under commercial banks? There are 5 categories. What are those? Chappu. Gitanjali is scrolling. Miss Hari, sorry, Mr. Hari. Public sector banks, private sector banks, foreign banks. అది ఇప్పుడు చూడలేదు చూడు ఉంది కదా అక్కడే రూలర్ రూలర్ మీన్స్ ఐ ఆమ్ ద రూలరా చప్పు రీజనల్ రూరల్ బ్యాంక్సా ప్లీజ్ బి సీటెడ్ done. Yeah, give that MCQ as well. Give that MCQ within the bracket. Next one, premium. Can I? Are you at least writing that picture in shorts form? I think Gitanjali is not writing. I knew that. One insured will get claim in case of life insurance, death or maturity, in case of general insurance when loss arises. Chittidalli, what happened? You are drawing my picture, if I am not wrong. Agent looks cute. Not yet done. Okay. So last terminology is there, surrender of policy. Already same thing we covered in our group one, but still anyway. Surrender of policy means the person who has taken policy, he is unable to pay the premium amount. Just he want to close that policy. Then he'll approach insurance company, my dear company, please close our policy, give me whatever you can. That is called surrender of policy. That's it, nothing more than that. Closing of policy before expiry of term. In my example, my term is 21 years. If I close after 5 years, that is called surrender of policy. If you remember, same thing we covered somewhere in group 1 apart from insurance claims. Tell me. Excellent. In partnership JLP, joint life policy, there we discussed surrender of policy concept. Superb. Okay. So, what's the chapter name? Accounting for insurance. How many concepts we have? What is concept number 1? Number 2? Number 3? Life assurance fund statement. Number 4? 90% question will comes from this area. 90%. Concept number 5, reinsurance. Concept number 6, unexpired risk reserve. 5% chances for this concept. Concept number 7, section 28. This is relevant to this concept. They will ask question from this and this. Last concept, I am not expecting 0% chances. Basic concepts also 0%. Okay, fine. So we are discussing now concept number 1, basic concepts. That means just I want to introduce the terminology in this chapter. Some of you already aware of these terms in your group 1 accounting called insurance claims. So what is the first term we discussed? Insurance policy. What is the meaning of insurance policy? It is a contract between insurer and insured. What is the meaning of insurer and what is the meaning of insured? Insurer means who is giving a policy. Generally, who is that? Insurance company. Third one, insured. Insured means the person who is taking, generally person who is taking policy. Number 4, types of policies, MCQ area. Generally, there are two types of policies, life insurance policies and general, you carry on, you are writing some Ramakoti or like, yeah, life insurance and general insurance. Again, general insurance, there are 5 categories. What are those 5 categories? Fire, marine, medical, motor vehicle, other insurance. For example, examiner may frame a MCQ from this area like which of the following is not a general insurance? Option A, fire insurance. Option B, marine insurance. Option C, life insurance. Option D, health insurance. Life insurance is not a general insurance. But generally, in our examination hall, our mind will says, option A, fire insurance, we knew that word. Option B, marine also we knew. Life also form part of our syllabus. Health is not yet covered in our syllabus, so health is correct. But medical is nothing but health insurance only. Okay, no? But generally in our examination, we will be more confident on that answer. So next one, premium. Premium is amount paid by the or payable by the insured to insurer. That means a person to insurance company. It is obligatory thing. Next one, claim. Claim is an amount paid or payable by the company to insurer. Generally, claim amount is a big amount when compared to premium amount. Premium is very small because we paid regularly, recurring expenditure. Claim is occasional income. So, in case of life insurance, we will get the claim if you are died or else that policy term is matured. If it is a general insurance, that means if you have taken fire insurance policy or marine or medical or motor vehicle, then you will get the claim whenever the loss arises. Next one, commission. Generally, LIC company is there. Directly LIC company cannot approach all the people throughout the India. They will appoint some agents. Agents are not employees, by the way. So they will get commission if they are taken any kind of policies. So for getting business, insurance companies will appoint agents. They will get commission. Commission is the amount payable by the insurance companies to insurance agent. Surrender of policy is the last basic term. Surrender of policy means closing of policy before expiry of term. Out of these items, 3 terms are very, very important. Can you guess? Can you guess? Premium, claim, commission. Why? Because these are financial things. Insurer, that is a name. Insured is a name. Surrender of policy is a situation. Remaining 3 are important things. Premium, claim, commission. Now tell me, does premium is, think in insurance company point of view, is it income or expenditure or asset or liability or profit or loss? Premium. Premium is liability. Are you kidding? Yes. How far? How? What is the? I mean, how can you say that is liability? Future, no? In future. Sometimes it is not possible. No? For example, fire insurance, no need to repay if nothing is happened. That is income only. Okay, na? Premium is income only. Claim is liability. They have to repay, not premium. They have to repay claim, no? Premium is income only. Claim is liability. They have to pay in future. For example, think in BCCA college point of view. Fee is income or liability? Income only. We have to give service, that is our liability. Both are different. Without income, I can't take liability. Premium is my income. Claim is my liability. Commission is expenditure. Are you getting my point? If you are paying claim, that is expenditure, not yet paid liability. Liabilities are not. What is the liability meaning? Unpaid expenditures only. That's it, no? So we can call claim as expenditure as well as liability. For example, salary paid, expenditure. Salary payable, liability. You can't say salary as a liability. If it is paid, expenditure, payable, liability. Here also same. Claim is expenditure, claim payable is liability. Premium is always income only. You can't take it as a liability. Next one, commission is anyway expenditure. We are paying to our agent. Okay, no? Super. So, with this, our concept number 1 is successfully completed. What is concept number 2? Bonus. You tell me, whenever you are listening this word called bonus, definitely you may recollect two things. One is employer is giving bonus to employees, or else sometimes company may give bonus to shareholders. But for the first time in the history or else in industry, normally bonus means employer will give to employee. That's what you learn in your costing, in your taxation as well. That's what, no, in income from salary they will concept plus bonus or something. But here insurance company is not giving bonus to their employees, and sometimes companies will give bonus to their shareholders. But here insurance company is not giving bonus to their shareholders also. For the first time, what you call, unlike other companies, insurance company is giving bonus to their policy holders, not to shareholders. Generally, companies will give bonus to their shareholders because that is their money. But in this case, insurance company is not giving bonus to their shareholders. They are giving bonus to their policy holders. Policy holders means the insured persons, just like who has taken insurance policy. This is the speciality of this chapter. Why? Because separate act is there for insurance companies. No need to comply all the provisions of Companies Act. Generally, bonus is in between employer and employee, sometimes company and shareholder. But this is the special scenario where insurance company is giving a bonus not to policy holder, they are giving bonus to shareholders. If you remember concept number 6 or 7, section number 28 is there, no? There I will again discuss. Anyway, let me discuss that section as well. Section number 28 of LIC Act says you should give 95% of your profit to policy holders only. Give only 5% to your shareholders. That's what section number 28 says. The motive of that section is very clear. Insurance companies will survive only because of policy holders, not because of shareholders. That is the reason section number 28 says, out of your available profits, give 95% to policy holders, rest 5% to shareholders. So here also my concept is in between insurance company and policy holder, not between company and shareholders. In this chapter, shareholders plays very minimal role, in fact nothing. Here policy holders will play a very crucial role. So in fact, you can look at the screen. Generally bonus is payable by company to employees or shareholders, but in here bonus is payable by insurance company to policy holder, not to the shareholders. Remember, whenever I am discussing a bonus in insurance companies chapter, please don't think about shareholders. We have to focus on policy holders. Both are different. Shareholders means the person who has taken our share. Policy holder means who has taken our insurance policy. So Insurance Companies Act says for insurance companies, shareholders are not important. For us, policy holders are important. Okay. For example, take BCCA college. For BCCA, students are important rather than partners or shareholders. If you take some other business, for them customers are not important. Shareholders are important, because their customers, they are repetitive customers, or customer size is very huge. So that's what bonus concept is. Again, second important area for MCQ, there are 5 types of bonuses are there: simple reversionary bonus, compound reversionary bonus, interim bonus, cash bonus, terminal bonus. They can test an MCQ. This is the second area where I am discussing important for MCQ. First area, what is the first area for MCQ? Sorry? Types of insurance, that too types of general insurance. What are those? Fire, marine, medical, motor vehicle, other insurance. Here is the second area. Types of bonus, 5 types: simple, compound, interim, cash, terminal. Working capital is completed. Capital budgeting, working capital. NPV is not yet started. There you will learn about terminal. But still, anyway, no problem. Come on. So what is the first type of bonus? Simple. First of all, what is this concept? Types of bonus. Tell me, in insurance company, bonus is in between insurance company and policy holder, not in between insurance company and employees or shareholders. There are totally 5 types of bonus. What are those? Simple reversionary, compound reversionary, interim, cash, terminal bonus. Let me discuss one by one what is the meaning, then I will give you time for writing. The first one is simple reversionary bonus. For example, I have taken a policy of 10 lakh rupees. What does it mean? If anything happened to me, my family members will get 10 lakh rupees. That 10 lakh is called policy value. Some other name is there for this 10 lakh. We can call it as a policy value, or else sum assured. Sum assured is nothing but policy value only. Whenever they are giving policy, they will tell you, we will give you 2% bonus every year. That means you will get 10 lakh into 2% every year. What is the amount 10 lakh into 2%? 20,000. In first year you will get 20, second year 20, third year 20. You can observe here. Percentage of sum assured. That means, for example, 1%. 1% into 10 lakh. They will not give the 10,000 to you. They will add the 10,000 to your policy value. For example, I have taken 10 lakh rupees policy. They promised me 1% bonus every year. In first year, so my policy value will increase to 11 lakh. In second year, 12 lakh. In third year, sorry, 10,000 only, no? 10 lakh plus 10,000, 10 lakh, what happened? Yeah, 10,000, 10 lakh 20,000, 10 lakh 30,000. This how we have to add that amount to their policy. That means, for example, 4 years completed. What is my policy value? 10 lakh 40. But original value is 10 lakh only. If anything happens to me, my family will get not 10 lakh, they will get 10 lakh 40,000. That bonus is called simple reversionary bonus. In this kind of bonus, they will not give every year payment. They will add that amount to your policy value. Every year you will get 10,000, 10,000, 10,000. It is a simple calculation. 10 lakh into 1%. What are the percentage given in the question? Okay, no? Second one, take same example. So my policy value is 10 lakh. So what is the bonus rate? 10%. No? First year how much I will get? 10,000. For second year, my bonus would be 10 lakh plus 10,000 into 10%. Just like your WDV calculation. Interest on interest, bonus on bonus, compoundary thing. That means 10 lakh 10,000 into 10%. Sorry, 1%. 10 lakh into 1%, 10,000 only, no? 10 lakh 10,000 into 1%. 10,000. In third year, what happened? 10 lakh plus 10,000 plus 10,100 into 10%. That means we have to calculate bonus on bonus. That is called compoundary. Nothing but just like compound interest. Interest on interest. Same scenario. In first year, I will get every year same bonus. 10k, 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 10k. In second method, what is happening? In second year, my bonus would be 10 lakh plus 10,000 into 10%. That means 10,000. In third year, what happened? 10 lakh plus 10,000 plus 10,100 into 1%. Are you getting my point? That is why it's called as a compound. Interest on interest. Same way, bonus on bonus. Simple means there is no more calculation. Every year same. Just like SLM. This is similar to WDV. Okay, no? Copy. Karunakar. Sudhakar, what about remaining 2 chapters? Choice. Okay. So simple reversionary means we have to apply percentage on our policy value, nothing but sum assured. So in this method or in this kind of bonus, every year bonus amount is same. Second type of bonus, compound reversionary bonus, where bonus will be changes year by year. For example, policy value is 10 lakh, bonus rate is 10%. So first year 10 lakh into 10%, 1 lakh. Second year here their bonus is not 1 lakh. It is 10 lakh plus 1 lakh into 10%. That means 1 lakh 10,000. In third year 10 lakh plus 1 lakh plus 1 lakh 10,000 into 10%. Like that you have to calculate. Have you ever had interim dividend in your company law? What is interim dividend means? Correct. So interim dividend means dividend paid in between year. No, here also same. Interim bonus means we are giving bonus in between year. Generally, bonus will give at once in a year, that too at the end of year. If they give any bonus in between year, in middle of the year, that is called interim, means in between, middle. That is called interim bonus. Bonus declared during between the year. Interim means in between. Generally, final dividend, final bonus is there, that is once in a year. Interim means in addition to that bonus, if they give any bonus in between year, in middle of the year, that is called interim bonus. Generally, companies will give one term bonus, that is called final bonus. If they give any additional bonus at the time of any kind of festivals or more profits, that is called interim bonus. Interim means in between the year or middle of the year. That is number 3, third type of interim bonus. What is the fourth category? Yeah, name itself says in this first 3 category, they will not give you bonus in cash. They will add that bonus to your policy value. If they give you in cash, that is called cash bonus. Company will declare bonus, policy holders will receive that bonus in cash. Last one, terminal bonus. Terminal bonus means this is for whole policy, that will be the once in a lifetime. For example, my policy is 21 years life policy. The contracts in agreement, there is a clause that says at the end of 21 years we will give 2% bonus. That is lifetime bonus. That means that is only once in a lifetime. Terminal means at the end. So terminal bonus is one-time bonus. Policyholders will receive bonus once in a lifetime. At the end of policy you will get. That is called terminal bonus. That's it. Done? Yeah. So basic concepts we have done, and bonus is almost done. Yeah. Don't write, listen. Accounting treatment for bonus. If it is payable in cash, nothing but if it is a cash bonus, entry is a P due entry and payment entry. Due entry, use common sense. From where we can give bonus? From our profits only, nothing but our P&L account only. P&L account debit to bonus payable account. At the time of payment, bonus payable account debit to cash account. Sometimes they will not give bonus in cash, they will add to that sum assured, no. So actually whenever they are not paying bonus in cash, they will add that amount to particular fund. That fund name is life assurance fund. So entry would be P&L account debit to life assurance fund account. If they pay, they will write P&L account debit to cash, otherwise they will credit it to fund from where they will pay in future. Okay na sir? So that means journal entry is depend upon which type of bonus it is. If it is cash bonus, we have to write two entries. One is due, second one is payment. What is due entry? P&L account debit to bonus payable account. If you are paying, what is the entry? Bonus payable account debit to cash or bank account. Sir, no, sir, this is not a cash bonus. We have to add it to a fund called Life Assurance Fund. What is the entry? P&L account debit to fund account. If you set off first two entries, you will get single entry called P&L to cash. Here, P&L to fund. That's it, nothing more than that. That means accounting treatment of bonus is depend upon types of bonus, which type of bonus it is. If it is cash bonus, entries would be P&L to bonus payable to cash. If it is a non-cash bonus, we have to transfer it to fund, P&L account debit to fund account. What is this fund? We are going to learn in further concepts. I think next concept only. Okay, na sir. Please copy this accounting treatment in your notebook with your beautiful hands. Done. CBI. Come on to concept number 3. Don't write, listen. I will give you time for it. Don't focus on writing. Listen. Concept number 3, life assurance fund statement. So, generally, I'm discussing right now about life insurance companies. Already we know there are two types of insurance, life and general insurance. Now, concept number 3 is only about life insurance. So every life insurance company has to create one fund called life assurance fund. So the balance in fund equals to very easy, all revenue receipts minus all revenue expenditure. I think you know what is the meaning of capital in nature, revenue in nature, or we can call what is the meaning of capital income, revenue income, capital expenditure, revenue expenditure. Can you differentiate capital expenditure and revenue expenditure? Capital expenditure means expenditure which is relevant or related to fixed asset, either purchase of asset or construction of asset or extension or acquisition of asset. Simply we can call it as if that related to asset, that is called as a capital, otherwise that is a revenue expenditure. Similar to receipts also. So revenue receipts means which are major normal course of business or main course of business. Here also all revenue receipts minus revenue expenditure. Revenue receipts means that is our major source of income, recurring income. Revenue expenditure means regular expenditure, revenue expenditure. So why we will use this fund? For example, already I covered this point after basic concepts. See, there are three terms are important in this chapter. One is premium, second one is claim, third one is compensation. So definitely commission. So some income or expenditure are there. That means majorly what is the income of insurance companies? Premium is income. What are the expenditures? One is claim, second one is commission. So they will take all premiums minus all incomes and expenditure. They may get some more income by investments or interest, whatever it is. So whatever the balance in that company, that balance is called fund account. What is the purpose of this fund? They will use this fund to meet their future liabilities. That may be future claim or future expenditure or whatever it is. Okay, so that's what they are mentioning here as well. Use it to meet liability. What is my liability again? Claims or future claims, whatever it is. So simply we can say life assurance fund equals to revenue receipts minus revenue expenditure. Revenue receipts are nothing but their major source of income. 95% of their revenue receipts are from premiums only. Remaining 5% are from either maybe out of their investments, like interest on investments or dividend on investments, whatever it is. But major source is from premiums. So they will ask you question like they want to prepare this statement, that is called statement showing life assurance fund. Fund means it is receipts minus expenditure. So opening balance and you will get closing balance. So definitely for opening balance, for example, last year closing time I have 10 lakh rupees in my fund. That will be the current year opening. But again I received some 5 lakh rupees premiums or income plus 5 lakh. Now it is reached to 15 lakh minus some expenditure 3 lakhs minus 3 lakh. How much? 12 lakhs. Apart from this, one unique point is there, that is bonus utilized in reduction of premium. We have to reduce it. I will tell you logic as well. First of all, I want to just try to explain the term. What is that? Bonus utilized in reduction of premium. For this point, I have to recollect accounting for electricity companies. Some three entries are there in a concept called security deposit. So if you remember, what is entry at the time of receipt of security deposit? Bank account debit to security. There we had a discussion that deposit is liability in the company point of view. So we have to pay interest on that liability, and we have recorded an entry for interest due. What is entry? Interest account debit to interest accrued on security. That means electricity company has to pay interest to all customers, but in practical life that is not possible to touch each and every door and to pay interest. Instead of, they will do adjustment in the next bill. That is quite easy instead of paying interest to each and every customer. So here also same, generally bonus is payable by insurance company to policy holder. Instead of giving to each and every policy holder, they will reduce in next year premium. For example, I am insurance company, she is my policy holder, so her premium is 1 lakh per annum. 1 lakh, 1 lakh, 1 lakh, 1 lakh. So this is the third year. So I calculated her bonus is some 20,000 rupees. Instead of giving the 20,000 to Kirti, so I told her, Madam, your next year premium is 1 lakh, no? Don't pay 1 lakh, give me only 80,000. Here also, same benefit she got it. So that is called bonus utilized in reduction of premium. That means I am reducing premium by adjusting bonus. If you have done any such kind of thing, you have to reduce that from that fund. Then you will get a closing balance. This is the statement, just remember it, nothing more than that. They will give you everything. Just substitute it, you will get the answer. Tell me, what is this format? First of all, this format is for statement showing life assurance fund. What is the format? Opening balance plus all incomes less all expenses minus bonus utilized in reduction of premium. Some people ask me, why you reduced this? I didn't get the logic. I'll tell the logic. So incomes means premium and other incomes. Here you recorded as income, but you reduced premium, no? You used that it, no? So you have to reduce it. That is not form part of your fund anymore. For example, 10 lakh is my opening figure. For example, imagine only Kirti is the only one and only my customer. You know, we follow accrual basis. Accrual basis means irrespective of actual receipts and payment, we have to record when they accrue. Whenever year is completed, I will record 2 lakh. But I have not received income from Kirti. But I will record as a 2 lakh. Or else total 10 lakh. No? How much? What is your premium? 1 lakh only. No? 1 lakh. But she paid only 80,000 to me. Why? I adjusted the bonus. So but you recorded how much? 1 lakh. You have to reduce that 20,000. Same logic here as well. Are you getting my point? If you write only received amount, no need to write because we are following accrual basis. If we follow cash basis, no need to write it. But fortunately and unfortunately, all of us following accrual basis only. That is the reason we have to eliminate it again. So what is the format? Opening balance plus income minus expenditure minus bonus utilized reduction of premium. You will get a closing balance. That's it. Copy and we'll move on to problematic part, at least 1 or 2 problems. Give me material, Kirti. Corporate accounting. Completed. Spandana. Yeah. Gayatri. Yeah. Shall we start problems? Yeah. Then let's discuss one more concept. Yeah. Listen carefully. So, by using your accounting brain in our foundation or else in your MAT, CAT and CM Inter Group 1, generally procedure for preparation of financial statement is, firstly we will open trading account, we will get some amount of gross profit. For example, gross profit is 10 lakh. Then you will open P and L account, you will get net profit, for example 8 lakh. Out of this profit, you will use this profit to for certain things. For example, you will use this profit, you will transfer some amount to reserves, or you will pay dividend from it, or you will pay bonus from it. For example, 1 lakh, 1 lakh, 1 lakh, 3 lakhs is done. So whatever the balance is there, that balance will be added to capital. This is the normal procedure in our regular accounting format. That means if you want net profit, you should open P&L account only. There is no other option. But in insurance company, to finding net profit, I'm not going to use P&L account. Instead, I will use balance sheet. For the first time in accounting history, by using balance sheet, I am going to find out net profit. You know, in balance sheet, we have two sides, debit and credit. Am I correct? Liability side and asset side. So in asset side, there is one asset specifically. That asset name is life assurance fund. Already we covered this concept in concept number 3. What is life assurance fund? Opening plus incomes minus expenditure minus bonus utilized. Opposite side, first of all tell me what is the purpose of this fund. I given notes as well. To meet our liability. Opposite side I will write net liability. So one side asset, one side liability. For example, my fund balance is 10 lakh, my liability shows only, liability means it is my future liability. I took into present value by applying your time value of money concept. Imagine my present value of net liability is only 6 lakhs, but my fund is 10 lakh, but my liability is only 6 lakh, still 4 lakhs is there. This is my profit. Here we have to call profit as a surplus, similar to your NPO chapter. If vice versa, if my liability is 10 lakh, fund value is 6 lakh, this balance 4 lakh, we have to call it as a loss, but the terminology is deficit, similar to your NPO chapter. So this is my profit or loss. How to find out? Damn easy. And by the way, in your main exam, you will get the same question. They will just modify the numbers. So on asset side, we have to write fund amount. They will give this fund figure. On liability, we have to write net liability. They will give this figure also. No need to find out time value also. No need to find out present value by applying your time value of money. They will give you directly. You have to write asset on asset side, liability on liability side. If you get more assets, the balance will be the surplus. Otherwise, balance will be the deficit, profit or loss. That's it, done. For this, you will get 2 and 2, 2.5 marks. They will give each and everything. You have to just draw the format and subtract it from fund. You will get either surplus or a deficit. Okay, now. You can see here valuation of net profit. How to do it? We have to write fund on asset side, liability on liability side. If your credit, if your asset side is more, that is surplus as a balancing figure. If vice versa, if your liability is more, that is a deficit. Already you know, if you write in a formula way, net profit equals to fund minus liability, but we should not find out by using formula unless that is an MCQ. If it is MCQ, you should apply this formula, you will get the answer. But for examination, 7 marks question, you should draw the balance sheet. Otherwise, you will not get the marks, even if you found out the same thing in your calculator. You have to draw the format, nothing but balance sheet format. You have to write assets on asset side, liability on liability side. If your asset is more, the balancing figure is surplus. If your liability is more, balancing figure is a deficit. Okay, no? Yeah, copy. You should use this formula only for MCQ. You should not use the same thing for descriptive part. Why so? Answer will be the same. Marks will be reduced. Rest we'll discuss in the next session. Bye.